abortion before 15 weeks as a minimum nationwide standard. What is your minimum?
First of all, why put women through this? Why put men through this in a way that they're going to hate each other and demonize each other? We don't have 60 Senate votes. So where is the consensus? We have to figure out.
But the American people want to know from you, as a woman as well, where you would stand on this. A lot of candidates have come out and said they're either for 6 weeks, they're for 15 weeks. What is your number?
Well, first of all, I'm for whatever the states decide where they are, but I'm also going to tell you my job is I'm going to support or promote saving as many babies as possible and support as many moms as possible. Wherever those 60 Senate votes come down, we're going to do it. If you can't get 60 votes, you can't save babies. So it's going to require a lot of coming together and figuring out where people are, but we're not going to divide our country over this issue. We're going to bring our country together, and where we can get 60 votes, that's what we're going to do.
Can we have an honest conversation before we let you go, Ambassador, about Donald Trump? He chose not to attend the debate last night because of his commanding lead in the polls. It's difficult to discount the trajectory here. I know you don't think that he's going to be the nominee, but he's leading the field by anywhere between 20 and 40 points when you look at the poll. I remember the day you endorsed Marco Rubio in the 2016 campaign. You said, "I will not stop until we fight a man that chooses not to disavow the KKK," referring to Donald Trump. "That is not a part of our party. That is not who we are." With that said, your party seems to be in love with Donald Trump. What is your path to the nomination?
Well, look, I was proud to serve in Donald Trump's administration and push the foreign policy that we did that basically took the kick me sign off of our backs at the UN and had America respected again. And I support a lot of the policies that he supported. But I think that you have to look at the fact that 3/4 of Americans don't want to see a Trump-Biden replay. The majority of Americans, I mean, Trump is the most disliked politician in America, and the most disliked politician in America can't win a general election. So this was the kickoff to the debate season and to the election season. I think now people are paying attention. I think there's a big difference on people who support Trump and people who are going to vote for Trump. I think people know that we've got new issues, big issues that we need solutions. We can't keep looking to the past. We've got to leave the drama and negativity to the past. We need a new generational conservative leader that's going to focus on what it takes to really get America back on track. I was a 2-term governor that took a double-digit unemployment state and turned it into an economic powerhouse. I was at the UN. I didn't deal with one country. I dealt with 193. I'm not a lawyer. I'm an accountant. I think it's time that we get our fiscal house in order, close our border, make sure we have law and order, get transparency in the schools, and have a national security that will keep Americans safe.
She's fresh off the debate stage and with us here on Bloomberg, former governor, former ambassador Nikki Haley. We thank you for the time this morning on Bloomberg.
All right, that was Bloomberg's Joe Matthew and Anne-Marie Horton interviewing Republican presidential candidate Nikki Haley after last night's GOP primary debate, where a lot of folks said she did quite well. With our news in New York City, here, we're going to go to John Tucker, and we're just going to get everything from John Tucker.
JT,
reset it all.
This will be my 5th job of the day.
Yes, exactly.
Anyway, if you were looking for a lift from NVIDIA, the broader market, not lifting all boats today. Some of the focus has shifted to Jackson Hole and, of course, Fed policy. Traders considering the idea of higher rates for a longer period of time. You have 2-year Treasury yields hovering right now around 5%. And then we spoke to the former St. Louis president, Jim Bullard. Mike McKee did. From Jackson Hole, says predictions of a recession in the U.S., well, they're off base.
It doesn't seem to be happening, and this reacceleration could put upward pressure on inflation, stem the disinflation that we're seeing, and instead delay plans for the Fed to change policy.
Right now in the S&P 500, biggest drag coming from consumer discretionary, information technology, communication services. And the shares of NVIDIA are at a record. Apple shares, they're down about 1.5%. That, in fact, the biggest laggard right now in the NASDAQ 100 as well as the S&P 500. S&P 500, 15 points lower. That's down 0.3% right now, 44.20 on the index. Dow Jones Industrial Average, that is down 49 points. And the NASDAQ 100, look at this slide, 148 points lower. Right now, it is down 1%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. During our little sojourn into the realm of politics, the markets turned negative. That's a big turnaround. We had that tech rally kind of wandering here. So we have the S&P turning negative, as John was just reporting, and NASDAQ kind of falling out of bed. So, you know, the NVIDIA thing, which was a monster print again last night.
Dude, I was thinking about you this morning, actually yesterday, because you made a comment that I thought was really interesting. If you were a hedge fund guy and you had a couple million extra, you might go short NVIDIA. Just because, and I thought it was smart. The expectations were so high, it seemed like they were unbeatable. And then they came out and beat the heightened expectations. So first of all, I was shocked, and then I was thinking, thank God Paul Sweeney is not a hedge fund guy.
Exactly. Stock's up 2% today, and
I mean that's only 2% right now. It was up 7% earlier,
and I probably would have covered up 7% probably to lose even more money. But it's interesting. I mean, 16 billion revenue number versus the consensus of 12.5. I mean, that's billions, you know, and to beat that when you knew that the street had already from last quarter taken up their revenue guidance, to then blow past that, it just shows you how strong that business is taking off.
We had this morning, I was talking to Mandeep Singh about this, Bloomberg Intelligence, one of the smartest analysts out there on tech. He thinks they're sandbagging with 16. He thinks they can do $2 billion better than that, because they already did 16 in this quarter.
Yep, I know.
If they get the supply, they can do it.
That's a good point. If they get the supply. All right, let's kind of rehash what we saw last night from the political realm on that stage and on the discussion we just heard on Bloomberg Radio and Television with presidential candidate Nikki Haley. Joe Matthew joins us. He is the radio and TV host, Bloomberg Sound On, and Bloomberg Television's Balance of Power. Joe, fascinating conversation with the former governor, former ambassador, Nikki Haley. I mean, she came off very well. I'll tell you what, Matt, she's very polished in terms of being a speaker. So we'll have to see, how much momentum she takes coming out of this. So I'm not sure we have Joe ready. Oh, we got Joe. All right, Joe. Joe, thank you.
Look up, Joe. Look up.
There we go.
You're on camera. This is streaming.
Exactly.
Let me ask the first question, because I had to go to bed early, so I missed this. And I know that they asked for a show of hands to who would support Donald Trump, I guess if he's the nominee. But Wendy Schiller was saying, they said also if he's convicted. So all of the people, or most of the people on that stage, would they support Donald Trump even if he's convicted of, trying to steal the election?
That appears to be the case. I just asked Nikki Haley that again to make sure I understood this properly. The little bit of confusion there, by the way, was Chris Christie, who kind of half-heartedly rose his hand a little bit late, and he wanted to explain why he was a no. So two apparently did not agree. Chris Christie and Asa Hutchinson. Everybody else put a hand on the air. But it was a pretty funny moment there with Ron DeSantis and others, if you are watching, doing this. And then everyone kind of got their hand up in the air.
So even Mike Pence, I mean, Trump, some people would say, having watched what happened in January 6th, tried to have him lynched. And he would still support Donald Trump for president?
It's pretty remarkable, isn't it? Because every candidate up there knows that they want a piece of that MAGA base, and they don't think they can win the nomination without it. And so you don't want to offend Donald Trump's supporters. This has been an incredible dance to watch for the past couple of months. And I thought last night we might see a bit of a change of tone there. I mean, my goodness, how do you expect to be the nominee if you cannot criticize the front runner? And that remains a confounding situation for just about all of them. Chris Christie did not win any friends last night by bashing Donald Trump. And so that's why you see this continue.
Joe, realistically, it was a very crowded stage last night. So my question is, realistically, can anybody from that stage mount a meaningful challenge to former President Trump?
On this day, I can't say yes to that. They'll tell you otherwise, but my goodness, he wasn't there for a reason, and it probably would have been silly for him to show up after what we saw last night. That was not the most serious policy conversation that we've ever seen. But I just don't know what the path is at this point for any of them. I'm not sure. I think the calculation for these candidates is don't offend the MAGA base. By the way, Nikki Haley's going there a little bit more than we expected, because you might need them at some point if Donald Trump, clearly the front runner, becomes somehow incapacitated or unable to win the nomination. And then you can be the savior and say, you know what, I was with you all along. Certainly Vivek Ramaswamy was doing that last night. He said Donald Trump was the best president of the 21st century. If that's the case, why are you running?
Yeah, Ramaswamy is in love with Donald Trump. I couldn't believe Nikki Haley. She seems to be saying she thinks women have the right to make their own personal choices about what's going on with their bodies. That doesn't make any sense from a Republican.
You're being a little sarcastic there, I presume. That's one that we've had trouble pinning her down on, though. As you just heard with myself and Anne Marie, she would not give a number of weeks. It's 6 weeks, by the way.
Well, I mean, we don't need an exact number, right? I mean,
well, we kind of do. I mean, that's the argument right now. Mike Pence, Lindsey Graham, other Republicans are proposing a national 15-week minimum, and we just don't have a sense if she would sign on to it.
Well, but her point is you can't get 60 votes on that federally, and she thinks it should be down to the states, which is, I guess, the way it's headed.
You and I both know that those votes do not exist. But if you're running for president, candidate Matt Miller, wouldn't you think that you owed Americans an answer on that?
Well, her answer was that she's pro-life. So her answer is no weeks, right? But she thinks other people should be able to make the decision for themselves, should be able to make that choice.
Well, that's where she is now. She's talked about national consensus. She tried to give a reality check on the votes here in Washington. We get that. But the line's been moving on this. Again, her home state of South Carolina put in a 6-week minimum, just like Florida did under Ron DeSantis. Is that what she would do for the nation if she had 60 votes? I think that's a question worth answering.
Joe, what's the view down in Washington as to the role of New Jersey former Governor Christie and the role he's trying to stake out here as the one to really call out former President Trump here? Is that a reasonable strategy? Does it have any legs, do you think?
Well, if that is the strategy alone, then probably not. And he would tell you that he's, worth a lot more than that. But look at what happened last night on the stage. If Donald Trump had been there, that probably would have been a much bigger night for Chris Christie. Yeah. He had a good line on Vivek sounding like ChatGPT, good laugh line. I'm sure he had a couple others in his pocket, but he was really there to try to punch Donald Trump in the nose, and Donald Trump was hanging out with Tucker Carlson instead. So if that remains the case, this could be very difficult for Chris Christie to get any additional traction here, because I will remind you that Donald Trump says he's skipping all of them, all of the debates in the primary cycle. He wants to debate Joe Biden.
And the networks can't be happy about that.
Well, he might have to be in court for a lot of those debates, right? Or could
true.
Even end up being in jail for some of them. Is there any possibility that the 14th Amendment, I know I've asked you this in the past, Joe, is there any possibility that that precludes Donald Trump from holding presidential office?
It's probably not likely, but you're not the only person asking that question. We've actually seen a couple of candidates. I already mentioned Chris Christie. Asa Hutchinson was suggesting as much. He likes to talk about the 14th Amendment, but I don't see a real conversation around that yet. That doesn't mean it won't happen, and we've got 4 indictments to sort out here. More immediately, though, how does he compose himself today? He's going to court today for a reason, to try to blunt the bounce of people like Nikki Haley or Vivek Ramaswamy. Is he going to hold a rally in front of the courthouse? We're going to see a mugshot later, guys, and it's going to be interesting to see what kind of an impact that has.
I'll be interested to see if he gets fingerprinted and photographed. We've heard.
Does he smile, Matt? Is he going to smile for the photo?
It's a great question. I'm genuinely fascinated to see how this turns out. We've heard a lot about all of the other candidates in the debate last night. I haven't heard anyone say anything about Tim Scott.
How true.
And he's done well
really
in terms of money raising. What did he talk?
Honestly, this is he and Ron DeSantis were being watched very closely last night for any possible breakout, knowing Donald Trump was not going to be there. Somebody on the Trump team referred to DeSantis making a cameo last night, which I thought was a clever line. He really did not get much airtime at all. And Tim Scott was the same. He has huge favorables. He was clearly nervous about making those go down. He's got a lot of money, but it was not the breakout performance that many were hoping for and looking for Tim Scott. So, look, that's the point of these. When we get to the next debate, we actually could start seeing, some real movement in the numbers in a more established leadership role here on the trail.
Hey, Joe, thanks so much for joining us. We know how busy you are today and most days now between now and the election. Joe Matthew, radio and TV host for Bloomberg Sound On and Bloomberg Television's Balance of Power. Let's go down to Washington, D.C. once again. Amy Mars, World and National News.
All right, thank you, Paul. House Republicans are now launching an investigation into Fani Willis, the DA who is responsible for prosecuting Donald Trump and 17 other defendants in Georgia. The Judiciary Committee sent a letter seeking documents from the DA. This as Donald Trump shakes up his legal team just hours before he says he'll surrender to authorities in Atlanta. Drew Findling is out, replaced by Stephen Sadow, an Atlanta-based criminal defense attorney. And Brown University political scientist Wendy Schiller says Trump's mounting legal issues will inevitably raise more questions from Republican voters.
Does this start to really wear on some segment of the Republican Party in terms of the voters? All these trials, all this sort of mugshots, all these sort of, charges repeated over and over and over again. And will there sort of be some idea, wait a minute, there is an alternative? And I think that's the problem for Trump for skipping the debate.
Wendy Schiller of Brown University spoke on Bloomberg Daybreak. Yevgeny Prigozhin is the man who led a mutiny that posed the biggest threat to President Putin's almost quarter-century rule in Russia. He is presumed dead now. Russia's aviation authorities say he was in a deadly plane crash that killed all 10 on board a flight from Moscow to St. Petersburg. Bloomberg's Maria Tadeo explains how there is some speculation behind the crash on Russian television.
On Russian channels, it is awash with speculation, some of which, of course, I'm not going to get into, but it does feature into this idea that people and individuals who have opposed or criticized Vladimir Putin, and certainly Prigozhin did that 2 months ago, seem to find themselves in situations where they either get seriously injured or, well, just mysteriously die.
Bloomberg's Maria Tadeo there. The detention of Wall Street Journal reporter Evan Gershkovich has been extended to November 30th. He is a United States citizen and was arrested in Russia in late March. The U.S. has declared him to be wrongfully detained. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Matt and Paul.
All right, Amy Mars, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, and John Tucker in the Bloomberg Interactive.
In the house.
In the house again. So, all right. Are you a Subway guy? Sandwich shop dude?
You know what? I used to be a big fan. When I was a kid, we had one like down the street.
Because you're in Ohio, so you have no sense of pizza, Italian food, that kind of stuff, right?
Well, first of all, that's not fair. Ohio, Rubino's Pizza in Bexley, Ohio, I still maintain is the best pizza I've ever had in my life.
Okay.
And if you ever get to the Columbus area, go to Rubino's. But yeah, I used to be a Subway guy until I discovered Jersey Mike's.
Jersey Mike's, you're right. That's tough competition.
It's delicious.
Roark Capital Group has won the race to acquire U.S. sandwich chain Subway after seeing off a late challenge from a rival bid group led by TDR Capital and Sycamore Partners. Financial details were not disclosed. The deal values Subway at more than $9 billion. People with knowledge of the matter said, asking not to be identified because it's confidential and all that kind of stuff. So this was a privately held company, family-owned thing for a long time. But
I get it.
Cashing out, baby.
Yeah, I get it for sure. They've been very successful. They had a slight problem with Jared, obviously.
Yeah, when was that?
I don't know,
Yeah,
but people will never forget. In any case, my problem is I just never know about the meat. It's a franchise, right? So
I think so.
The franchisees can do whatever they want in terms of the meat. I just don't know. I'm sure it's fresh, but I don't know it's fresh.
All right,
and when I go to Jersey Mike's, you see them pull out the big hunks and cut it fresh for you.
Right in front of you.
Yeah.
And there used to be one on 3rd Avenue, which was pretty convenient to hear, but they
killed me that they closed it down.
What
killed me.
So there is a Subway here on Lex, a couple blocks away. Like
yeah, I've been there.
Yeah, so.
Subway used to have delicious chocolate chip cookies.
Oh, yeah?
And those, I think, are still made fresh every day. I don't think they're quite as good as they once were. But like I said, I don't go that much anymore.
Jersey Mike's founded?
In Point Pleasant, New Jersey.
The Jersey Shore.
Yes, exactly.
Damn it, John Tucker.
Yeah, exactly.
You are not to mention the Jersey Shore again.
Yes, exactly. And I don't think a reader actually wrote in. I think it was actually Colin.
You think Colin's sick of hearing about the Jersey
he's just
Shore?
had enough, and he made up the ruse of a reader kind of writing in. So I'm going to stick with that strategy. S&P 500 off 0.4%. NASDAQ off 0.7%. So a little bit of a turnaround from earlier this morning. Again, NVIDIA results last night were solid. Boy, and that AI thing, it's real, folks. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to break down what we're seeing in the markets. Jess Menton, star equities reporter, joins us here in our Bloomberg Interactive Broker Studio. Plus, Quincy Crosby, she's a chief global strategist for LPL Financial. She's going to talk about her market call right here, maybe preview what we're going to hear from Jay Powell Manana. And then Kujan Sobhani, he is the lead semiconductor analyst. He doesn't follow, he leads for Bloomberg Intelligence. He's going to join us to break down those NVIDIA earnings, just another blowout in terms of guidance going forward. Let's kick things off with John Tucker.
All right, let's start with NVIDIA at a record after it smashed Wall Street's pretty lofty expectations for the second quarter. They also guided higher, but the major averages not following on their coattails, countering NVIDIA's gain. You have shares of Apple right now. They are lower, down about 1.8%, the biggest laggard right now in the SPX as well as the NASDAQ 100. Then the data. Labor Department surprise drop in initial jobless claims, among other things, showing the Fed's work may not be done. What exactly to expect from Fed Chair Powell's speech tomorrow in Jackson Hole, Wyoming? We put that question to Mike Darda at Roth MKM Partners.
So I really don't think Powell is going to come out and make some kind of declaration that the Fed is done tightening. I think they're going to take it meeting by meeting, which is what they've been saying.
Yeah, and maybe a warning signal about the U.S. consumer. You had results from the discount variety store Dollar Tree, disappointing across a variety of metrics there. S&P 500 right now, 23 points lower. That's down about 0.5%. 4412 on the index. The Dow Jones Industrial Average is down 129 points right now. That's down 0.4%. And the NASDAQ 100, 173 points lower. That is now down just about 1.2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
All right, thank you very much, John Tucker. Yeah, kind of a turnaround in the market this morning, so we'll keep an eye on that. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio, and that will get you to the stream. Again, red on the screen, turnaround from earlier this morning, turnaround from the futures market. Let's see what's happening under the hood. We can do that with Bloomberg equities reporter Jess Minton, who joins us live here in our Bloomberg Interactive Broker Studio. What are you looking at, Jess?
Well, I'm taking a look closely what's happening with the dollar and yields as far as how that's happening the broader stock market. So if you do look at the 10-year Treasury yield around 4.2 right now, as well as the dollar, if you're looking at it against its peers too, rising as well. So putting some pressure once again more broadly on the stock market. And if we're looking under the hood for the S&P 500, obviously looking more growth. You don't like it. You don't like it.
You want what?
I mean, the 10 years at 420, we've seen this. Dollars at 1240. I mean, why, after NVIDIA comes out with a monster beat, do we see this market selling off? Like, this is, NVIDIA is the stock that's driven the market this year,
Perhaps
right?
a little buy the rumor, sell the news there.
Okay, that's more believable. That I can get with that.
There we go. Especially a stock that's up over 200% this year and just once again hit an intraday record, and it's added more than $307 billion to its
It was up
market cap
7% at one point this morning,
exactly.
right?
And also on Monday, coming into this week, on Monday it gained more than 8%. So this week it has been on a tear, even though there were a couple days in between there where it was slightly lower. But I mean, if you're looking more broadly, real estate's the one leading the way, about 0.6% higher. But obviously, technology, consumer discretionary is what's rating more broadly on the market. But
I can imagine. Now, I don't know if you're allowed to write this, but when I was just a cub reporter in Frankfurt covering the DAX there, we weren't allowed to say taking profits, even though a lot of times markets were down or stocks were down because people were taking profits.
Is that in the Bloomberg way?
It's sort of one of those jargony type terms you just don't really
we want to stay away from.
Yes,
Bloomberg.
exactly.
Okay.
I mean, if you've been invested and you get through NVIDIA earnings, kind of like holding your breath, wow, they beat.
Right.
Then today you might, the heart rate is up a little and you might say, yeah, let me take some of my chips off the table here. I've done well.
Oh, you definitely can't say that. Taking chips off the table? Matt
No,
would not be happy with
Okay,
that.
I mean, I just think, there is an argument to be made that some people are taking profits today.
I would agree with that based on my sources.
Buy the rumor, sell the news wasn't something we were alled to say either. I learned that
I didn't
phrase.
want to come in and say that, but I mean, you kind of forced me to go there. So.
Well, thank you. I just want you to let's be fully, honest and transparent here. Yeah.
All right. Well, there we go. That's what my sources have been telling me. So obviously you see a stock like that. I mean, the latest check here, NVDA for NVIDIA up about 1%. Now, there was a particular point. So if you go to SPX and you look at members, so MEMB, there was a point this morning where its market cap, its weighting in the S&P
WGT, SPX index WGT.
So if you look, and then I like to look at member weighting, so MEMB, but when you looked at its weighting, it briefly
overtook Amazon?
Correct.
Wow.
So it was then number 3. It was something I had mentioned to Paul in pre-market trading that I was eyeing, but now it's flipped back. NVIDIA number 4 once again, Amazon number 3. But that was something else I was taking a close eye on. So it had gotten close to around almost 3% roughly in the S&P 500 waiting for NVIDIA. But that was something to me that was important to see as far as whether it would close the day with the weighting still above Amazon's. But now because it's trimmed some of those gains that obviously we saw earlier this morning, now it's back to number 4.
What screen do you look at when someone's talking valuations with you and you want to see how richly a stock is valued? Do you just look at, on the description page, you get estimated PE, you get trailing 12 months PE, EPS. Where do you look to determine the valuation of a stock? So if you want even, price to sales or some other measure.
Right. Yeah. So I do the forward because I feel like trailing is too backward looking. Right. So we do the forward. So there's a particular on Bloomberg Intelligence has particular dashboards that they're not as intuitive sometimes with the commands.
That's Paul's fault.
I was trying to be careful with how I said, but I have a dashboard that I use from Bloomberg Intelligence where it kind of pulls everything up, and then I'm able to see. They have a valuation tab basically, and that's where I'll go through and I'll take a look at that. So here,
and those are the best comps on Wall Street.
I'm going to send this to you in our
little
chat that
I'm not kidding. We spent years building our comp sheets, making sure that they were right across all the Bloomberg functionality. So if you go to, if you really want to just look up a stock, I use the BQ function, Bloomberg Quote, because it gives you everything.
Yes.
And then in the Bloomberg Quote, number 7 is relative valuation. And you click on that, and that gives you.
You can just do RV for that.
Yeah.
You can just type.
And then you go to
NVDA equity RD.
Yep.
RV. Sorry, relative valuation.
And that gives you the overview, the comp sheets, everything you need to know there. So that's kind of the way to look at it. And so it's good stuff. And but anyway, you look at it, NVIDIA. It's however you want to look at it. Man,
it's trading expensive. 47 times forward earnings. Is that too rich, you think?
I don't know. I have no idea.
Especially if they're sandbagging, their
right. And
outlook.
coming into this week, it was 44 times earnings, so it's continued to climb higher.
And the comps, the comps in there are 30 times, so it's trading well above the peer groups in terms of valuation. So that's the simple way to look at it.
Right. Jefferies has a buy price target is 610, was $500 before that. Westpark Capital upgraded to buy from hold. Price target's now $690 on that stock. So you do have a wave of different Wall Street firms that are obviously upping those.
What do you hear when you talk to your sources about any other, nearly pure AI play? I mean, NVIDIA, Ed Ludlow was telling us yesterday, is a pure play on large language models, or what the hell you call it?
GPUs, I think is what he was talking about.
But like
the graphics.
Is there any other stock out there that's only AI? You can buy that and say, I'm riding this AI wave.
Well, something that's come up a lot, and it's a little bit tricky with Palantir, but that is a name that's come up whether or not it could potentially be added to the S&P 500. Typically,
PLTR, the ticker there.
Yes, that is one that has had a lot of chatter about it. And usually the first Friday in September, they'll usually drop a press release from S&P 500 announcing who's going to be the additions, the new members from the S&P 500, who's going to be taken out, or if there's no changes at all. So that's something we're looking ahead to a week from now. They obviously will never say for sure, oh, yes, this is the date where it's going to come, but that's typically when it usually happens. So we are keeping an eye out to see, well, if that is a particular name that'll be added.
All right, that's a good one. Dan Ives came out on that stock a couple months ago with a strong buy rating on that one, saying that is a pure play on AI. So may make a note there. Jess Menton, thanks so much for joining us. Jess Menton covers all the equity stuff for Bloomberg News. Right now, let's go to Quincy Crosby. She's the Chief Global Strategist for LPL Financial. She joins us via Zoom. Quincy, all eyes, I guess, certainly from global Wall Street, are on that little cowboy town out in Wyoming, Jackson Hole. What's your view of kind of what may be discussed out there relative to kind of where we are in the markets these days?
Well, no, absolutely. In fact, we're looking even at the comments coming from the members of the European Central Bank, because you see the slowdown in Europe. And the ECB is a rules-based central bank. They've got to stick to bringing price stability back 2%. But you've got a major slowdown. So the question is, what are the doves going to be saying? What are the hawks going to be saying when they're interviewed by the reporters? So that's one that's going to be very interesting, because speaking of currencies, that matters. The dollar is up. It had been pulled back, but it is up. And again, most likely because the market seems to be coming around to the idea that the Fed is probably not finished. The dollar, it has pulled back, thinking the Fed would probably stay on pause for some time. But even this morning, we saw the turnaround with those initial unemployment claims. Again, underscoring that this is a resilient labor market, and resilient labor markets typically lead to consumer spending staying resilient as well.
So, Quincy, you're the chief global strategist. You mentioned the euro. Does 108 make sense to you? Shouldn't we be closer to $1.06, $1.05, somewhere around there?
Well, probably. I mean, look, there's another issue right now. This is probably the slowest period in the market in terms of volume. And currencies are known for being swung in all directions when volume is down. That's why we try to be very careful about it, during holiday periods. I mean, Europe isn't there. I mean, if our trading floors are empty today, they've been empty in Europe for. That's my future life. I want to go over there.
Yeah.
But the currencies get swung around.
So, Quincy, do you think this Federal Reserve will stay where they are right here going forward, or do you think there's actually another hike out there?
Another hike coming?
I think it's definitely a possibility. Look, when we look at November, it's gone up a bit. But I think the Fed is correct. They're going to be data dependent. He's going to stick to the same data dependent. This is our mandate. We're going to stick to that. And I think the head of the Richmond Fed, 2 days ago now, made it very clear it's about our credibility. He's not going to come out and say anything regarding a pause. They're going to stick to the script. The only difference here, though, is if the Fed is data dependent, the market is always much more data dependent. We are ferociously data dependent, more so than the Fed, because we want to get it right. We want to get there before anything happens, because that's how they make money.
So going the other way, Quincy, if I look at the dots, I see they've priced in a number of cuts already for next year, and I realize these aren't Fed forecasts, but come on, they put their dots there. What would it take to push the Federal Reserve to a cut? Do we need to have like a deep recession before they'll start thinking about that, or is just slowing growth enough?
I don't think slowing growth. I think if something breaks, the proverbial break, they will do it. This is a different world that we live in. Since 2008, it's as if both the Republicans and the Democrats don't want to see the market clear itself out. Something breaks, watch to see the ramifications. They don't want the unemployment rate to skyrocket. And therefore, we have lived in a world, regardless of the Fed normalizing rates now because of higher inflation, it's as if central banks can't let the market just do the job. They have to come in. So what would it take? It probably takes something breaking, or if the economy really cratered, and that would be the labor market if it actually cratered, the kind of crater that would lead to personal income coming down, consumer spending just crashing, and the NBER saying, okay, it's a recession.
All right, Quincy, I know you have a global view here. What do we do here? I mean, do we stay with some of the big U.S. growth names? Do we go think about Europe where I might get better valuations? Do I even think emerging markets? Kind of where do you think, given the backdrop we have economically and fiscally and monetarily, where do we go from here?
Well, you go to the U.S. Treasury market, you go to investment-grade corporates, you go to preferreds with the big money center banks. And in terms of a sector, industrials, they have been stalwarts. They've been steady. Yes, they pulled back when valuations climbed, but defense spending is up. It's up. That's a component of industrials. The infrastructure spending all over the world, you're seeing American companies, particularly in the Middle East, building cities. That's going to continue. So we like that as a sector. We're keeping our eye on energy sector. And also, we take a look at Japan in the developed markets. Now, that's becoming a pretty crowded trade, as many of the big global banks are saying, hey, let's take allocation out of China and divert it over to Japan. So that's becoming a crowded trade. But Japan is transitioning to an economy that accepts the concept of shareholder value. I never thought I would live to see it, but it's happening. The boards in Japan are actually now bringing in outsiders, which is healthy. They're talking about share buybacks, dividends. They want global investors coming in, and they're doing a good job. But again, you're seeing a tremendous shift out of China and into Japan. So we're there. But yes, in terms of the United States, the other countries don't have the growth stocks that we have, particularly, obviously, in technology. And we have to continue with this theme and get through the seasonality, get through September, and then take a look at the market. It is very rare that we see a second year of a downturn in the equity markets. Right. And also, the statistics indicate you do well in the first half, you're going to do fine in the second half.
Quincy Crosby, thank you so much for joining us. As always, appreciate getting your perspective. Quincy is the Chief Global Strategist for LPL Financial. That's a NASDAQ-traded company. LPLA is the ticker to load into your Bloomberg terminal. We have a sell-off in the marketplace here, a little bit of a pullback after a couple of days of solid gains. The S&P 500 off 0.5%, NASDAQ off 0.9%, even though NVIDIA put up some really blockbuster numbers last night and raised their guidance yet again. AI, I think it's for real, folks. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Yeah, that's right. More news in the retail sector. Surprising results from Guess that topped estimates and boosted its full-year outlook. Bloomberg's Abigail Doolittle has more.
They put up basically a blowout quarter, strong right across the board. Sales, gross margin, and earnings all came ahead of consensus. Earnings beating by 82%. And it's not a tiny number either, up 72 cents per share in adjusted earnings. And again, Asia strength, licensing for its European units.
And shares of Guess right now, wow, up 27%. And Dollar Tree's third quarter earnings forecast fell short of estimates. The discount retailer is dealing with higher wages, losses from theft, and a less profitable sales mix 1 year after introducing a higher price point. Shares of Dollar Tree right now, well, they're down about 10% almost. And a production stop is on the way at a Ford plant in Fort Wayne, Indiana. Bloomberg's Scott Carr has more on what's causing the issue.
Officials with Ford blame a temporary parts shortage for the upcoming output stoppage that'll in effect give workers at the GM plant that makes full-size pickups an extended Labor Day weekend break. Reports say the output stoppage will start Monday, August 28th, with production restarting Tuesday, September 5th.
Now, that's not all the news for Ford. The automaker is having some problems with its F-150 and SUVs. The Wall Street Journal says the automaker has received complaints about ear-piercing static that in some cases continued after the vehicles were turned off. Now, Ford says it's related to the amplifier in the sound system. Right now, shares of Ford are down about 1.5%. Those are the company stories we're following this hour. I'm Lisa Mateo.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You have the mega cap space that's coming under pressure right now. You have Tesla dropping about 2.8%. Apple, that was down about 1.7% in this morning's trading. NVIDIA, that's trimming the advance that set the chip maker to an all-time high. So the S&P 500, that's erased some of the earlier gains. The NASDAQ 100, that is down right now just about 1%. Former Fed President, Fed Bank of St. Louis President Jim Bullard telling Bloomberg a re-accelerating economy in the U.S. that could actually prompt higher borrowing costs. Initial jobless claims among the figures we got this morning, they're coming in lower than expected, so that signals a resilient labor market in the U.S. As a result, two-year yield right now 3 basis points higher, right at 5% for the more policy-reactive two-year Treasury. And we have the S&P 500 25 points lower. That's down about 0.6%. 4410 on the index. The Dow Jones Industrial Average 122 points lower. That's down 0.4%. And the NASDAQ 100 down 181 points. That is a decline of 1.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube.com, so head over there and search Bloomberg Markets. Darkening the doors, $1 B. Ritholtz, Barry Ritholtz. He runs the Ritholtz Wealth Management. He's got a podcast, all that kind of stuff. He joins us here, so we're going to be chatting with him throughout the rest of the hour. We want to get to the...
Not just the Masters in Business podcast.
Masters in Business podcast.
He's also doing a podcast with me and Hannah Elliott.
Oh, on cars.
Called Bloomberg's Hot Pursuit.
Nice. I like that. When does that kick off, or has that kicked off?
We recorded a pilot.
Yeah? How'd it go?
I think it went really well.
Okay. You guys talk about cars. Gee, that's what could go wrong there, the three of you talking about cars. So, all right, let's talk about the stock of the day and really the week and maybe year to date. NVIDIA, little chip maker, all-time high today. It's up 1.3%. Just extraordinary story. Let's talk to somebody who does this chip stuff for a living, Kunjan Sobhani. He is the lead semiconductor analyst. He doesn't follow anybody. He's the lead semiconductor analyst for Bloomberg Intelligence. I did not hire this guy, so let's see how he does, though, okay? Kunjan, thanks so much for joining us. Appreciate it. He joins us via Zoom in San Francisco. He's a SoCal guy, undergrad, USC, business school, UCLA. I don't know where his loyalties lie between those two schools, but NVIDIA, Kunjan, talk to us about the quarter we had yesterday. Just monster revenue, right?
Right. I mean, it was not a big surprise to us. At least it was in line with our preview call. Yet again, they delivered a blockbuster quarter. Most of the upside, again, was primarily driven by their data center segment, which are their GPUs that go in all the data centers and primarily used for AI these days. So it was more of a function of them able to get a lot more supply because the demand has been rising and is running ahead of the supply. And we expect similar growth to continue because, again, there's a lot of signals that demand continues to rise.
Kunjan, when NVIDIA puts in an order, right, because they don't make their own chips. So they go to TSMC and they say, we want this many GPUs. Does TSMC say, well, get in line? Everybody wants these things. Or does NVIDIA get to step to the head of the line?
I mean, NVIDIA does have garnered a lot of buyer power. Look, they're the #1 player when it comes to GPU, and they've been growing the most fastest. So they do have a lot of pull. But it's not just a function of getting in line. When you have growth like this, which has not, I've been in the industry for 20 years, and I've not seen such beats in the 20 years. So it's not just easy to just bring up supply because it's not sitting somewhere. These are leading edge nodes products. And especially the supply crunches at the packaging side because these are most advanced packaging. And the supply just didn't exist. So suddenly when you go and say, I need double than what I expected, it takes time to bring up supply. So it's not a function of TSMC not putting them back in the queue. It's just, it takes time to bring up that supply.
Hey, Kunja, this is Barry Ritholtz, and I'm looking at this chart. Year to date, we're up 222% in NVIDIA. Raises the question, how much of the upside is priced in already?
I mean, coming into this quarter, there were a lot of concerns exactly about that point. But look, we think this another blockbuster print and raise should ease some of those concerns because there's definitely less doubt when it comes to sustainability of the demand. And like you saw, we have seen market reaction similar to last quarter. It's helping boost another sort of rally to the AI exposed names.
In terms of the other chips, does it matter? Does it matter what they make for PCs? Does it matter what they make for car? Does it matter what they make for phone?
I mean, overall for the company, it does matter. But right now, people are only focused about data center because that's really, it's become close to 70% or more of the revenue. So that's what really people are focusing on right now.
All right. So how about like AMD, Intel, Broadcom, Qualcomm? Where are those guys in terms of, I don't know, just their AI-ness, if you will, their exposure to AI? How do you think about those companies?
I mean, this is the largest and the fastest growing opportunity that we have seen in a long while in the semi world. So everyone is trying to get a bite on this large piece of the pie. Now, they are all playing catch up because NVIDIA was the leader. We think there's definitely opportunity for some other names like AMD, Broadcom, to some degree Intel, to grab a small sliver of this pie, which again, even though it's a small percentage of the total market share, adds to your top line in terms of billions of dollars. So they're all playing catch up. They should all still see the benefits of it. But we believe when it comes to GPU and accelerators, NVIDIA will be the dominant share.
I mean, but Kunjan, if you look at a pie chart and it's, you know, GPUs in server centers today, not GPUs that they, you know, have designed, not GPUs that they have for sale and maybe a customer is going to buy, but GPUs that are already in the big server centers. How much of that pie is NVIDIA?
Oh gosh, in like 99, close to 95%.
So huge. Yeah.
So that is very reminiscent of Tesla a decade ago. All we heard was, hey, this is an up-and-comer, and they have a huge lead, and it's going to take forever for people to catch up.
It's still Tesla's world. Everybody else is just paying rent, as Dan Ives likes to say.
I'm not so sure that's the case anymore. They used to have the market all to themselves. You can't say that anymore. There are credible competitors to Tesla. That wasn't true 5 years ago. So the parallel I'm trying to raise is, it's NVIDIA's world. Everybody else is living in it. How long is that going to last for? You don't have the same consumer loyalty issues that have been driving Tesla. This is just who can produce the most GPUs for the least cost. That's going to be who's winning. Huge head start. When might other companies begin to make a dent in that massive, unsustainable 90+% market?
Kunjan, what do you think?
I mean, look, you're correct. There's definitely going to be some dent, but we don't see it in the near term. I mean, worst case, you can think of what we have seen numbers or what we think, right? The 95 share could go as low as like 85, 80 in the next maybe 3 or 4, 5 years, but that's still huge. One thing you have to remember is they are not even able to ship to the entire orders they have. Like even after such a high beat, what we're hearing from customers is they can't get enough NVIDIA chips. And they are not willing to go to another chip maker right now that we cannot get NVIDIA. Let's go and buy something else. They still are waiting to get the NVIDIA chips and solutions.
All right, what's the, I don't know, I'm not going to say the bear case for NVIDIA, but what's maybe a headwind out there that maybe the market's not paying enough attention to, do you think?
One risk factor is definitely China, which people are paying attention because, you know, any more incremental sanctions in this area, because the AI area comes under a lot of focus when you think about US-China trade sanctions. They were already sanctioned last year from not them allowing selling the highest generation chip to the China. And look, outside of the US, the largest cloud service providers are in China. So that could be, you know, in the case of really restrictive sanctions, that could limit their upside. That could limit their TAM opportunity. So that's one of the risk cases right now.
Really quite fascinating. Other than AI, is there any other field that NVIDIA, sort of the way Qualcomm took over mobile, is there any other potential use case for NVIDIA chips, or is this an AI story only?
Well, there's definitely the other up-and-coming market for them is automotive. Look, everyone's aware cars are becoming sort of computer running on wheels. As we go to autonomous driving, as we get a higher penetration of EVs, there's really 3 key players when it comes to compute in cars, and NVIDIA is one of them.
All right, Kunjan, thanks so much for joining us. Really appreciate getting your thoughts. Kunjan Sobhani, he is the lead semiconductor analyst for Bloomberg Intelligence. He's based out there in our San Francisco office, so right smack in the middle of the Silicon Valley and all the tech speak out there. So giving us his thoughts on NVIDIA, and again, just a monster beat and raise again.
And let's not forget that Jensen Huang is one of the co-founders of this company.
Yeah.
I mean, he started it, you know, making these GPUs for video game systems. Way back in the day. And, man, that guy, I mean, what a transformation, not just for NVIDIA, but also for him. He was kind of a tech nerd, and now he's like a cool dude wearing leather jackets.
Yep, and worth $1 gajillion. I'll take a look at Rich Go in just a moment and get you the latest. But anyway, right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. House Republicans probing Fulton County District Attorney Fani Willis as she prosecutes Donald Trump and several of the former president's allies on charges they conspired to reverse Georgia's 2020 election results. The Judiciary Committee's inquiry comes as Trump is expected
on the latest edition of the Bloomberg Surveillance Podcast, Bloomberg's Michael McKee spoke to former president of the
leading his defense in Georgia.
CEO of the Federal
Drew
Reserve.
Findling is out, replaced by Stephen Sadow, a Atlanta
On the latest
criminal
edition
case
of the Bloomberg
defense
Surveillance
attorney.
Podcast,
The first
Bloomberg's Michael
debate of the
McKee spoke to
2024
former
Republican primary
St.
season
Louis
is in the
Federal
books.
Reserve
Of the
President
8
Jim
candidates who
Bullard.
took the Fox News stage in Milwaukee last night, former UN Ambassador Nikki Haley being declared the most pleasant surprise by the Wall Street Journal editorial board. Haley says there's more where that came from.
Too many families. On the latest edition of the Bloomberg Intelligence Podcast, a conversation with BI analyst Geetha Ranganathan on how Disney is keeping the stream dream alive.
We have to remember our Republicans did that to us as well.
Now, Nikki Haley spoke with us this morning from Milwaukee. She's running 5th in the Real Clear Politics average of Republican
On the latest
polls.
edition of the Tape
Yevgeny
Podcast, a
Prigozhin
conversation
is
with
presumed
Kunjan
dead in a
Sobhani
Russian
of
plane
Bloomberg
crash that
Intelligence.
killed all 10 people on board, raising questions about the future of the Wagner Group, the mercenary organization he founded that led a failed rebellion against Russian President Vladimir Putin. Bloomberg's Alek Krudetsky has more on this from our bureau in Warsaw.
There is no clear picture of how many Wagner members remained loyal or remained functional after the mutiny.
Bloomberg's Alex Krudetsky says there's no clear picture of who might take over as Wagner's leaders. Prigozhin's top deputies were also said to be on board that doomed plane, so it's not clear what happens next. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, looking at NVIDIA shares at a record after the earnings report, but they have paired some of the earlier gains. Major averages, they've all turned lower at this point. The drag coming from the mega cap stocks. You have Apple, Microsoft, Amazon, Tesla, all lower. Investors may have turned attention to rates and the idea the Fed could signal higher rates for longer. The 2-year hovering right around 5% right now. Max Kettner, meantime, at HSBC says investors can start taking advantage of some of the bearish sentiment that's out there.
Look at the AAII survey, look at several other indicators. In general, they've become a little bit more bearish, and that is good news, right? That means that, if you get a bit further dips in U.S. equities, that definitely is really territory to buy on dips.
Right now, the S&P 500, 30 points lower. That's down 0.7%. 4405 on the index. The Dow Jones Industrial Average, 150 points lower. The NASDAQ 100, 218 points lower. That is a decline of 1.4%. New addition to the Bloomberg Billionaires Index.
Really?
The greatest basketball player of all time. NBA's, his sale of the Charlotte Hornets this month, his stake, Michael Jordan's. So that cements his net worth at $3.5 billion.
Yep. All you have to do to become a billionaire is be the greatest basketball player of all time and
or the
be
greatest
a savvy business
investor.
person. Right. He was both.
Yes, he was. So was his mother.
Is he the greatest basketball player of all? Is that widely accepted, or do some people think LeBron?
You can make a case for LeBron, but us old guys,
right,
back in the day when basketball was really a full contact sport, MJ was the greatest.
Yeah, I mean, I stopped watching after Jordan retired.
So you have no
from the Bulls
standing in this argument.
So I don't know.
No
if,
standing.
I mean, I don't know if LeBron. The other thing is when he did his whole shtick about I'm taking my talents to South Beach. I didn't. So what?
So what?
So if we're just talking about skill, if we're just talking about skill, LeBron has an incredible set of natural gifts and developed them, whereas Michael, all right, he's 6'6", he eventually turned himself into a lethal defender, a lethal shooter
The way
from
I like
anywhere
to
on the
phrase it,
floor.
the only person that could keep Michael Jordan down or defend Michael Jordan is Dean Smith. His coach at Notre Dame, coach at North Carolina. All right, John Tucker, thanks so much. We appreciate it. Matt Miller, Paul Sweeney joining you live here in our Bloomberg Interactive Broker Studio. We're joined with Barry Ritholtz, Ritholtz Wealth Management, joining us here for a spell here. We're also on that YouTube thing. Boeing. Shares of Boeing and its biggest supplier, Spirit AeroSystems Holdings, fell after the plane maker disclosed improperly drilled holes in a component that helps maintain cabin pressure within the 737 MAX jet. Here we go again. George Ferguson, he joins us. He covers all the aerospace stuff for Bloomberg Intelligence. He is a veteran of the U.S. Army, so we thank him for his service. But, of course, the highlight of his career was the 4 years he spent at Penn State cheering on the Nittany Lions. George, we love Boeing. It's a great, great American company. What's going on? How serious is this latest issue?
So first, thanks as always for having me on. So, Boeing has said that there's no safety of flight issues for these holes that were sort of misdrilled in the rear pressure bulkhead. I think in the story, that's the positive. The challenge here is the challenge we've been seeing all year, multiple years, right? It's really quality control down at the suppliers. The supplier bases have really gone through a lot of turnover employees since the pandemic. And that just keeps biting them, right? And so, again, another story. We don't know full numbers on what it's going to cost to repair. The great news is we don't have to bring everything in from out of the fleet right away to repair it. My guess is that they'll worry about maybe crack propagation over time, as you do more takeoffs and landings on an airframe. So they're probably required some level of inspection. It may slow down deliveries this year as they try to fix what they have going through the processes right now, before they get into the fleet and don't need to do the extra inspection later on. So it probably puts some of Boeing's deliveries at risk this year. We'll wait to hear what they've got to say. And again, the good news is not going to spend a lot of money bringing everything in from out of the fleet. But again, the challenge here is supplier, supplier skill set, supplier stability.
So, hey, George, Barry Ritholtz. So you're touching on exactly where I wanted to go, which is this just a freakish one-off, or is there a larger problem with process? How does something like this happen? How is it not caught sooner? And what does it mean for all the rest of the systems we don't know anything about?
Yeah. Well, look, I think the good news is on aircraft builds, it's very robust, and so there is some tolerance for everything not being perfect. You clearly want to be at perfect, right, so that you can minimize any risks as you build an airframe. But I think, Barry, we've gotten way past the one-off. There's been so many problems coming out of the supplier base, especially Spirit, where I think you have to concern yourself now with process, right? And I think Boeing really needs to get in there and figure out why Spirit can't get these really critical manufacturing processes standardized and stabilized so they're coming through the factory correct the first time.
Is this specific to the 737, or might this be a broader problem that affects everything that comes out with a Boeing logo on it?
So the 737 and the rear pressure bulkhead would be built at Spirit, and no other Boeing airplane would have that rear pressure bulkhead done at Spirit. So I'm guessing this is going to be largely a 737 issue. I mean, maybe the 767 runs through Spirit as well, but we haven't heard anything about it. It's low volume too. I'm guessing it's going to be largely a 737 issue right now.
George, you also cover Spirit Aerosystems. The stock is down 15% on the news today. It's off 34% year to date. Most of us don't know anything about Spirit Aerosystems. Tell us who they are, what they do, and does this come as a surprise to you?
Yeah, so they make a lot of fuselage pieces for Boeing. They make, I think it's something like about 70% of the 737 aircraft, right? So they're really integral to that airplane. Spirit was spun out of Boeing a bunch of decades ago. It's a Wichita factory, I think, that Boeing probably wanted to get outside of the main company so they could save a little bit of money on labor. Again, it doesn't surprise me because we've seen other problems at Spirit recently in processes. One of the things I think very telling about how important Spirit is to Boeing is I'd call Spirit somewhat challenged from a financial standpoint. They've recently received advances from Boeing, to support some of their cash flow. We saw them go into the markets, I think it was last year or early this year. Actually, it was early this year, and they raised some bonds at over 9%, which I think is really difficult for a supplier to kind of support that kind of debt costs. But then Boeing has put money into the supplier because they are so important to Boeing. And I think part of this story is going to be, I think the market's telling you they think Spirit's going to be responsible and ultimately have to pay for these repairs, right? Boeing would try to recoup it from them, but Spirit only has so much capability to pay for those, for the cost of these problems. And so it's going to be interesting to watch Boeing as they work with Spirit to figure out a repayment plan and some of this stuff.
George, just got about 30 seconds here, but Boeing seems to be beset with issues on the 737, even though Paul trusts it more than any other plane. Is the Airbus A320 just a better platform?
I wouldn't call it a better platform, but I think that Airbus does have more stability in the builds of that. They do more of it in-house, and that's going to lead to higher build rates for Airbus and better profitability. So something that Boeing absolutely has to surmount.
All right, George, thanks so much for joining us. As always, George Ferguson, he's the senior aerospace, defense, and airline analyst for Bloomberg Intelligence. And as it relates to Boeing, I'm going to go back to my personal opinion. They never should have left Seattle. They are Seattle. Seattle is Boeing. One of the great drives in from an airport to a downtown is Seattle. You come down, whatever that interstate is, it's a 30-minute ride roughly, and almost the entire ride on the left of the interstate is Boeing. Hangars, airfields, jets taking off. I mean, it's just the engineering gut of the company. So what do? You move to Chicago and now Washington, D.C. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. NVIDIA earnings crushed forecast for the quarter as revenue jumped 88% to $13.5 billion from a year earlier. Now, AI demand played a big part in its success. Bloomberg's Alex Webb said keeping up the same pace of growth will be tough.
There will be competing products coming out. A lot of the companies who are currently their customers, the likes of Google, the likes of Microsoft and Amazon, they are in many cases developing their own custom chipsets for AI applications. And that is something that at some stage might start to eat into what NVIDIA is doing. But at the same time, that it may not be happening anytime soon.
Now, shares of NVIDIA right now, they're up about 7%. And a pioneer in the vaping industry is cutting staff again. Bloomberg's Gina Cervetti has that story.
Embattled vape maker Juul Labs plans to lay off 250 workers as the company seeks new sources of cash. The Wall Street Journal reported earlier that Juul was looking to lay off about 30% of its workforce. The company has settled with a number of states and municipalities on accusations it targeted minors with its products.
Now, Juul Labs is hoping to reduce operating expenses by almost $250 million a year. And T-Mobile, well, they're trying to rein in some costs, too. The fastest growing wireless carrier in the U.S. is cutting 7% of its staff. And this as the company spends more to attract new subscribers. This is going to affect about 5,000 positions, mostly corporate and back office staff, along with some technology roles. Retail and consumer care experts, they will not be impacted by this. Shares of T-Mobile right now, they're down nearly 2%. Those are the stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. Red on the screen. We're trying to figure out, we're just talking, why at 10 o'clock this morning did the markets just turn? I guess bond yields started to turn a little bit, but we've got the S&P off about 0.8%, NASDAQ off 1.3%, which is a little bit surprising given the huge news coming out.
We should put out the bat signal.
The bat signal.
If anyone knows why markets turn down at 10 a.m., please message Paul Sweeney or myself.
There you go. That's the bat signal?
Yeah.
Okay, that works.
Give us an excuse or a rationalization. It doesn't mean it'll be right,
More
but
sellers.
at least give us a good
Just
narrative.
tell us anything, because I don't think Bailey Lipschultz is going to be able to give us the answer.
More sellers than buyers? That's one of the things that Barry hates.
I hate it when they say that
Cash
too.
on the
There's the
sidelines.
exact same amount the entire time when they get matched, right?
Yep, exactly.
So it means more sellers than buyers at that price level.
At that price level.
You've eliminated the sellers at that price level, is how traders used to describe it.
That's right. All right, let's head down to Washington, D.C. Amy Morris has got world and national news for us.
All right, thank you, guys. House Republicans are launching an investigation into Fani Willis. She's the DA responsible for prosecuting Donald Trump and 17 other defendants in Georgia. The Judiciary Committee sent a letter seeking documents from the DA. This as Donald Trump shakes up his legal team just a few hours before he says he'll surrender to authorities in Atlanta. Drew Fendling is out, replaced by Stephen Sadow, an Atlanta-based criminal defense attorney. Brown University political scientist Wendy Schiller says Trump's mounting legal issues will inevitably raise a question for Republican voters.
Does this start to really wear on some segment of the Republican Party in terms of the voters? All these trials, all this sort of mugshots, all these sort of, charges repeated over and over and over again. And will there sort of be some idea, wait a minute, there is an alternative? And I think that's the problem for Trump for skipping the debate.
Wendy Schiller of Brown University spoke on Bloomberg Daybreak. Yevgeny Prigozhin is the man who led a mutiny that posed the biggest threat to Russian President Vladimir Putin's almost quarter-century rule. He's now presumed dead. Russia's aviation authorities say he was in a deadly plane crash that killed all 10 on board a flight from Moscow to St. Petersburg. Bloomberg's Maria Tadeo explains how there's some speculation behind the crash on Russian television.
On Russian channels, it is awash with speculation, some of which, of course, I'm not going to get into, but it does feature into this idea that people and individuals who have opposed or criticized Vladimir Putin, and certainly Prigozhin did that 2 months ago, seem to find themselves in situations where they either get seriously injured or, well, just mysteriously die.
Bloomberg's Maria Tadeo. The detention of Wall Street Journal reporter Evan Gershkovich has been extended to November 30th. Gershkovich is a United States citizen and was arrested in Russia in late March. The U.S. declared him to be wrongfully detained. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Matt and Paul.
All right, Amy Morris, thank you so much. We appreciate it. Got a couple car geeks in the studio here, Matt Miller and Barry Ritholtz. Robo-taxis are making enemies and getting booed in San Francisco. Just before Patti Smith took the stage in San Francisco this month, the MC thanked sponsors, including robo-taxi company Waymo. The audience booed, reflecting the hostility that's growing in the city for one of tech's most watched industries. I'm not getting in a robo-taxi. How about you guys? You're the car guys.
Oh, I'd get into a robo-taxi in a heartbeat. In fact, when I read, I think the New York Times did a piece last week where they put 3 or 4 reporters in robo-taxis to take them around San Francisco, and I was like so jealous. Because how cool. I mean, even if I got into a crash, that would make it even cooler.
Yeah, that's not what you want on your obituary. The technology
I
to
don't
do
mean a
this,
fatal crash. I mean a fender bender, you know?
The technology to do this right exists, and we just haven't built the infrastructure. Instead of having this rely on LiDAR and cameras, you need to have embedded signposts, micro-frequency devices embedded in various points. That lowers the risk of accidents dramatically. When the technology is in every car and along all the roads, this becomes incredibly safe. Right now, it's a little safer than humans, but that's not saying a lot.
Safer, yeah,
also, Patti Smith, I mean...
Don't go there.
That's a bunch of old people, like, these kids today in their robo-taxis.
I think of San Francisco as a young tech hub.
Because the night belongs to
Who wrote that song?
lovers.
Bruce Springsteen.
That's right. Very
This
few
is
people know.
Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to educate some people on buying houses. The young folks just don't know what they're doing out there. I'll try to help out. Jordan Lopez, Director of Payden & Regal and Portfolio Manager of the Payden High Yield Income Fund, joins us to talk about his investment strategies in this market. And how about a little car talk? Hannah Elliott, staff writer for Bloomberg Business Week, joins to talk about the BMW XM Hybrid and its safety concerns and a recent publication from the Monterey Car Auction.
I feel like staff writer for Bloomberg Business Week kind of underplays the importance of Hannah Elliott.
She's
like
player.
She's the Bloomberg Pursuits car tester. I mean,
not just car tester. She is the go-to on every supercar that's out there.
Yeah.
Name a Ferrari, a McLaren. She's driven them all. A Rimac. She's been behind the wheel.
If you ask somebody, an executive at Ferrari or a Lamborghini, they will tell you Hannah's their first person to give that car.
We're going to have her on the show. So how cool is that? But first, we also have somebody else who's very cool. Charlie Pella with the Bloomberg Business Week.
Thank you very much. And here's what's going on. Lows of the day right now for the U.S. stock market. The Dow, the S&P, NASDAQ, all in the red. Do want to begin with a headline, though, from the Bloomberg Professional Service. American mortgage rates have jumped to 7.23%. That is the highest since May of 2001. Again, lows of the day on the S&P down 36, drop right now of 0.8%. We have got the Dow down 200 points, a decline there of 0.6%. NASDAQ now lower by 182 points, a decline of 1.3%. Bottom line here, a rally in big tech has fizzled as bond yields rose. Traders are waiting through remarks from a slew of Fed officials, and they are awaiting Jay Powell's speech tomorrow morning for clues about the outlook for interest rates. 10-year yield right now at 4.21%. The 2-year, 4.94%. Spot gold up $5.50 the ounce to $19.21, a gain there of 0.3%. Bitcoin slumping 2.2%, just above $26,000 right now, $26,015 on Bitcoin, and West Texas Intermediate crude calling that unchanged at $78.88 a barrel. NVIDIA shares did soar to a record today before pulling back. Right now they are up 1.9% after last night's blowout earnings report. Dan Ives is a senior analyst with Wedbush Securities, and on Bloomberg Surveillance this morning, he told our Paul Sweeney and Kriti Gupta, you cannot ignore the importance of artificial intelligence.
It's the biggest transformational spending wave we've seen in tech since the internet in 1995. The only thing similar would be iPhone launched 2007, and right now they are the only game in town. And I think as you start to look at it, investors are going to continue to go after this. And I think it's this, the table pounder time for tech because of what this indicates that's on the horizon.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Again, NVIDIA up by 1.8%. Other tech stocks are tumbling, among them Broadcom down now by 1.8%, specifically among chip makers. AMD, Advanced Micro Devices, now lower by 7.2%. Intel down 3.1%. Qualcomm lower now by 1.5%. Recapping lows of the day for the U.S. stock market right now, with the S&P down 34, drop there of 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Brokers studio. We're streaming live on YouTube. Just head over to youtube.com and search Bloomberg Radio. We're also joined by Barry Ritholtz, head of Ritholtz Wealth Management. He's got a podcast thing. What's that podcast called again?
Masters in Business.
Masters in Business. It's awesome. He's got
when does that, Barry, when does the pod, what's the freshest date I can get that? Saturday morning, wake up 8 o'clock or what?
The pod drops at sometime during the day on Friday, and then the first broadcast is Friday night, repeats all weekend. Huge guest coming up this weekend, Greg Davis, Chief Investment Officer for a little shop called the Vanguard Group.
Whoa. Wow.
He is responsible of their $8 trillion for $7.2 trillion I don't know anybody personally responsible for more. Jerome Powell, what's their book? 5 trillion? I mean, even Janet Yellen, the U.S. spends 4 trillion a year, 5 trillion a year. No one I know is more responsible for more money than him.
Masters in business. That's the kind of guest Barry gets every week. So how about that? All right, looking at these markets, I got red on the screen. We have no idea why. Maybe Bailey Lipschultz, he covers the markets for Bloomberg News. What's going on?
We've gotten some listeners writing in.
Right.
You know, after I put out the call.
So the NVIDIA fade.
The NVIDIA fade is what we're hearing from one contributor. Another says Pacific people just waking up at 7 a.m. 10 a.m. East Coast time, but I was like, 7 a.m., wake up.
People at Capital Group, they're on the desk at, like 4 a.m. West Coast time.
That's right. Those mortgage numbers that Charlie just talked about, record highs, maybe that's a factor.
All right, what do you got, Billy Lipschultz?
Well, I know the mortgage rates are impacting my ability.
Because you are a look in the home market, right?
A prospective buyer.
There's no sellers, number one. There's no inventory out there. Plus, rates are going through the roof. It's not a good time.
I'll tell you what you do, Bailey. You got to look for a new home construction because a lot of these companies, and you follow the stocks every day, they're giving buyers lower rates.
There's no new construction.
What construction can I get that makes my commute not an hour and a half, and also I can afford?
You can take the train from Scarsdale. It's 30 minutes.
We can be neighbors. I'm sorry I didn't come to the party, by the way.
What do we got going on in the markets?
No, I mean, we are seeing weakness across semiconductors. Obviously, it's hard to really pick any holes in the NVIDIA print, but right now you got the Philly Semiconductor Index, the SOX down 2.5%. Big underperformer, AMD down 7.2%, trading at the lowest level since mid-May. So maybe a bit of read across there, but it does really seem like when we're talking to investors, just a lot of excitement. You saw the big rally post-market yesterday evening. You saw
in NVIDIA.
And in the Qs, in futures, everything was trading higher.
So now we have the SOX down, AMD down. I can understand if people say, you know what, NVIDIA did so well that they're taking market share from AMD and others. Okay, it could also be buy the rumor, sell the news, and a little bit of profit taking.
Yep, it's, first of all, everyone should be aware, markets are open 9:30 to 4. If you're going to trade after market hours, it's thin, it's easy to move prices around a lot, especially at the end of August, when half of Wall Street is out on the beach, rookies are manning the terminals. It's just not what it's like during the meat of the year. So that could explain some of it.
I'm here. What else you got, Bailey?
Well, no, we're looking at some of the outperformers, though. Again, I mentioned this earlier in the morning. Autodesk up 3.5%, best performer in the S&P 500. Software company beating results on 2Q, raising full-year expectations, talking up billings expectations, free cash flow, revenue. So while all eyes were on NVIDIA, we had some reports. So obviously you're seeing outperformance for Autodesk. Another one, Paul.
Oh, they make AutoCAD.
Yes.
They make, very cool software.
Yeah,
for 20 years ago.
So here's a question I have about earnings. If you remember a couple of years ago, a lot of CEOs like to sprinkle blockchain and crypto references to their earnings. Go back 20 years and it was the internet. Are we starting to see that with AI? People sprinkling this, even if they have nothing whatsoever to do with AI?
Dude, Kroger mentioned it 8 times in their earning report. Kroger.
Now, are they saying we found a way to optimize our product selection by using big data, or is it just nonsense?
And customers can walk in and AI will give them an avocado recipe or whatever.
That's not AI in my mind, but go ahead.
Well, no, that's been the thing, right? I remember talking to investors earlier this year looking for the second and third derivative AI play of all right, AI is going to be the future. How can Intuit implement it? How can some of these other companies actually use AI to bolster margins, actually grow revenue? Paul, I agree. I wouldn't really say if Sweetgreen's implementing AI to front run.
Yeah, but dude, Intuit is a killer use case.
Exactly. No,
killer. Because in Intuit, if you have, for example, I talked to the CEO of Box, right? They not cardboard box, but digital box. You put all your files into the cloud. If you have all of your financials in the cloud and then you let Intuit loose into it, they can just do your taxes themselves without even you lifting a finger. That's awesome.
That's a use case.
Let's see if that actually is true. And by the way, how comfortable are you, given all the hacks and all the lack of privacy issues, how comfortable are you saying to any company, by the way, here's my entire life? Have at it.
I mean, I don't think you have any other choice going forward.
It's a generational difference, and I know young people are very happy to exchange their
I think
privacy.
there's no choice. Otherwise, I mean, you're going to live off the grid like the Unabomber? What are you going to do?
It's not that black and white. There are shades of gray in the middle.
But I will say that's kind of been the thing, though, with a lot of these applications. No one reads the rights of service.
Right.
No one knows when they download or update X or Instagram what they're actually agreeing to give access to.
Remember, there was a controversy over Zoom wanting to, were they going to actually use your video to train their AI?
All right.
You see Enemy of the State?
What's that?
You see Enemy of the State with Will Smith?
No.
And Tom Keane?
No.
I feel like Tom Keane looks exactly like Gene Hackman in that movie. And he's like living in a Faraday cage, you know?
It's a good movie.
Not here. All right, let's move on, kids. Bailey Lipschultz, he covers all the equity markets for us. Appreciate you having him in here. All right, let's talk to fixed income. I'm looking at INGO on the Bloomberg terminal, Bloomberg Index browser, looking at some fixed income. You know where the place to be this year has been? It's been high yield. Corporate high yield's up 6.2% if I look at the Bloomberg U.S. Corporate High Yield Index, which is what we have. Jordan Lopez joins us. He does this stuff for a living. He's a director and high yield portfolio manager at Payton and Regal. Jordan, talk to us about the high yield market this year. How's it been? It looks like it's outperforming. It looks like it's the place to be. It looks like they're not too worried about a recession.
Are you sure Jordan's
Lips
there?
are moving, but no sound. So someone in our terminal.
Jordan, are you muted?
Sorry, can you hear me?
Yeah, there we go.
Yes, now we got you.
Sorry about that.
No worries.
Yeah, I think that's been the story of the year. I think coming into the year, you know, the base case expectation was for a recession, and we're really seeing few signs of a recession, which is really keeping default forecasts low. So if you look at, you know, both macro data on the employment side or the growth side, they're both coming in much stronger than expected. And then when we look at earnings, you know, earnings have been very resilient. So when you take a step back and look at the big picture, I think, you know, some of these draconian default expectations just aren't coming to fruition. And that's really what's driven at least the rally in spreads.
So that's exactly where I was going to go. You know, high yield, look at a fund like HYG, you're getting 5.3%. Investment grade corporate, not getting a whole lot less. Why do I want to go out on the risk scale and embrace high yield over investment grade corporates?
Well, when you look at the broader market, the yields are closer to, you know, mid to high 8%. And so there is still a decent pickup. And like I said, if your default expectations aren't much, you are still getting paid to go out. When we look at the high yield market itself, you know, credit metrics are still very, very strong. They are certainly coming off of what were all-time highs. But, you know, when you look at something like interest coverage ratio or a company's ability to service their debt, it's still very, very well above historical averages. So even if we are to have some sort of recession, we think that you know, most of the companies within the high yield space should be able to manage that, and therefore you are getting paid above something like investment grade.
What sectors do you like out there? I've had a lot of experience in the high yield space, in the media, telecom space, and boy, the high yield market loves those companies. Where are you guys looking?
Wait, are you still going? I mean, hasn't high yield done so well that it's outrageously expensive at this point?
No, you know, spreads are still slightly above historical averages. And you know, back to the conversation about which sectors we like. Media and cable actually have some of the more problematic companies in the space right now. Surprisingly enough, what people don't really appreciate about the market is the energy companies have done exceptionally well.
Yeah.
I know they were kind of the black sheep of the market back in 2015, early 2016. But when we look at a lot of those companies now, a lot of them actually have investment grade credit metrics. And for many of them, we just think it's a matter of time before they get upgraded to investment grade. So although that space trades tight relative to the market, we still think there are several opportunities there for further spread compression.
All right, so I'm looking here. So is it a sense of this high yield market is feeling pretty good about the economy, that they're maybe just not pricing in that risk at this point, or do you really still have to be careful here?
I think where you have to be careful is the companies you choose.
Okay.
So certainly there is going to be some dispersion. There are going to be winners and losers. But if you're able to do your credit work, you can still find plenty of opportunities out there where you get paid a healthy yield, and you can sleep well at night owning a lot of these companies.
How about in the media space? I'm going to go back to my bailiwick here, having punched out a bunch of these over the years. That's a tough sector right now. Advertising, headwinds potentially here, all the cord-cutting issues, and there's a lot of cable debt out there. There's a lot of broadcasting debt out there. What's your feeling on the broader media space?
Yeah, it's certainly been one of the most challenged spaces, and from a fundamental standpoint, you're absolutely right. There have been a lot of slowing of growth in some of the some of the cable operators. It is challenged, but when you look at valuations, a lot of that's already priced in. That's one area where you do see more distressed type of companies. And so from a fundamental standpoint, that's a tough story, but that is being reflected in the overall spreads of the market. And again, like anything else, there will be winners and losers coming out of that space, and there will be some opportunities there.
All right, Jordan. Thanks so much. Jordan Lopez, Director and High Yield Portfolio Manager for Payden and Regal. I think it's interesting there that the high yield market doing really well in front of what everybody's been talking about for the last 12 months of a recession.
Yeah, you could get about 300 basis points. That's what Jordan was talking about. But you're looking at B grade companies. You're not even looking at double B. You're looking at.
So what do you do with high yield with your clients? Do you have anything in there?
Not a whole lot.
Right.
Up until very recently, you weren't. First of all, go back a year and a half. The spread between investment grade and high yield was so tiny, and the returns were so pitiful. Who cares about the difference between 1 3/4 and 2 1/4% if you have to go out on the curve? It's amazing how far everything has spread out. But keep in mind, if you want a safe investment, the 10-year is well over 4%. You could do okay without taking a lot of risk.
Yeah, I mean, you can buy the 2s and get 5, right?
The risk is whether or not we run into rate cuts or a recession in the next year or two.
Yeah, but you're still getting 5%, so you don't have to do anything except for let them mature if you want.
Yeah, I guess. That's
and frankly, the 20s, you get 4.5.
All right, that was Jordan Lopez, Director and High Yield Portfolio Manager, Payden and Regal, helping us out with the high yield space. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Got it, Paul. The bidding war has ended for the Subway sandwich chain. Bloomberg's Gina Cervetti has that report.
Arby's owner Rourke Capital is buying the U.S. sandwich chain Subway after a late challenge from a rival bid group led by a couple of other private equity firms. Before the deal was announced, people familiar with the situation had said that Rourke would value Subway at more than $9 billion. In announcing the deal, Subway did not release financial terms.
Now, Subway has been family-owned since 1965. 2 streaming powerhouses are battling it out over who will broadcast a new group of NASCAR races. Bloomberg's Steve Potisk has that story.
Bloomberg has learned that Amazon and Warner Brothers Discovery are competing for a new package of NASCAR races. If Warner Brothers walks away with a win, it could put some races on its TNT cable network, but it also has been planning to put an expanded slate of sports on its Max streaming service. If Amazon takes it, streaming on its Prime service is the likely outcome, but Fox and NBC are still in a position to renew their existing NASCAR deals.
Now, shares of Amazon right now down about 2%. Warner Brothers down about 0.7%. And speaking of Warner Brothers, its film studio's popular Barbie movie is getting even bigger. Oh, you knew this was coming. It is coming to IMAX. Yes, a limited 1-week engagement begins September 22nd in North America and also a few select international locations. Now, the release will include new post-credits footage that was selected by the film's director. Ticket sales for the Barbie movie have already surpassed the $1 billion mark worldwide. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. A bounce off the bottom, but a lot of red on the screen, with the Dow, the S&P, and NASDAQ all declining. A rally in big tech has fizzled out. As bond yields rise, traders are wading through remarks from a slew of Fed officials. Also, we are awaiting Jay Powell's speech tomorrow morning in Jackson Hole for clues about the outlook for interest rates. So here's where we stand. S&P now at 4409, down by 0.5%. Dow Industrials down 163, a decline there of 0.5%. NASDAQ down 135, a drop there of 1%. NVIDIA, after earnings, remains higher. NVIDIA shares up now by 2.8%. 10-year yield 4.22%, with the 2-year 4.99%. Spot gold 19.19 the ounce, up 0.2%. And West Texas Intermediate crude is up 0.4% right now at 79.17 a barrel. The wireless carrier T-Mobile US is cutting its global workforce by just under 7%. In a regulatory filing, the company said the move will affect about 5,000 positions, mostly corporate and back office staff, along with some technology roles. Shares of T-Mobile down now by 1.9%. Rival Verizon up 0.4%. AT&T shares higher now by 0.1%. Again, recapping, stocks are lower, with the S&P down 26 points, now down 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you very much for that, Charles. Matt Miller here in the studio with Paul Sweeney and Barry Ritholtz. And we have a special guest. We were talking about Hannah Elliott earlier from Bloomberg Pursuits. We've got her on the cam from Los Angeles. Hannah, thanks so much for joining us. I wanted to talk about the car that I was driving last week, which is, I think, widely controversial, and that's the BMW XM. It's a dedicated M car, and they haven't done one of those since the M1. And this means basically their speed shop, their Skunk Works unit, is making this, and they're not going to have a regular kind of street version of it. But they detuned the 4.4-liter twin-turbo V8 to be less powerful than it is in the X5M, and there's no air suspension, and a lot of people think it's kind of ugly. And first, I want to get your take on it. What do you think about this big behemoth of a hybrid?
Well, I have to say BMW is making us work really hard to really like them these days, and I don't really understand why. I do agree that their styling choices and the choices they're making with their engines and power plants right now are a little bit confusing and even puzzling. I have to say, my disclaimer is I haven't driven this vehicle, so I can't speak to that, but I have driven the iX, which is the electric version, which I thought was very capable, but unfortunately didn't look great. It sounds like you felt a little bit the same way about this one, Matt.
Yeah, we're looking at pictures of it now. For those of you only listening, you go to youtube.com. You can stream us live by searching for Bloomberg Radio there. I mean, I personally like it because it's so big and aggressive. But I think, first of all, it's way overpriced, $167,000 for a car that doesn't even get the sunroof option. I could understand if they're saying, like, because it's a track car, we want the stiffness and the low weight of just the flat roof. But why then detune the V8? And there's no air ride suspension, so it's not like a luxury SUV for the well-heeled. It's not like a Kardashian mobile. So I just don't really get what they're doing with it. And Barry, I'm a huge fan of the brand, and I know you are too.
Yeah, I'm gonna give this car a sort of backhanded compliment. This is the least ugly new BMW in a couple of years. Maybe because I don't know what they're thinking with those giant grills that are on the 3 and 4 series are just horrific, and some of the choices that have been made I understand you want the electric vehicles to have a different look, and so they went for something that was a little less rounded, let's say, than some of their other stuff. This isn't a terrible looking car. I don't have a problem with no air suspension. They're notoriously quirky. They break and they're really expensive to repair.
It's $167,000.
That's a whole different question. Hannah can answer. What are they thinking? Who are they competing with the XM?
You know what? This seems to me like a case of we're going to price it again. We're going to price it compared to the people that we think we're competing against, which is probably Porsche and Mercedes. But the price is a bit aspirational. Like BMW is hoping that the price means that they're competitive with those other vehicles, but I just don't think the product is. And when you can get a Cayenne for less than that, again, I think you're absolutely right. The price does seem wildly inappropriate.
Well, a Cayenne, you're not getting the GTS or the turbo. What are you getting for that?
Yeah, you can get
money?
the Cayenne Turbo for less than 170.
Oh, really?
Yeah, for sure. And this goes up against the Cayenne Turbo Hybrid. And I think you're right. That's what they want, but you can't beat that car.
Yeah, that's tough.
Right. That's the thing. Just because you make your price the same as another company's product doesn't mean your product is comparable. It doesn't work like that, I don't think. You know, certainly consumers are not dumb, and they're going to pick up on that really quick.
I did drive the snot out of this thing, and it was super fun. I mean, it's a gigantic, obviously, beast, but it's got this active electronic anti-roll bar in it that holds it flat and neutral, even when you rip it around corners at speeds that are super illegal. But I feel like I could get a lot more car from the same manufacturer for so much less. I'd much prefer the X5 if you need the SUV. If you don't need something like that, I much prefer the 2 Series. Hannah, what do you think about BMW in terms of their, competitiveness in other segments?
Well, obviously they're competitive in the X5 and the 2 Series, and of course, their sedans. They have been. I think where it gets confusing is when BMW is doing the hybrid things, the electric things, and they're also, let's not forget, doing hydrogen. It's just a little muddled to me, and I think their messaging is muddled, and they haven't really figured out what it means for a BMW to be running a hybrid or an electric power plant, whereas other companies just seem miles ahead in that regard.
Hannah, I know you just spent the past week at Monterey. What'd you see there? And
oh man,
did it reach your expectations that this is simply the best auto show in the world, anywhere, anytime?
Yes. It's a little bit mind-blowing. We saw more than 20 new car debuts. This is obviously the new auto show. If you want to see new cars, you go there. I'll tell you what really interested me, which was this $300,000 Ford Mustang GTD. Ford's Jim Farley has made no bones about the fact that he's going right after Porsche with this Mustang. It's a street-legal Mustang based on the car that they're going to run in Le Mans next year. And Jim Farley told me straight up, hey, I've been a fan of Porsche for 50 years. I've been watching what they did with their racing programs, their GT3 cars, their GT2 cars, and we want to do that with Mustang. There's no reason why we can't. So I'm very interested in that particular car.
$300,000 for a
that's more than
Ford
a GT3.
Mustang.
I mean, they price themselves higher than any Porsche competition.
You could get almost get two of the MXs for that much money.
Yeah, you could. I mean, here's the thing. I think if the race car version of that car wins next year at Le Mans, all will be forgiven, including the rear transaxle on the production car and the front engine and the pricing. Honestly, I think it all goes away if they win next year. So we'll see.
What else did you see that caught your eye?
Okay, there's I'm sure you've read about it, the $30 million Rolls-Royce drop tail. This is part of their coach-built series, which basically means consumers can design a car from the ground up. They're making 4 of them. They don't want to say who's buying it, but you have to imagine this is a international family, longtime collectors. Rolls-Royce says it's not about just who can come to us with a blank checkbook. It's not just about people who own 20 Rolls-Royces. It's actually a mix of things, and it's people who are engaged with the brand. But this $30 million drop tail, it's a roadster actually, was pretty striking.
It looks hot. I mean, I saw it on your either on your Twitter feed or your Instagram feed. One of the other things that I saw on your social media is the new Lamborghini, or I guess it's a prototype,
Yeah.
right?
Electric. That
I
looks
Yeah,
think
the
it looks
Lanzador.
so hot.
Yeah, that looks
so
great.
hot.
I'm
Me too.
excited about that.
Me too. It's all electric, and I have to say there was some grumbling among, of course, the Lamborghini purists that what
Always.
is happening? We swore we'd never do this, et cetera, et cetera, et cetera. But that car looks amazing. That's a Mitya Boker creation. Mitya is the head designer of Lamborghini. He actually was formerly at Porsche. He's actually German, but he's making some great Italian cars. This is his latest concept. I think it looks fabulous, and they kind of have to make it, right?
Yeah, they have to go electric at some point. Of course, Lamborghini's in the Porsche stable. They're all Volkswagen
VW or Audi, yep.
properties. But
Yeah.
I can't wait to see that.
All right, great stuff. Hannah Elliott, always bringing the A-game. Hannah Elliott, star writer, Bloomberg Business Week, talking cars with a couple of car geeks. What could go wrong here in the Bloomberg Interactive Broker Studio? Concourse d'Elegance. I've been there many, many times. Very, very cool on the Monterey Peninsula. Right now, let's head down to Washington, D.C. Nancy Lyons has got world and national news for us.
Thanks so much, Paul. Some of Donald Trump's supporters are in Atlanta, where the former president will surrender on charges connected to Georgia's election investigation. This man is waiting outside the Fulton County Jail.
He needs to be back in the White House and making us have a big country again and making it so that we can be energy independent and we can be a rich country again instead of what Biden's doing.
Trump will be booked and photographed when he turns himself in later today. In the other 3 jurisdictions where he's under indictment, he did not have a mugshot taken. House Republicans are moving to start an investigation of Fulton County DA Fani Willis, saying they have serious concerns about whether her case against Trump and 19 others is politically motivated. They've written a letter asking her to turn over documents and materials. The first debate of the 2024 Republican primary season is in the books, and of the 8 candidates who took the Fox News stage in Milwaukee last night, former UN Ambassador Nikki Haley is being declared the most pleasant surprise by the Wall Street Journal editorial board. Haley says there's more where that came from.
We have to focus on the issues at hand. How do we get inflation down? Too many families can't afford groceries. They can't afford their rent. They can't afford gas. They can't afford child care.
Nikki Haley spoke with Bloomberg this morning from Milwaukee. Russian President Vladimir Putin is continuing with his regular schedule following yesterday's crash that's believed to have taken the life of Yevgeny Prigozhin, the mercenary leader of the Wagner Group and one-time Putin chef. In a televised interview, Putin expressed condolences today for Wagner members who lost their lives in the plane crash. Prigozhin's demise comes 2 months after he led a mutiny that threatened Putin's grip on power. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ remain in the red. We are off session lows, but that rally that we had early on has completely faded, with the S&P down 25 right now, lower by about 0.6%. Tech stocks were leading the way higher. They're leading the way lower right now. We've got the NASDAQ Composite Index down 122 points, down by about 0.9%. The NASDAQ 100 Index down 1.1%, and the Russell 2000 Index of small cap shares down by about 0.8%. The Dow lower by 164 points, down by 0.5%. NVIDIA shares after earnings holding on to a gain now of 3.6%, with NVIDIA behind us. The next big event for markets will be tomorrow morning's Jackson Hole speech from Fed Chair Jay Powell. Investors will be listening for any remarks about the path of interest rates, the outlook for inflation, and any comments about a recession for the U.S. economy. Jay Bryson is chief economist at Wells Fargo Bank, and he was a guest this morning on Bloomberg Surveillance.
I still think it's a little bit premature to say that there won't be a modest recession next year. I mean, monetary policy works with long and variable sort of lags. We are seeing some slowing in the economy, but in general, I would say they haven't crushed the economy at this point, and inflation is receding.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. So again, NVIDIA shares, they're up 3.7% right now. Other chip names, though, they are fading. Broadcom down 1.2%. Advanced Micro Devices now down 5.7%. Intel down 2.5%. Qualcomm lower now by just about 1.1%. 10-year yield 4.22%, with a 2-year that's now at 5.00%. Spot gold up 0.1%, 19.18 the ounce. And West Texas Intermediate crude up 0.4%, 79.18 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. We're joined today, Barry Ritholtz joining us. We appreciate him spending some time with us here in our studio here. You can stream us live on YouTube.com. Just go over there and search for Bloomberg Radio, and that's where you'll find us. A little bit of a M&A trade here in the, I guess, the restaurant business, the fast food restaurant, the sandwich business. Roark Capital is in a deal to buy Subway for more than $9 billion. Roark Capital, as a private equity firm, owns brands including Arby's, Dunkin', Buffalo Wild Wings, and rival sub-store Jimmy John's. Let's break down this transaction, get a sense of what's happening in the restaurant business. We check in with Mike Halen. He's the senior restaurant analyst for Bloomberg Intelligence. Hey, Mike, talk to us about Roark Capital and this deal for Subway. What's going on here?
Yeah, Roark has a long history of activity in the restaurant space. They currently own a ton of brands, a lot of great brands that you mentioned. They've been very active in the space over the last decade or so. And this is, another interesting addition to their portfolio. To your point, they own Arby's and Jimmy John's. That's through their Inspire Brands group. And so, they've had a lot of experience turning around brands. They've had a lot of experience running sandwich shops. And so they see some value here. They pay 13 times EBITDA, which is kind of high considering some of the problems that they have. But, clearly with the scale that they have, there is definitely some potential in this brand.
So, Mike, this is Barry Ritholtz. Subway has 37,000 stores across 100 countries. What is it that Roark Capital is looking for? Is it the footprint? Is it the real estate? Or is it just, hey, this is a lot of potential that's been underperforming?
I think it's the latter, right? This is a franchised brand that, spits off a lot of cash flow, right? And so that's very attractive to somebody like Roark. You can lever it up. and really juice the returns on something like this. This is a chain where average unit volumes have really lagged over the last 5, 6, 7 years, and average unit volumes are less than $500,000. That's less than half of what Jersey Mike's is doing. They're at about 1.1 million. So there's definitely some room for growth, and I think that the chain has been moving in the right direction. Adding slicers is going to improve. What they've done recently has improved the quality of the meat. They spent a lot of money on advertising with very high-profile celebrities. They've made some menu changes, and they're closing a lot of stores, right? And so when you close your underperforming stores, they've closed 6,000 stores, I think, since 2015 or 2016. Wow. Even they're still closing it. I think 600 stores or so were closed in 2022. So when you start pairing the underperforming stores, the returns on investment, cash on cash returns start looking a lot better for franchisees. And then franchisees are from outside the system, might kind of look back into Subway again, right? So I think they're all pushing the right buttons. But you can't turn around an aircraft carrier on a dime, right? It's going to take some time.
So let's address that, because Jersey Mike's feels younger, newer, fresher. They haven't been around quite as long. Subway, this is a storied brand that's been around, more than half a century, and it feels like it's kind of gotten tired and stodgy. How can you inject new life into a company like this when, there's a lot of history to overcome?
Yeah, I think quality is usually a great starting point for a good turnaround. And to my point earlier, spending money on slicers is a good start. But, maybe there's some other things that they need to do. Maybe it's upgrades on the quality of the meat. Maybe it's upgrades on the quality of the bread and things of that nature. But, to your point, you have to get people in the door, right? Jersey Mike's is bringing twice as many customers, maybe more, into their stores. And so by proxy, the food's going to be fresher, right? Inventory is not going to sit there in the deli case. So, it's going to definitely take some time. But, listen, they have this massive footprint. They have a ton of scale, right? So they can source product more cheaply than anybody. They're in a lot of locations that Jersey Mike's isn't. So there's the risk of Jersey Mike's continuing to move down the street from them and kind of maybe take some of their market share if they don't act aggressively enough. So it's going to be interesting to watch. But Roark Capital and Inspire Brands, I don't know if they're going to fold this into Inspire Brands. Both have a tremendous track record of turning around restaurants and running great restaurants and restaurant brands. So it's going to be interesting to watch.
Hey, Mike, you cover the entire restaurant space. Where's the consumer spending money these days? What do you see? What are the trends out there, and who's doing a good job in the restaurant space?
Yeah, things are slowing a little bit. I was talking to a client yesterday, which was kind of on the opposite side of the spectrum. What had surprised me on the downside, and that's fine dining. And I've heard, some issues with some of the high-end retailers, and it looks like that's kind of spilling over into restaurants, which was interesting and kind of surprising, right? Because we've had this K-shaped recovery where people that on the higher end of the income scale were able to work from home and during the pandemic and saved a lot of money because they weren't going on vacations and going out to restaurants, have all this disposable income and continue to spend, whereas the low income consumer and middle income consumer were more were tightening their belts a little bit. Who's doing well? There's a couple chains though that continue to do well. McDonald's, even in a slowing environment for restaurants, tends to have a pretty good advantage. Like Subway, they have a ton of scale and they can offer price points that competitors just can't match. And so their sales trends continue to be very strong. But we've seen a slowdown. In the second quarter, a few chains saw some slowdowns versus 2019. Starbucks, Chipotle, a bunch of names that we cover started to slow a bit. But in general, those fast casual, those quick service type names and fast casual type names are probably better positioned than the full service chains that we cover, some casual diners, companies like Cheesecake Factory and Brinker.
And of course, my favorite, as you well know, is Cracker Barrel. Stocks at a 52-week low today, off 13%. The Country Boy breakfast to die for. Just loosen the belt, sit right down, boom, you hit it. Mike Halen, senior restaurant analyst for Bloomberg Intelligence, joining us. I know what I'm talking about when it comes to restaurants, but Mike Halen is the expert, so we appreciate that. S&P 500 off 0.5%. I will keep that in mind. Barry Ritholtz, thanks for stopping by, giving us some of your time on Thursday. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. NVIDIA earnings crushed forecast for the quarter as revenue jumped 88% to $13.5 billion from a year earlier. But Bloomberg's Alex Webb said keeping up that same pace, it's going to be tough.
There will be competing products coming out. A lot of the companies who are currently their customers, the likes of Google, the likes of Microsoft and Amazon, they are in many cases developing their own custom chipsets for AI applications. And that is something that at some stage might start to eat into what NVIDIA is doing. But at the same time, that it may not be happening anytime soon.
Shares of NVIDIA right now up nearly 3.5%. And another issue for Boeing, the company's largest supplier, improperly drilled holes in a piece that helps maintain cabin pressure of the 737 MAX jet. Bloomberg's Simone Foxman has that story.
This adds to challenges for Boeing in trying to get back to its 38 jets per month pre-COVID level target that it wants to produce. It's been trying to ramp up 737 production to that. Now, the good news is the FAA says this is not a safety hazard, but this is really offsetting some positive news that we also heard after hours yesterday, that Qantas was ordering 12 Boeing 787 Dreamliners. That's doubling the number that it has.
Now, shares of Boeing right now down nearly 3.5%, and shares of its suppliers, Spirit AeroSystems Holdings, right now that's down, more than 13%. And Walmart is planning its longest drone deliveries yet by teaming up with Alphabet's Wing unit at 2 Dallas area stores. The drones will be able to drop off items as far as 6 miles from the store. Shares of Walmart right now down a fraction, same for Alphabet. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
A broker studio in New York City. S&P 500 off 0.6%, and NASDAQ off 0.9%. Yields a little bit higher here. 10-year Treasury up about 3 basis points, 4.22%. The 2 years back at that 5% level, so we will keep an eye on that. A little bit of a bump to WTI crude oil. It's up about 0.3%, $79.15 for WTI crude. Right now, let's head down to Washington, D.C. We'll get World International News with Nancy Lyons.
Thanks so much, Paul. Security is ramping up outside the Fulton County Jail in Georgia, where former President Trump will be surrendering later today. Brown University political scientist Wendy Schiller says Trump's mounting legal issues will eventually raise a question for Republican voters.
Does this start to really wear on some segment of the Republican Party in terms of the voters? All these trials, all this sort of mugshots, all these sort of, charges repeated over and over and over again. And will there sort of be some idea, wait a minute, there is an alternative? And I think that's the problem for Trump for skipping the debate.
Wendy Schiller of Brown University spoke on Bloomberg Daybreak. Ahead of his court appearance, Trump has replaced his top lawyer in Georgia, Drew Findling, with Atlanta-based criminal defense attorney Stephen Sadow. House Republicans now say they're planning to investigate Fulton County DA Fani Willis as she prosecutes Donald Trump and 18 others. The chair of the Judiciary Committee, Jim Jordan, has written a letter to Willis in which he says there are concerns about her actions against Trump being politically motivated. Well, there is one takeaway from last night's Republican presidential debate. Vivek Ramaswamy is drawing renewed interest. The entrepreneur is the top searched debate candidate online, according to Google Trends. He took plenty of pointed attacks from the other candidates, but also dished out some of his own.
Let us be honest as Republicans. I'm the only person on the stage who isn't bought and paid for.
Political analyst Larry Sabato says Ramaswamy did reveal his lack of knowledge on some key issues.
Many of his answers were ridiculously oversimplified and in some cases just utterly absurd. But he was the fresh face.
The next Republican debate is set for September 27th at the Reagan Institute in California. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
Hey, Nancy, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. And yes, we are streaming live on YouTube. So just head over to youtube.com and search Bloomberg Radio or Bloomberg Global News. Interesting story here. Rolex is buying luxury retailer Bucherer in a deal that will give the biggest Swiss watch brand a major presence in consumer sales for the first time. Bucherer, a Swiss company, has more than 100 stores worldwide and will continue to operate independently and keep its name, Rolex said in a statement. Financial terms were not disclosed. The acquisition will pave the way for Rolex to begin widespread sales of its watches in its own stores for the first time. There's currently only one store in the world owned and operated by Rolex, and that one is located in its home city of Geneva. With more than 9 billion Swiss francs, or $10.2 billion in annual sales, Rolex is the top Swiss brand, producing more than 1 million timepieces per year. So a big move in the luxury watch space. Stock of the day, stock that folks were really focused on the entire week was NVIDIA. It just put up an extraordinary forecast again yesterday after the close when they posted their numbers, and that stock is up 3% today at an all-time high. So the stock continues to perform and just put up an extraordinary number in terms of forecasted revenue, just cementing once again that AI is a major growth area within technology, and that NVIDIA is extremely well placed to kind of lead the way. So that stock has just had an extraordinary run this year, up 232% year to date is NVIDIA. Not helping the markets though. The S&P 500 is off 0.7%. The NASDAQ is off 1%. A lot more coming up this afternoon. We'll get a view of Jackson Hole. Our surveillance team is there. They will be broadcasting tomorrow morning from Jackson Hole. Sound On with Joe Matthew. That comes up right now.
Of
0.7% after a 1% gain yesterday. 44.05, 44.06, the level on the broader benchmark. We do see yields rising back up again as investors sell debt. Right now, the 10-year is yielding 4.2234, and yields are rising across the curve. The Bloomberg Dollar Index, maybe because of those higher yields attracting investors. So right now, 1241 is the level for the dollar against 10 major trading partners. NYMEX crude is trading higher as well, just 22 cents up, still under $80 a barrel right now. $79.11 is what a barrel of West Texas Intermediate will cost you. Now, outside of earnings, NVIDIA earnings were drivers this morning. Investors are eagerly awaiting Fed Chair Jay Powell's comments from Jackson Hole tomorrow. We got insight into what the Fed might do next when we caught up earlier with former St. Louis Fed President Jim Bullard, who says the pickup in economic activity this summer could delay plans for the central bank to wrap up its rate increases.
This reacceleration could put upward pressure on inflation, stem the disinflation that we're seeing, and instead delay plans for the Fed to change policy.
How
talk about base effects fading and going the other way during the second half of the year, so we'll see if that occurs. You know, I like to look at the 12-month numbers because they rinse out some of the seasonal effects, and so you could get at least a pause in the disinflation or even a little bit of reacceleration. I think that would suggest a higher rate profile for the Fed than otherwise. So yeah, it could happen.
Chairman Powell and the other members of the committee have been very careful in what they've said about additional rate increases because they seem to feel they're pretty tight right now, and they want to make sure they don't tip the economy into recession. How great a danger do you think that is?
Yeah, I don't know. I think the committee should take a little bit of a victory lap here. I mean, the unemployment rate is 3.5%, and we were very aggressive in 2022 and into 2023. But the real side of the economy has been growing faster than potential. Labor market is still very strong. That should support consumption, which should continue to proceed apace here in the second half of 2023. So, and in the meantime, CPI inflation, headline CPI inflation was actually on a 12-month basis was 9% at one point, now 3%. And the core measures are coming down as well. So it really looks like the 2022 policy, including 75 basis point hikes, 4 meetings in a row, has a good chance of success. You never know, but it seems like it has a good chance of success here. So if there was ever a soft landing, taking 6 percentage points off the headline inflation rate without an increase in unemployment would sound like a soft landing to me.
All right, Mike McKee joins us now live from Jackson Hole. Mike, great interview there with Jim Bullard. And I wonder what we can expect today from, or tomorrow, I should say, from Jerome Powell. If you look at the minutes, we know that the Fed considers its rates restrictive already.
Yeah, exactly. And I think what the point Jay Powell will make tomorrow is the one he's been making for some time now, that the Fed is going to keep rates high and assume that that will help bring inflation down. If it doesn't, they could raise rates again. And that'll depend on what happens with the inflation data. We get 2 more inflation reports before the next Fed meeting. So I don't think he's going to go out on a limb and make any promises about what will happen next quite yet. We had 2 other Fed officials speaking today, Pat Harker, who said the same thing that he's been saying. They've done enough and they should probably think about pausing, and Susan Collins, who said she could go either way. So I think at this point there's not much percentage in Powell saying a whole lot more than what the Fed has been saying for the past several weeks since the last meeting.
We know from Janet Yellen, of course, that the minutes can be massaged, and that the Fed may be split until it makes a unanimous decision at the end. Are they all on the same page?
Well, there's a difference between strategy and tactics. The strategy, they're all on the same page. They all want to bring inflation down. So the strategy is to keep interest rates moving up, either leave them where they are or raise them a little bit. The tactic is
actively
whether
or passively.
you do it by the actively or passively. Let the numbers go the way they are. That's the division, but they are agreed on the path. So at this point, you wouldn't say they're terribly divided.
For those of us who have not been to this symposium, Mike, how does it work out? Do the important people arrive today? Do they all go to the same bar? Does everybody spend, the weekend there? What's the weekend turn out to be like?
Well, tonight is the kickoff dinner, so everybody will be here by this afternoon, but some already have been here. Some central bankers from Europe and from the United States come out with their families a little early to spend some time, and then most of them get back by the end of the weekend to their homes because they have to get back to work. I know the ECB has a meeting coming up soon, so they'll be back at work right away, and the Fed governors and bank presidents are going to get back as well. So by Sunday night, this place will be back to tourists only.
All right, Mike McKee coming to us from Jackson Hole, of course, the Fed Symposium. Well, I guess, as you told us, the dinner kicks off tonight, but then tomorrow we get the speech from Jay Powell. We'll be watching for that. And, of course, Bloomberg Surveillance has special coverage starting at 8 a.m. Tom, John, and Lisa are all there on assignment. Coming up, the NVIDIA rally. We saw those shares shoot up another 7% at the beginning of the session today. Wanes a bit in the later trade. We'll talk about the record high they hit and why some investors are taking profit, and the company's earnings, of course, knocking the cover off the ball due to AI. Stacey Rasgon joins us next to talk about NVIDIA. This is Bloomberg.
IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Friday, European Central Bank President Christine Lagarde sits down with Bloomberg's Tom Keene for a conversation on the political economics of Europe and the permanent shifts in the global economy. Tune in for the exclusive interview live at 4 p.m. Eastern from Jackson Hole, only on Bloomberg.
This is Bloomberg Markets. I'm Matt Miller. Shares of NVIDIA drove the NASDAQ and the broader market higher this morning before pulling back. Stacey Rasgon is Bernstein Managing Director and Senior Analyst. And Stacey, we still see those NVIDIA shares up, but the rest of the market has come off a little bit. Talk to me first about the earnings report and how impressed you were yesterday with the raised outlook.
Yeah, look, it was clearly a good report, a great report. Expectations had been going up markedly into the print, and I'll be honest, like I've been doing this job for a while, like I've never seen a print that was as widely anticipated as this one probably was. So expectations were very high, and they blew through even those elevated expectations, both for the quarter and the guide. They were looking, the guidance for the quarter was 11 billion and it implied about 8 billion in data center, and they did over 10 billion in data center, and I can't remember, 13 plus in revenues, and the guide was for 16 billion in revenue, which probably implies 12.5 billion plus in data center for next quarter. Very, very strong numbers. As a result of that, gross margins are going up. Their OPEX controls are, the numbers are just going up like materially, like massively, again for the second quarter in a row. It's like there's not a lot to say. Like it was a great print in the wake of all the AI hype they delivered.
Well, I have a few questions, obviously. First of all, how do they get enough supply to meet demand? I mean, they don't make their own chips, right? They go to TSMC for that. How do they convince TSMC to give them enough, since everybody wants chips from TSMC?
Yeah, but they're big, right? I don't think they're having a problem, convincing TSMC to give them. So they probably want more than they're getting. Like let's be clear, but they're getting a good amount of supply. It does take time to bring it up, and they actually said they will be ramping supply sequentially every quarter, starting through this year. And my guess is through much of next year, their supply situation will be improving every quarter. And like right now, they're actually supply driven. They're shipping everything that they can make and then some. But they will be improving that supply sequentially every quarter going forward for a while.
So the other thing is they're up 233% year to date, right, Stacey? So a stock like this, they can't just meet expectations. And now they've set our expectations for revenue next quarter or this current quarter at 16 billion. Are they sandbagging a little bit? Are we really going to see 17 or 18 billion?
I would say that NVIDIA in general, when they put out a number, they believe typically that they can beat it. So yeah, this current quarter they guided 11, they did 13 plus. Next quarter, if they're guiding 16, they probably think they can beat it. Yeah, probably.
What about the buyback? I thought that was a little bit odd. They approved another $25 billion in buyback. Can't that money be better spent elsewhere? Couldn't they be buying another company?
Maybe. By the way, they're still going to be generating an absolute ton of cash. So this could be part of it. They're generating so much cash, they've got to do something with it. So that may be part. The other is, their existing buyback was almost done, so they got a new authorization. Fine. In terms of M&A, like you have to remember, like M&A in semiconductors is actually tough from a regulatory standpoint, particularly around China. We just really recently had the Intel Tower deal basically get stymied because they couldn't get approval.
Well, they tried with ARM.
Yes, M&A in semis in general is not easy to accomplish simply because of the geopolitical and regulatory environment. There are probably things that they could do, and I won't speculate on air like what those might be, but there are things that they maybe could do. But they've got to do something with that cash. And I've still got, in my model, I think I've got them buying back $20 billion a year going forward. And I've still got them just piling cash up right and left, even after that. Like, they're going to be generating a lot.
How much of a concern is the U.S.-China relationship and the fact that I think Jensen Huang pointed out himself in the call that, they've already throttled back the GPUs they're giving to China, and if the regulation gets narrower, they're going to have to lose out on even more revenue there.
Yeah, I'll be honest. I think that's going to happen anyways, like whether or not they narrow the regulations. It may happen quicker if they do, but think about it this way. So they've already put restrictions on what can be shipped into China. And NVIDIA has designed, there's thresholds around bandwidth and performance that prevent you from shipping. NVIDIA has designed products that come in below those thresholds that enable them to ship. And so the speculation is that they'll lower those thresholds even further. Fine. But even if they don't, they're never going to raise the thresholds. And so over time, the gap between what's legal to sell in China versus the rest of the world is going to get bigger and bigger and bigger. So in my opinion, that China long-term opportunity is probably going to be under pressure regardless. If they do narrow those sanctions or make them tougher, you'll probably get to that point quicker. But over time, my own personal opinion is it's going to happen anyways. In the near term, doesn't matter. Demand is off the charts. They've got plenty of demand to backfill. If, like, hypothetically, they couldn't ship stuff to China tomorrow, they've got plenty of other folks that are willing to take those wafers now. But over the long term, I mean, this is something that needs to be thought of. Yeah.
What's your view on the valuation? I mean, what are the most important metrics to look at, Stacey? On the Bloomberg terminal, I see, forward earnings. Right now, they're trading at 48 times. What do you look at?
It's less than that. It's 30 times on where next year's ending up.
You're talking about fiscal 25, right?
Fiscal 25, which is effectively calendar 24 for them. It's like 30 times earnings. It's not expensive. And it's getting cheaper today because, like, my numbers went up, I don't know, 60% or something. The stock's up like 2 or 3. The stock is cheaper today, materially cheaper today than it was yesterday. Similar to last earnings, when post-earnings it ended up materially cheaper, even after running up, I don't know, 25% or something after the print. Numbers went up a lot more than that. The stock's been getting cheaper for months. It's not that expensive given the growth profile.
You got a price target here? Right now we're looking at 485.
Yeah, we went up to a 675 last night.
All right, Stacey, great to get your insight here. Hope we can get you in the studio next time. Stacey Razgon talking to us about NVIDIA, on which they have at Bernstein a buy rating and a 675 now price target. We're looking at 485.93 at the moment. Still ahead, what is going on with VinFast? This company, which makes EV, cars and bikes, has a bigger market cap than Ford and General Motors put together, and you maybe have never even heard of them. One man owns 99% of the company, and it's worth $120 billion. Jim Chanos, the famed short seller, calls the valuation insane. We'll talk about it next. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy in 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
This is Bloomberg Markets. I'm Matt Miller. The U.S. has added more than 1,200 public fast charging stations in the past year, expanding the reach of a cross-country, EV road trip. But is it enough? Bloomberg's Kyle Stock wrote about this for Business Week, and this guy knows what he's talking about when it comes to driving cars. So, Kyle, where are we, in this evolution? Are we ready yet for everybody to get an EV?
We're not ready yet, but the electron deserts are disappearing. So America has long been a laggard on both EV adoption and charging infrastructure for a lot of reasons behind Europe and Asia. And we're sort of starting to catch up. So 1,300 new stations in the past 12 months, basically since last summer. That's about a quarter of all the stations in the country right now. This is public fast charging stations that aren't Tesla stations, I should say. So it's a lot of growth. And what's interesting to me is a lot of these stations are going in rural areas where there aren't a lot of EVs to begin with. And I think that's notable because it's connecting the dots. It's making these kind of road trips possible. With this piece, I looked at Route 50, which is like this iconic coast-to-coast highway. It's scenic. It's kind of off the beaten path. It's not a major interstate. You're not driving this unless you're like taking a road trip. And as of June, this thing is doable in an EV because of a couple new stations that are, pretty specifically placed. There's one in Southeast Colorado, Lamar, Colorado, that connected this 330-mile gap in the road for EV travelers. So this is happening kind of all over the country. So if you have an EV, there's a lot of places that are safe to drive now that weren't a few months ago. And once we get full coverage, then it becomes about, redundancy and having enough stations that you don't have to wait for 25 minutes just to be able to plug in your car, which is what happens in some of the denser EV areas like California.
I feel like there's a very steep learning curve. So I have not owned an EV. I test drive EVs sometimes, and for me it's kind of a pain to find the stations, to find a station that works, to find a station where there's not already 3 or 4 people fighting about who's next. But I noticed that EV owners, for them, it's like riding a bike. They know how to do it and it's easy.
You figure it out quickly. You figure out the networks you like and the networks where maybe you have free charging for a year or 2 or 3. People also figure out their home charging. So unless you're going on a trip, you're pretty well sorted. Like if you own an EV and you have a garage, you are charging at home 90% of the time. And then the rest of the time you're sort of doing your homework. But yeah, there is a learning curve and there is a little bit more planning to it. But it's also it's a real luxury to never go to a gas station or to go twice a year,
I'm sure, although I love that smell. What about Tesla versus not Tesla? I mean, is it a huge advantage to be able to charge up at the Tesla supercharger stations?
It still is, but it's shrinking. The rest of the network collectively is getting sort of comparable in scale. Tesla still has way more plugs, way more cords, but in terms of the where the stations are located, it's less of an advantage. Also, a huge part of the Tesla network is going to be open to non-Tesla drivers sort of towards the end of this year, early next year, thanks to this deal they inked with the Biden administration. So it's going to be less of an issue. It'll be more of Tesla will be sort of a fueling station like a 7-Eleven.
Right. Kyle, is the story in this issue out today?
It is published yesterday online, and it's available on the terminal. And
I like the paper magazine. Kyle Stock, thank you very much. You can read his article in Bloomberg Business Week. You can pick it up on newsstands today, or if you want, you can get it on the internet. Sticking with EVs, shares of Vietnamese car maker VinFast jumped more than 50% again today. The company is now worth more than $100 billion. That's a higher market cap than Ford and GM put together. Bloomberg's Bailey Lipschultz has been reporting on this, and one guy owns 99% of the company, so he's going to be on the Bloomberg rich list very soon.
He's already on there, but the big thing is, Matt, he can't sell because this company went public through a SPAC deal. Only about 1% of the shares outstanding are actually available for trading, so that's why you're seeing these weird, really sharp swings to the up and downside over the last few weeks since the company went public.
All right, so who is this guy? What is this company? And who's bidding up the shares?
Yeah, so the chairman and founder, Pham Nhat Vuong, I probably butchered that, owns about 99% of this company. So when you look at the company going public through a SPAC deal, obviously investors buy the blank check shares of the blank check, they find a target, they merge, company goes public. So more than 80% of those investors redeem their shares. So there really is just a low number of shares outside trading. So that's why when people were buying these shares and we're seeing millions of shares get traded, you see massive spikes to the up and downside. And when I talk to some of my contacts who are short sellers, they're basically pointing at this saying they would love to short it, but they can't get a borrow because it's so illiquid and there are so few shares available.
This video looks legit. I mean, it's a real company that makes real products.
They have vehicles. They have vehicles that are out there. They probably have not had the best reviews, broadly speaking, relative to many others. They've had their own issues with costs for expansion for some of those deliveries. Not the best reviewed companies, but at least when you go on their website, you can order their VF9 right now starting at 83 grand. So I don't know if that's next for the Miller household.
No, that sounds a little bit pricey, though. I look at Ford, I look at GM. Together, they're worth $93 billion, right? And VinFast is trading at, what's the market cap right now?
120 maybe?
Yeah, 106 right now. But still more than those two U.S. automakers. Bailey, thanks very much. Bailey Lipschultz covers, for the most part, the meme stocks for us here at Bloomberg and sometimes the Vietnamese EV car makers. Coming up, retailers are anticipating sales drops later this year despite the upcoming holiday season. More on that next. This is Bloomberg.
Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's for the Fed to respond to it. And this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy, but man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
This is Bloomberg.
Welcome to Bloomberg Markets. I'm Amber Canwar.
And I'm Matt Miller. Let's take a look at what's going on in the markets at this hour. The S&P 500 taking another leg lower, now down 0.9%, giving up almost all of what we gained yesterday. 43.98 is the level on the S&P 500 right now. Investors are selling the 10-year note right now, pushing the yield higher about 3 basis points. We see it at 422.14. The Bloomberg Dollar Index also rising right now about 1/3 of 1% at 1241. A little bit of strength there in the dollar against the euro and the pound. The NYMEX crude price is up by 16 cents a barrel, so not a big move, and it's still under $80 right now at $79.05 for a barrel of West Texas Intermediate. Amber, what are you looking at?
Well, it seems like we're through the major catalyst of the week, which was NVIDIA, and so now investors concerned about what Jerome Powell might have to say tomorrow. NVIDIA is an interesting one, barely up now, only up about 2.5%. And initially, when it came out with blockbuster results, it lent itself to a glow for the whole sector. You saw that in shares at Palantir, but now even that has faded. As the NASDAQ underperforms, it's actually because of a retailer, Dollar Tree, putting an outlook that was disappointing relative to expectations. So Dollar Tree is the worst performer on the NASDAQ 100, offsetting that some strength that we're seeing in shares of Guess, the retailer that most of us knew from the 1990s is back. It grew sales a lot more than expected and boosted its forecast.
Unbelievable. I don't know why the kids today don't learn from the mistakes that we made in the 1990s. They're wearing the same stuff, and they will regret it, just like we did. All right, let's talk a little bit about retail right now with Bloomberg's Simone Foxman. We've got some earnings out this morning that really disappointed, and Simone, I'm not talking about Guess, but Dollar Tree, for example, is down.
Yeah, I mean, we thought discount was going to be this panacea, right? Consumers feeling their wallets pinched, they're trading down, and therefore they go to the discount stores. And Dollar Tree admittedly did say over the past year it's gotten 2.6 million new customers with incomes over $125,000. That said, a lot of them are buying consumables. They're buying food products. These are low margin products. And even though the company is talking about how it's getting all that sales traffic through, it's not necessarily converting that into high margin spend. And that's really the concern going forward. Also, you know, some question marks about the long-term guidance.
Are people stealing from their stores as well?
I think shrink is certainly an issue there. That was raised as a significant issue and kind of interesting, right? Because each earnings season we seem to have one retailer that comes out and says, you know, shrink is a way bigger problem than we anticipated. Last time it was Target. This time it's not just Dick's Sporting Goods, but also Dollar Tree. I mean, it's hard to quantify, though, exactly what kind of hit this is taking on the industry overall. You know, you ask the National Retail Foundation how large shrink was, and they'll tell you last year, at least, it was roughly the same as it has been. We'll see if that changes 2023.
Shrink is it's kind of industry jargon, basically, for theft. For those of you who haven't been watching the retail reports lately, and I've talked to some analysts who are really skeptical about this as an excuse. Some who've said, you know what, theft doesn't make up nearly as much of a drop in revenue as promotions do. It's a much bigger hit to the top and bottom line. But we're not seeing all losers today. Amber mentioned Guess. We saw those shares up. What is going on with this 1990s brand?
I mean, there, though, we have to look at who is buying, right? American sales in the United States and the Americas down pretty substantially, but there were better than expected sales in terms of Asia, in terms of Europe. That does seem to be making up a lot of ground for Guess, and therefore the company able to raise its target.
Anna Nicole Smith. That's what I think of. Amber, don't you think of Anna Nicole Smith when you think of Guess?
No, I think about just being so insecure as a teenager, walking into those stores and just feeling like maybe I was on the wrong side of puberty. Nevertheless, I did try to be a Guess girl, you know, that sort of 90s look. And you're seeing it show up in Abercrombie as well. And I wonder if a 90s revival is what the Gap needs, right? Because now they've got the person that was behind that Barbie resurgence at the helm of that clothing retailer.
Yeah, I mean, all the focus today is going to be on what the brand new CEO, Richard Dixon, says for his future of the brand. You know, you mentioned Abercrombie there. You look at what they've done. They've kind of changed the product mix. They've really pushed towards, you know, we used to be this exclusive brand where only people with washboard abs are acceptable. Now we want to be more inclusive, have different sizes, cater to different ethnicities and show models of different ethnicities. For Gap, you know, the challenge has been that they've really relied on some of their other brands like Athleta. Those brands have seen a slow down in shares. So I think everyone expects here that the earnings, the numbers are going to be really ugly. And the question mark is, what's the way forward? What's the guidance forward? Because frankly, there was reporting from Bloomberg that nobody wanted this job. It's a really challenging job. So we'll see if Dixon can kind of turn things around.
All right, Simone, thanks very much for joining Simone Foxman on the retail beat for us here at Bloomberg. Coming up, TD Bank, Toronto Dominion misses estimates as expenses and provisions for credit losses rose in the third quarter. We'll talk with Brian Madden, Chief Investment Officer at First Avenue Investment Counsel. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, you know, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stenivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets. I'm Amber Canwar with Matt Miller. Time now for Stock of the Hour. Today, we're actually looking at the latest results from two of Canada's biggest banks. TD Bank missing expectations as expenses and provisions for credit losses rose in the quarter, while Royal Bank of Canada beat expectations, helped by the performance of its traders and investment bankers. For more insight, let's bring in Brian Madden, Chief Investment Officer at First Avenue Investment. He joins me now at the desk. You're a shareholder in both, and so much of the common refrain of owning these Canadian banks is for their U.S. exposure. But in both banks, the U.S. is under pressure. What did you see?
Yeah, I mean, of course, that's true, Amber. Over the long haul, we think the Canadian banks have done quite well getting after a market that is 9 or 10 times the size of the Canadian banking sector. But in the downturn part of a credit cycle, which invariably occurs, the amplitude of credit experience is much, much greater, 3 or 4 times greater in the United States than it is in Canada. And so Royal and TD and Bank of Montreal, who we'll hear from later in the week, have got good beachheads in the United States. And so they're wearing that to a certain extent, and TD more so given the greater relative importance of U.S. banking, traditional banking in their overall consolidated earnings picture. So we would give the edge to Royal in terms of their scorecard for these Q3 results so far overall.
And the market certainly is giving them the edge as well. TD's conference call just began about 10 minutes ago. They're sitting on pretty elevated capital levels, in part because they didn't pull the trigger on that First Horizon deal, buying the regional bank. What do you want to hear about their ability to do deals in the U.S.? Because there's been some concern that they're being shut out by regulators and not really effectively communicating that to shareholders.
Well, and I would say we share those concerns, and so we want to hear some candid discussion of what is the plan for the capital. And we've seen actions speaking louder than words already, actually, with the bank buying back 14 million of its shares in this latest quarter. Kind of the opposite picture at the Royal Bank, where they actually have a dividend reinvestment plan and are not buying back shares because they're conserving capital because they've got a target in scope, and it's HSBC Canada, which they're looking to close on in a few quarters' time. So with TD, we want to hear, is it going to be more small tuck-in deals, more deals in segments outside of core banking, like the Cohen deal they did and closed a couple of quarters ago, which was very additive to their wholesale segment results? Or is it going to be more capital return to shareholders, either via a more rapid cadence of dividend increases or just this drip feed of share buybacks?
In terms of the costs, I mean, banks here are facing this as well, Brian. Of course, they have to raise the interest they pay on deposits in order to keep those, stop from losing them. But I feel like Canadian banks should be better positioned because you already had in Canada high interest savings products that were very popular even before we had, the SVB problems.
Well, yeah, you're right, Matt. And certainly the deposit betas, to use the industry jargon, is much lower for the Canadian banking segments than it is for the U.S. segments. But the extent of the interest rate cycle has been so swift and so rapid on both sides of the border that even in core Canadian banking, where deposit betas haven't generally been typically high, there has been sort of a product mix effect that has gated net interest margin expansion. And it's been a phenomenon of idle cash and checking and transactional banking accounts being pulled out of a 15-year-long slumber post the great financial crisis into term deposits, products like guaranteed investment certificates, more commonly known as certificates of deposit stateside. And that has sort of been a brake or a gating factor on the Canadian banks' net interest margins, even here in Canada.
You have your HISAs there. We have our CDs here. I'm curious what you think of the Canadian banking system versus the U.S. banking system, because we have here, an incredibly fragmented market with over 4,000 banks, and I don't even think you're in the double digits up there. Are they able to serve the end customer as well with such a smaller amount of banks?
Matt, I'm not going to pull any punches here. Our regulatory model and our overall industry structure is unambiguously better. America does a lot of things well. Banking is not one of them. It's very difficult to regulate an atomistic industry with 4,000 players in it. And it's much easier to regulate an industry with a double-digit number of regulated banks, 6 of which controlling, 3/4 or more of the overall deposit base. So banks don't generally fail here and don't need bailouts and don't get onto the front page of the newspapers for all the wrong reasons. And from a consumer perspective, Canadians love to hate banks, and that love-hate relationship, there's ongoing tension, but it serves consumers and shareholders well, we think.
Love to hate them, but they're in almost every single Canadian's portfolio. And I wonder how you're thinking about the Canadian banks. I mean, outside of all these nuances and what's going on in the global economy, they've been under pressure. They've underperformed the broad market. They've all got dividend yields, 4.5%, 5%, 6% in some examples, and are at valuations that typically have represented buying opportunities.
Well, and that's exactly what we're doing, Amber. And to be clear, the Canadian banks are a core part of our portfolio as well. We manage a dividend growers portfolio, North American mandate at First Avenue Investment Council. And it's unwise to zero weight the Canadian banks because over a cycle, historically and empirically, we know that they compound at a faster rate than the overall S&P TSX Composite Index. And it's not just fits and starts. They do it rather consistently, having outperformed the market in 18 of the last 25 years as a group, and one by one. We think we've identified the best of breed names. You don't necessarily need to own all of them, but we own 3 of them and have a core weighting there, and we're buying on dips because, as you say, the clouds part when the credit cycle turns, as it inevitably does, and there's very good upside torque when those credit pressures abate as they always do.
Brian, thanks so much for joining us. Great to get your take and perspective on the Canadian banks and really the North American banking system, the differences that we have. He is Chief Investment Officer at First Avenue Investment Council, coming to us out of Toronto. Now, moving to another company story, T-Mobile is cutting 7% of its staff. That's an amount that could affect 5,000 jobs. Part of an effort to rein in costs as the company spends heavily to attract new subscribers. Bloomberg's Molly Schutz joins us now with the details. So, Molly, what do we know about, this is funny because you and I used to cover telecoms together back when T-Mobile was still just Deutsche Telekom. Right. What's going on now?
Well, so today, T-Mobile said that they're going to cut about 7% of their staff, or like you said, about 5,000 workers. These are mostly in their corporate and back office staff and a couple technology roles, but not the consumer-facing positions that they have. And this is basically because they've been really dangling a lot of promotions and heavily offering discounts to people in this sort of Hunger Games among the mobile carriers. They're all fighting for new wireless customers because they're also getting competition from cable companies like Comcast and Charter who are encroaching on their territory. So they're just really having to up the marketing costs to fight for customers.
When I speak to people about investing in the telecom space, they describe T-Mobile as sort of the best house in a bad neighborhood. But this, I guess, shows, Molly, that even T-Mobile is not immune to some of the pressures that we've been seeing in telcos.
Yeah, it came as a bit of a surprise because they actually had a pretty good most recent quarterly report. They did better than AT&T and Verizon. So it just shows, like you said, Amber, that they're not immune to this competitive environment that all the carriers are facing.
All right, Molly, we have to leave it there. Thank you so much for that perspective. That's Molly Schutz joining us. Coming up next, Republican presidential contenders unite in criticizing Bidenomics. We'll hear from former UN Ambassador Nikki Haley, fresh off of last night's debate. This is Bloomberg.
There is no digital without chips, and I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Bloomberg Markets. I'm Amber Canwar with Matt Miller. Now it is time for What It's Worth. The number is 65, which is the current U.S. retirement age, and it's coming under pressure as the 2024 U.S. election cycle ramps up. Earlier today, one of the candidates, former UN Ambassador Nikki Haley, spoke about raising the age of retirement while also addressing the state of the U.S. economy.
We have to focus on the issues at hand. How do we get inflation down? Too many families can't afford groceries. They can't afford their rent. They can't afford gas. They can't afford child care. 50% of American families can't pay for diapers, and 1 in 6 American families can't pay their utility bill. And while everybody would love to say, oh, Biden did that to us, we have to remember our Republicans did that to us as well. And that's why I called out Tim Scott and Ron DeSantis and Mike Pence and Donald Trump for the, spending like drunken sailors and raising the debt limit. I think it's time that we start to really make sure we get our fiscal sanity in order.
Yeah, that was a big moment for you last night, calling out not only Democrats, but members of your own party on that debate stage and here in Washington, Ambassador. As you pointed out specifically, the Trump administration added $8 trillion to our debt. So let's be specific today on Bloomberg. The third rail that nobody wants to touch is the entitlements, Social Security, Medicare. How would you manage the entitlements to try to start getting our arms around soaring debt?
Well, you know, you've got multiple candidates on that stage that said they wouldn't touch entitlements, including Trump. And any candidate that says they're not going to touch entitlements means that they're basically going to go into office and then leave America bankrupt. Social Security is going to go bankrupt in 10 years. Medicare is going to go bankrupt in 8. So the way we deal with it is we don't touch anyone's retirement or anyone who's been promised in, but we go to people like my kids in their 20s when they're coming into the system, and we say the rules have changed. We change retirement age to reflect life expectancy. Instead of cost of living increases, we do it based on inflation. We limit the benefits on the wealthy, and we expand Medicare Advantage plans.
What's the right age there then, Ambassador?
Well, I think we have to do the numbers. We've got to figure out what it is. But what we do know is 65 is way too low, and we need to increase that. We need to do it according to life expectancy.
You raised your hand last night when asked if you would support the Republican nominee. Of course, if that ended up being someone else, I know you're running for president here. But if Donald Trump is responsible for adding $8 trillion to the national debt, how could you support him again for another administration?
Well, first of all, I don't think Donald Trump's going to win the nomination. I think I'm going to win the nomination. And secondly, I think that we have to focus on the fact that anybody is better than a President Kamala Harris. I mean, you look at the socialism creep that Biden and Harris have gotten us into, whether it's the CHIPS Act, whether it's the Inflation Reduction Act, whether you see all of these subsidies, that they're green subsidies that they're doing. They're the ones that have left us into a situation where I don't think our kids are going to forgive us for it.
That was Nikki Haley speaking to Bloomberg's Anne-Marie Hordern and Joe Matthew today about the debate last night. Really interesting that Donald Trump wasn't there. He was doing his own interview separately with Tucker Carlson on Twitter. I'll be interested to see what the ratings show, who watched what more. We, of course, Amber, you and I are more focused on the markets. And yesterday, the main event wasn't the Republican primary debate, but NVIDIA's earnings release, knocking the cover off the ball, forecasting $16 billion in sales for the current quarter when the street was only looking for 12.5. That stock is still up 3%, but it had been up more earlier, and it was driving markets this morning. They have now come down.
Yeah, I've sort of run out of adjectives to describe NVIDIA's quarter, and there really was no blemish. And so when you look at the cool down that we're seeing in the shares, I think you probably could just chalk it up to profit taking. But it's interesting that NVIDIA seems to be sucking all the oxygen out of the rest of the tech sector. But maybe also, you know, with NVIDIA out of the way, investors want to take some chips off the table, literally and figuratively, into Jackson Hole tomorrow.
Yeah, absolutely. It's important to remember that we have that big event tomorrow. Definitely tune in for Bloomberg Surveillance. They have a special coverage starting at 8 a.m. For Amber Canwar, I'm Matt Miller.
maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
The top names in global leadership are on Bloomberg.
When the dust settles, Israel will not only will remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority.
Happy Friday Eve, live from Studio 2 at Bloomberg headquarters in New York. I'm Scarlett Fu.
And I'm Shonali Bassick. We're kicking you off to the closing bell here in the United States. If you take a look at the down day today, a lot of the exuberance we saw just a day ago wiped away when you look at the S&P 500. It's down 0.8% on the day. Mixed earnings picture out here in the United States. Now, if you look at the SOX Semiconductor Index, this is where the NVIDIA earnings could have, would have, should have had more of a difference. It's down more than 2.5% on the day, 2.2% on the day. The reason being is NVIDIA is the only one. If you take a look, the rest of the sector there is all in the red. We'll talk about that more in the show today. Crude oil facing its 4th days of decline, but it's handling above a 78 handle here, just about stable, really pairing the declines that you've seen for the week. The 2-year yield back on the rise, Scarlett. We're looking at a 3 basis point rise back above 5%.
And of course, there's more evidence that the labor market here in the U.S. remains strong. You had initial jobless claims falling to a 3-week low of 230,000, even as Hawaii saw a big jump after the Maui wildfires. So signs of renewed momentum in the U.S. economy is keeping bond yields elevated. Shonali just talked about the 2-year yield at around 5% and the 10-year yield well above 4%. So the question is, how will Fed Chair Jay Powell frame these recent moves with the Fed's outlook of higher for longer? Meantime, we look at what's been going on in politics. Talk of the town, Vivek Ramaswamy seizing the spotlight in the first debate of Republican presidential candidates. The entrepreneur talks big, often pointing to his business accomplishments, and of course winning the support of hedge fund billionaire Bill Ackman along the way. But here's what Ramaswamy doesn't talk about: lawsuits from former employees who say they were pushed to violate securities laws. We're going to dig into all of that. But first, Shonali, let's return to the market action. You started off with NVIDIA, and investors are still all in on the AI frenzy, but it's not having the desired effect across the sector.
All AI companies are definitely not created equal. If we take a look here at what's going on with NVIDIA, they are trading at or near all-time highs. Just off the lows of today are the highs of today, up more than 3% still on the day. Big jumps this week for NVIDIA, of course, on the heels of stellar earnings. But as we've been saying, they are pretty much the only one from the sector today that is feeling this sort of love. We're going to talk more about that effect. I want to bring a little bit of the negative part of the story here. The S&P is down on the day. If we flip up the board, the sector that is not hurting the most is anywhere near technology. It as consumer discretionary for the day. This is a sector that has seen a lot of love into the year as expectations around more consumer spending, a hard landing not yet coming to the economy, those fears really waning here. But then if you take a look at the earnings, they are such a mixed bag. And Scarlett, we're expecting some more after the bell today.
Yep, and we'll be all over that when those earnings cross. In the meantime, let's continue the conversation with markets with Anna Ruthven. She is Chief Investment Officer over at CBiz Investment Advisory Services. Anna, great to speak with you, and thank you so much for talking to us today. Let's start with NVIDIA and how its earnings report definitely gave a big boost to the stock when expectations were already fairly high, but it kind of delivered a bit of a reality check for the rest of the tech sector. What was the big takeaway for you?
Well, the fumes of euphoria for AI have dissipated, except for NVIDIA. And a lot of this is because the promise of AI is still years away. NVIDIA gave us, results that we saw after the bell yesterday. For everyone else, we're just going to have to wait and see. The promise, maybe for the second quarter after the second quarter earnings, was for everybody. And now we need to see a little bit more. Investors need to see a little bit more before we get too excited and ahead of ourselves.
So do you think that whole leg of the AI-generated gains or AI-driven gains is over for now?
Well, I don't want to say that it's over because the markets always have a way of surprising us. But it is true that in order for AI to really have an impact in our daily lives and for it to actually change the way we work and our productivity levels, that's not today, that's not tomorrow, and that's not next quarter. It's a few years from now. So it'll be very exciting to see how companies actually utilize AI to make changes in our lives and in our economy. But again, we'll have to wait for that.
Anna, there are earnings and then there are interest rates. And ahead of Jackson Hole, the big speech by Fed Chair Powell, how do you expect any potential future interest rates to impact risk-taking? Is this idea here to wait and see for more economic data true not just for Chair Powell, but also for the market?
Yeah, so tomorrow I'm not anticipating anything different from Chairman Powell. I mean, the Fed has been relatively still hawkish. There's some disagreements there, but relatively hawkish compared to, say, 5 years ago. We're still expecting the Fed to stick to the 2% target, which if you think about it, we're not anywhere near. And then it's no longer going to be, okay, we're happy inflation is going down. The question is going to be, will it stay down? So we expect the Fed to continue to be hawkish, and without additional data points, tomorrow we're expecting it to be the same. We have PCE print, GDP revision, as well as BLS numbers coming out next week, and I highly doubt the message will be different before those numbers come out.
You think about valuations in the market right now. Even NVIDIA is at below 39 times its projected earnings relative to 63 times where it was earlier. Earnings for NVIDIA have caught up, but what about the rest of the market? If we see higher rates or even just the current level of rates stick around for longer, what does it mean for the valuations of some of the companies that we see out there today?
Yeah, the valuations are high. There's no doubt about that. We entered August with high valuations, and actually until this week we saw the markets get a little bit nervous, and this week I think was an anomaly. We are expecting more volatility to enter the market into the fall months. And also, if you think about it, American economy is driven by American consumers, and consumers are coming toward a cliff of sorts. The pandemic savings are running out. Student loan payments are expected to kick in the fall. That's going to bite into the purchasing power of a lot of American consumers. And I'm afraid the consumer story is just beginning. So not only are the valuations high, not only rates are going up, but the fundamentals are starting to look a little bit weaker. And that no recession story may be a story of the past.
So you see a hard landing here. How are you positioning your clients? What's the best way to kind of ride this out?
Yeah, so I don't want to call it a hard landing because, frankly, between soft landing and a hard landing, there must be a lot of different types of landings in between.
Fair enough.
And we shall see if it's a hard landing or a soft landing or anywhere in between. In this type of an environment where valuations are high and, frankly, yields are expecting an upward pressure, right, because of the Fed, we're asking clients to be patient, keep that sight on the long long term, because a lot of our clients are long-term investors, and to rebalance as necessary, because rebalancing is the first line of defense when it comes to an environment like this, where you're taking the gains from the equity markets that have performed very well year to date and preparing for potential volatility in the future.
Anita, Anna, really appreciate your joining us. Thank you so much. Anna Rathman is Chief Investment Officer over at CBiz Investment Advisory Services. A lot more coming up on Bloomberg Markets at Close. Of course, we had the first Republican presidential debate. It's done. It's in the books. We'll hear from candidate and former UN Ambassador Nikki Haley on her economic agenda.
Plus, it's a lot of what we've been talking about. All eyes on Fed Chair Jerome Powell's speech at Jackson Hole tomorrow. Traders watching carefully for clues on an outlook for inflation and interest rates.
And we'll talk tech and economic conditions with Neil Dar. He is U.S. Vice Chair of PwC. All that and more coming up. This is Bloomberg.
IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority. European Central Bank President Christine Lagarde sits down with Bloomberg's Tom Keene for a conversation on the political economics of Europe and the permanent shifts in the global economy. Tune in for the exclusive interview live at 4 p.m. Eastern from Jackson Hole, only on Bloomberg.
Last night, Republican candidates battled each other over the U.S. economy in their first debate of the 2024 race. And today, Nikki Haley, former UN ambassador and current candidate for the Republican presidential nomination in 2024, had spoken with us earlier about the economy and how she plans to get her arms around soaring debt. Take a listen.
We have to focus on the issues at hand. How do we get inflation down? Too many families can't afford groceries. They can't afford their rent. They can't afford gas. They can't afford child care. 50% of American families can't pay for diapers, and 1 in 6 American families can't pay their utility bill. And while everybody would love to say, oh, Biden did that to us, we have to remember our Republicans did that to us as well. And that's why I called out Tim Scott and Ron DeSantis and Mike Pence and Donald Trump for the, spending like drunken sailors and raising the debt limit. I think it's time that we start to really make sure we get our fiscal sanity in order.
Yeah, that was a big moment for you last night, calling out not only Democrats, but members of your own party on that debate stage and here in Washington, Ambassador. As you pointed out specifically, the Trump administration added $8 trillion to our debt. So let's be specific today on Bloomberg. The third rail that nobody wants to touch is the entitlement, Social Security, Medicare. How would you manage the entitlements to try to start getting our arms around soaring debt?
Well, you know, you've got multiple candidates on that stage that said they wouldn't touch entitlements, including Trump. And any candidate that says they're not going to touch entitlements means that they're basically going to go into office and then leave America bankrupt. Social Security is going to go bankrupt in 10 years. Medicare is going to go bankrupt in 8. So the way we deal with it is we don't touch anyone's retirement or anyone who's been promised in, but we go to people like my kids in their 20s when they're coming into the system, and we say the rules have changed. We change retirement age to reflect life expectancy. Instead of cost of living increases, we do it based on inflation. We limit the benefits on the wealthy, and we expand Medicare Advantage plans.
What's the right age there then, Ambassador?
Well, I think we have to do the numbers. We've got to figure out what it is. But what we do know is 65 is way too low, and we need to increase that. We need to do it according to life expectancy.
You raised your hand last night when asked if you would support the Republican nominee. Of course, if that ended up being someone else, I know you're running for president here. But if Donald Trump is responsible for adding $8 trillion to the national debt, how could you support him again for another administration?
Well, first of all, I don't think Donald Trump's going to win the nomination. I think I'm going to win the nomination. And secondly, I think that we have to focus on the fact that anybody is better than a President Kamala Harris. I mean, you look at the socialism creep that Biden and Harris have gotten us into, whether it's the CHIPS Act, whether it's the Inflation Reduction Act, whether you see all of these subsidies, that they're green subsidies that they're doing. They're the ones that have left us into a situation where I don't think our kids are going to forgive us for it.
That was Nikki Haley, former UN ambassador and candidate for the Republican presidential nomination in 2024. And for more on the GOP debate, let's bring in Charles Myers. He's Signum Global chairman and founder. Charles, I wanted to start with Nikki Haley, as well as this idea of her kind of attack here on Kamala Harris, Vice President Harris as well, because we have reported that you in your own home had been fundraising for the vice president. And so when you look at the pitch that Nikki Haley was making, is it compelling to you?
Well, look, I think, Nikki Haley, by the way, last night in the debate, I think did a terrific job. I think was one of the real winners. I think her, ability to stay on point, on message, and really talk policy in a serious way, really showed that she outperformed last night. And I think actually, as we're really one to watch on the campaign trail, I think her attacks on Vice President Harris are to be expected. In the end, Vice President Harris is far more popular with the Democratic base than her national approval rating would suggest. And I think that as this campaign goes forward, we're going to see a lot more from the vice president. And I think people will change their opinion on her. But again, Nikki Haley, I think it was fair game last night. I think she did more broadly, more generally, a very good job in the debate.
You saw a lot of popularity around Vivek Ramaswamy as well, for example, and you saw a lot of biting attacks to him on stage last night from Mike Pence, from Chris Christie. But how much does that actually matter at the end?
Yeah, look, I think on the debate last night, it was, really highly entertaining and, pretty feisty and as expected. But there was some real policy discussed as well, whether it was on abortion, Ukraine, the economy, climate change. So I do think it was a mixture of both performative politics, which was Vivek in large part, but also some real substance from Mike Pence, from Nikki Haley. I would also throw in there, DeSantis trying. But anyway, so on the performative part, Vivek was introducing himself to the American people for the first time and really wanted to get as much attention as possible. And frankly, given that he's got no political track record and, it has really nothing to lose, he can just say anything he wants. And he's really running, I think, to be President Trump's vice president. I don't think he's going to win the nomination. I think that he's going to get a bit of a bump after last night, but pretty soon the media is going to begin to do what they always do, which is tear him down. So I expect the tear down of Vivek to be pretty brutal. And I do not expect him to get the nomination, but I think he did a decent job last night.
So from where you sit and where President Trump sits, former President Trump that is, did Ramaswamy do a good enough job to potentially win that vice presidential slot?
You know, I think he performed in line with expectations to the extent that people had any real expectations of him. You know, it's very hard to really, you know, try to run for president when you're really running for vice president. He seemed like he was really speaking to President Trump, who was not there. So I would say that his performance, while on issues that the Trump base really cares about, he did a good job. But some of his positions, again, are contradictory to what he said in the past, and I think are out of line with more mainstream Republican voters.
Okay, Ron DeSantis, of course, is the one that has the highest ratings after President Trump when it comes to what little polling there has been done on the Republican nominees. Who was he speaking to when he was speaking at all?
So I think, you know, DeSantis was one of the I think one of the more disappointing performances last night. And it wasn't catastrophic by any means, but, you know, he really had far less airtime than expected. And I would argue very damning in a way that he was not attacked or hardly attacked by the other candidates on stage, which, considering that on that stage he was the front runner, you know, he's the front runner after Trump, but on that stage was by far the front runner. To not be attacked is another sign that he's not being seen as much of a threat. Vivek was seen as much more of a threat. So I would say on DeSantis, you know, he's trying to out-Trump Trump in the primary. He's done stuff in Florida that even Trump wouldn't do. And I don't think that he's going to be able to win over the Trump base. As long as Trump is in this race, DeSantis is not going to win the nomination. This is still Trump's primary. This is still Trump's to lose. And I didn't think that last night the performance of any of the candidates changed any of those dynamics. I do think Nikki Haley did well. I think Mike Pence did particularly well. And I think Vivek, again, kind of neutral.
Charles.
DeSantis.
Charles, I'm curious about the policy. You had brought us back there to the idea here that a lot of substantive things were discussed in terms of how the GOP feels about hot button issues. Pretty immediately, Bidenomics had come up, as well as this idea that even the Republicans had been spending a ton during the Trump administration. Where does the fiscal picture fall into priorities? Ukraine was another hot button issue. At the end of the day, what is going to be the factor that leads to the polls?
Yeah, so I think, you know, fiscal responsibility is something that always resonates with voters, right? It's something that voters can understand. It's, again, a very important issue. And I think Nikki Haley was right to bring it up really at the outset of the debate. But the truth is that this election next year will be fought ultimately on, I believe, the same three issues that the midterms were fought on last year, which is the economy. And I think the economy is going to be in decent shape by November of next year, if not actually quite strong. So I think, and inflation's coming down, so that's a positive for the Democrats. Secondly, is that women's reproductive freedom will absolutely be on the ballot, and I think it's a losing position for the Republicans. And third, Donald Trump will either be on the ballot or a Trump-like candidate. If that's true, I think Biden wins re-election.
All right, Charles Myers, Signum Global Chairman and Founder, thank you so much. Charles has over 25 years of U.S. political and electoral experience advising candidates for various public offices. Thank you so much. Coming up, America Inc. on the brink. A surge in corporate bankruptcies is sending bond investors scrambling. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy in 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
As corporate failures surge, debt investors are fighting to salvage what they can from the wreckage. The bankruptcy of Genesis Care, which is backed by KKR, is just the latest cautionary tale. So joining us for more insight is Bloomberg's Paula Seligson. And Paula, lenders to Genesis Care who didn't already get out, what kind of values are they seeing on the bonds that they still hold on to?
So for some of the loans that they have, we're talking mid-teens, so around 15% or so, and that's very different from what's supposed to happen in the leveraged loan market. Typically, recoveries in that asset class are 70% to 80%.
Huge
so we
difference.
can really see how tough this is going to be for investors.
Yeah, and it's interesting because when you look at the bankruptcies related to private equity-backed firms, they're at a 13-year high. And so this is only the latest. So how much more pain does this portend for future deals?
There could be quite a lot of pain. And this really speaks to how the market changed in recent years. In the past, leveraged loans meant first lien senior secured debt, which basically meant lenders had first dibs on assets to get value back for themselves if something went wrong. But in the 0% interest rate environment, there was so much demand and competition to win these deals, they allowed covenants to erode. Covenants are essentially investor protections. There are many fewer investor protections now, and now they're paying the price.
And leveraged loans are floating rate, right? So that makes them particularly dangerous. Did any of these companies hedge against this?
So many companies did not hedge, and many sponsors did not do this. They just didn't think it was important or necessary.
They thought lower for longer.
Exactly, and now it's too late to hedge. It's too expensive. So we're still seeing all that play out currently.
You're looking at Genesis Care in particular. It's on debtor in possession financing. And there's a great quote in the story that talks about financial alchemy, that these kind of troubled firms are seeking. How much funny business is out there right now in terms of trying to get out of this distress, and who wins in that scenario?
Usually the sponsor is who wins in that scenario, right? The private equity firms, if they can save money, they're going to do it at the expense of the investors who bought the debt. So a lot of covenants don't have certain protections to guard against what's called up-tiering or other forms of essentially moving value away from certain classes of lenders. And so when that happens, what you thought was an 80% recovery drops significantly.
What does this mean for new deals? There's a sense in the market that there have been some massive private credit deals, and the banks would come back to underwriting new leveraged loans, potentially after Labor Day as the market starts to open up and cool up. But does this mean that perhaps investors might think twice?
Yeah, so investors are overall demanding far more protections, and I think they're getting it many of the times, but not every time. All of these deals, it's still case by case, situation by situation, and you have not seen as many of these protections in these documents as you might have expected after some of these worst case scenarios.
So Shanali was all excited about this headline about JP Morgan winning a ruling that leveraged loans are not securities.
They're like crypto firms.
Explain the significance of this.
So this is extremely important. If leveraged loans had been considered securities, they would have been therefore under securities law, and so many more regulations would have applied to the asset class. Currently, they are bespoke contracts between sophisticated investors, which means they just basically make the terms they want and agree to it, which is very different than securities, where there's more disclosure and just much more information out there for the public. These companies are staying very private.
Right, and less intervention by regulators as a result, because two parties came together and agreed on something.
Exactly. So unless the SEC decides it wants to take that on and actually do a formal rulemaking process, they currently remain not securities.
Fantastic stuff. Paula, really appreciate your joining us. Great explanations. Paula Seligson is a Bloomberg bankruptcy reporter. Really appreciate your taking the time to explain all of this. We are looking at a market that is in the red. Not so if you're NVIDIA, but that's the case for everyone else at this point, right? Crude oil marginally higher, up by 0.1%, just under $79 a barrel. The 2-year yield above 5%. This is Bloomberg.
There is no digital without chips. And I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
This is Bloomberg Markets at Close. Let's get a cross-asset check as we head towards a close on commodities markets and check in with Abigail Doolittle. Abigail?
Well, you wouldn't know it looking at this board, Scarlett, but we actually have a gain for the Bloomberg Commodity Index. But these are the more interesting gains, so that's why we're taking a look at them. Starting off with European natural gas, UK gas down 13%. It looks like the Australian LNG strike has been averted, so that means that 10% of the LNG supply in the world, it's still on the market. So we do have that coming in sharply. Natural gas here in the U.S. is higher. Maybe that's why we have crude oil higher. The reason I put crude oil on this board was up until just moments ago, it had been down a fourth day in a row, the longest losing streak since May, but traders have turned that around. And then a big flip-flop from yesterday, copper down 1.1%, wheat down 1%, and I think less than fundamental reasons related to those specific markets, Scarlett. I think it's a little bit of the risk-off mood that we're seeing for stocks bleeding into some of these more economically sensitive commodities.
All right, thank you so much for that cross-asset check of commodities. As bond yields, meantime, resume their rise today, let's turn our focus, as we have all week, to Jackson Hole. All eyes, of course, will be on Fed Chair Jay Powell's speech tomorrow morning at 10 a.m. In the meantime, traders are watching carefully for clues on the outlook for inflation and interest rates as we get towards that speech. Joining us now for insight is Bloomberg contributor Claudia Sahm. She is founder of Sahm Consulting and a former Fed economist. Claudia, thank you so much for speaking with us. Former St. Louis Fed President James Bullard spoke with us this morning, and he said that a pickup in the economy this summer could delay plans for the Fed to wrap up its rate hike campaign. He's able to speak freely now because he's not on the Fed anymore. Yep. How much do you think that's part of the thinking of Fed policymakers right now?
So I still think, Fed policymakers are focused on inflation, right? So if you have a pickup in activity, what's trend growth, right? You don't know how much of it is. GDP is not as well measured as some of the other indicators that they look at. So, inflation is their job. If it comes down, and it doesn't have to, and Jim is right, that, raises the risk that we're not going to make progress on inflation. But so far we have been, right? So I wouldn't, call this yet.
I wouldn't call this yet. Okay. When it comes to inflation, how committed do you think Jay Powell will be to that 2% target, or is there any wiggle room for approaching 2-ish?
So it's 2%, right? And anything he would say now, they're not even going to open up that can of worms and say we're thinking about different ones. I do think in reality they could get to a place where they say 2.2, 2.3. This is good enough, right? But he's not going to say that now, right? And I don't. This is a discussion for when they do their framework review. This is not a discussion when they're trying to get inflation back down.
How much does the market discount not just the level of interest rates, but also the balance sheet reduction, Claudia? Do you think that the tightening of financial conditions is not really factored in, both in terms of the delayed effect of the higher interest rates, as well as this idea that more tightening could be ahead?
Right, well, the balance sheet this whole time has been running quietly in the background. So I wouldn't say that it's taking more prominence now than, say, the federal funds rate, but it's part of the tightening. And the Fed is not the only source of tightening, right? I mean, there were ripple effects from the bank failures earlier in the year. And I mean, it's just the case. The Fed doesn't control financial markets, full stop. But you're right. They have more than one tool that they're putting and have put into their effort to get inflation down.
Claudia, you look at, for example, today, a rise in both short-term and long-term yields in particular. The 30-year, for example, back to 4.29, and there's been a lot of discussion about what it means for these longer-term rates to be anchored at such a high level. What is your read?
Right. Well, I mean, one kind of Fed wonky read that has been, coming around is that there are some questions about whether there's an aspect of this that's a new normal, right? The higher interest rates. If the goal interest rate for the Fed, the natural rate of interest, if that has, within this crisis crept up, right? So there's a chance this is something more persistent. I doubt that's where we're headed. I think some of it's just reacting. I mean, the short rates are obviously reacting to the chance that the Fed's going to keep raising. Like, I don't think Jim Buller's view is that's a more widely held view. The long rates, I mean, we're going to be in this for a while, so that they're tightening.
Yeah, and that's that higher for longer ideal. We're going to be in this for a while. How have you seen Fed thinking evolve over the last couple of months as it's become clear that the economy is holding up really well, perhaps stronger than expected, the labor market not softening as much as they had anticipated? How has that shifted their thinking?
So, I mean, we have seen disinflation. It's not been as strong in core, excluding energy and gas, as they would like to see. I think they've been clear that this is not we're looking for 3 months of pretty good data. Which in both cases we've had, wage growth has come down, even if job payrolls are, still fairly strong. But they're going to want something like 6 months, right? Mm-hmm. So we're in this phase where things are pointed in the right direction. They're going to get another inflation, another payroll before the meeting. That's why I don't think he's going to give a lot of forward guidance on September. Why would you? You're missing two big pieces of the puzzle. But you can see that there is some divergent opinions on the FOMC. We saw that in the minutes. There are people who are in a place now that it's getting better. And there are people in a place that are we need to go higher. This is not under control.
Split decisions. Claudia Sahm, thank you so much for your time for a big day ahead. And still ahead for this show, a rough week for Dick's Sporting after analysts downgrade the stock in the wake of a disappointing second quarter of results. We'll talk to one of the analysts about how the second half of the year might bode for the retailers as consumers shift their spending habits. This is Bloomberg.
Names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, The moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
For our top calls, a look at some of the big movers on the back of analyst recommendations, and we'll start with AMC. Wedbush raising the movie theater stock to neutral from underperform due to improving industry trends. Maybe thank you to Barbie and Oppenheimer. The price target also goes up to $19 from $2 previously. The analyst expects the North American box office to end the year 20% higher than 2022 as moviegoers opt for premium screens and services. The stock, nevertheless, down about 28%. Next up, Estee Lauder cut to market perform from outperform at Bernstein. The price target was cut to $160 from $230. The beauty and cosmetics company's near-term setup looks challenging, according to the analyst, who also sees increased uncertainty about Estee Lauder's long-term growth trajectory. The stock currently down about 1.4%. And finally, Peloton. The interactive fitness company was downgraded at B of A. Weak revenue forecast and subscriber growth, coupled with the high cost of a product recall back in May, led the analyst there to cut his rating to neutral from buy. Peloton up at the moment by 1.8%. And those are some of our top calls. Meanwhile, Dick's Sporting Goods, a big mover earlier this week, has been hit with downgrades of its own after its second quarter EPS missed the mark. Wedbush cut its rating to neutral from outperform on the notion of limited visibility to the sales outlook. Let's hear more on this call from Seth Basham, Managing Director at Wedbush Securities. Seth, how much of this is tied to the shrink that Dick's Sporting Goods talked about on its earnings call?
I think shrink is a secondary issue for the company. While they highlighted that as a primary issue, the biggest issue for them is markdowns in their merchandise. We saw markdowns in the outdoors category as well as some other categories, despite the company indicating their inventory was clean entering the second quarter. And we also saw markdowns be pervasive just 9 months ago. So from our point of view, the biggest risk going forward is additional markdowns in an industry that has excess inventory and a promotional environment that's likely to remain intense through the holiday season.
What do you think is driving that? Is it just poor inventory mix or just poor inventory management and pricing?
It's a combination. I think it's softer demand for some of these categories, and I think it's poor inventory management by the company. So they want to make sure their inventory is clean, they're not stuck with excess inventory through the end of a season. So they get aggressive by moving it, but that comes at a cost to their margins.
Cost and margins. I'm wondering how much the Dick's Sporting Goods story is just like you're seeing at a range of other retailers. On one hand, you're seeing consumers trade down, but on the other hand, you are seeing a hard time for retailers to kind of meet the needs of what consumers will actually buy at. At what point do you blame it on the consumer and this start to be a bigger problem across more retailers?
Yeah, I mean, the consumer is definitely being picky about what they're spending on. They're spending more on travel and entertainment. They are on goods for sure. And they're spending less on big ticket discretionary goods. They are on consumer staples. So when you're a discretionary retailer like Dick's, you need to account for that. They haven't seen too much of a trade down effect from higher quality, higher priced merchandise to lower priced merchandise, but I think that's quite possible to occur in the future. We're seeing it for the low end mass market customer in some places, and we could see it for their more premium customer going forward.
You know, we're heading into this tail end of the consumer reporting season. Where else are you seeing these problems that you say could bleed in not only through the rest of this year? I'm wondering how much these problems now start to bleed into 2024 more largely.
Yeah, I mean, a case in point today was with Petco, Wolf. Their guidance for the balance of the year was much worse than expected as they're seeing softness in the discretionary hard goods side of their business. So that's just one case in point, but in most other areas of hard lines, it's the same theme.
What is your recommendation to Dick's management in terms of how to solve for all the issues that we've discussed, including the fact that right now consumers have shifted their spending to experiences rather than stuff? I mean, as long as people are not spending as much on stuff, a retailer like Dick's Sporting Goods just loses out no matter how well it manages its inventory.
Yeah, so I think the key here is to be tight with inventory management, to be frank and upfront with investors about how they're managing that, and take shrink into consideration, but talk about inventory management first and foremost.
All right, Seth Basham over at Wedbush Securities, thank you so much. And the reason I said Trump is because we do have some breaking news. Trump says he will be arrested at 7:30 p.m. in the Georgia case. Again, the former president says he will be arrested at 7:30 p.m. We know some of his co-conspirators, according to the indictment, have already turned themselves in, including Rudy Giuliani, and he was due to do so by today. Today is the deadline for this to happen. So again, the former president says he will be arrested at 7:30 p.m. in the Georgia case against him. We'll be following up on further details as we get them.
And coming up next, we're going to be joined by Neil Dar, PwC U.S. Vice Chair and Consulting Co-Leader, to discuss how companies are going all in on this big tech industry. Now, this is Bloomberg.
IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
Through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point. What is the lesson or the observation?
Time now for our Wall Street Week Daily segment. David Weston joins us now. And David, you're going to talk about big tech and companies going in on it.
Yes, exactly, because all of the companies are talking about big tech. And what we do here on Wall Street Week is we try to figure out what business leaders are thinking about and talking about. And one convenient way to do this is through the PwC Pulse survey that they issue. We have the latest one out now, and we welcome Neil Dar. He's PwC U.S. Vice Chair and Consulting Co-Leader. So, Neil, great to have you here.
Thank you, David, for having me.
You've got this fascinating survey out. I recommend everybody should take a look at it. But what's the top line for you as you looked at this? What did you learn?
Optimism. Optimism. Compared to this time last year, what we found was it was loud and clear that executives across all functions were far more optimistic about the economy in general, their own business prospects, and how they're going to move forward on a number of different things, such as risk, AI.
One of the things you asked them is likelihood of recession in 6 months. What did you find out?
Well, what we found was actually sentiment improved dramatically. So a year ago, 35% thought we were going to be in a recession within the next 6 months. That dropped to 17% this go around. So again, overall optimism, which actually lines up with what we're seeing in the marketplace, what I'm seeing when I speak to our clients.
When we talk every single day on Bloomberg, we talk about tech sooner or later, yes. Particularly today after those NVIDIA numbers out yesterday, having to do with generative AI. What did you find out about tech and AI from your survey?
What we found was it was loud and clear that executives expect to spend not only on generative AI, but more broadly on technology. With optimism, they're focusing on growing, focusing on how they're going to make their companies more efficient, focusing on risk, and all of that, David, is underpinned by technology. So with that, they're a lot more focused on how they're going to spend on technology to rewire their businesses for the next 3 to 5 years.
So everyone's going there, Neil, and so I'm sure the business leaders are doing as well. Are they confident about how they actually make more money off of it? I mean, there's a lot of talk about increased productivity. Do business leaders know how you convert generative AI or other technology into increased productivity?
Well, let me take it in 2 parts. So more broadly, what we find is executives are laser focused on outcomes when it comes to large technology programs. So what do I mean by outcomes? Are they actually getting the business results that they've promised their boards and their senior management teams? And that, again, is across, like, is the technology working? Are my employees actually using it? Am I training my executives appropriately? Do I have the right tone and culture within the organization? So a lot of focus on, yes, I'm putting in technology, large programs, multi-year programs, but am I going to get the results that I'm looking for?
Neil, whether from your Pulse survey or otherwise, because you talk to an awful lot of big companies around the country, do you have a sense of where they're making the investments? I mean, is it hardware, things like the NVIDIA chips we hear so much about? Is it software? Is it training your people or getting new people to be able to use it effectively?
Well, maybe let's use generative AI as an example. So I just got back from a trip to the West Coast, spent a number of hours in meetings with our clients, the large tech firms, and what we found loud and clear was executives and management teams are all in the same place around figuring out what does generative AI mean for their respective organizations. And David, the way I think about it is really in a 2x2 sort of, being a consultant, sort of in a matrix of what we see as executives looking at how is generative AI going to make their companies more efficient, and then how are they going to use generative AI to actually move forward and actually drive growth, innovate. Okay, certain sectors will clearly have more near-term use of generative AI. So what we're seeing in our client base is industries like financial services, health and life sciences, consumer markets are clearly segments where we're going to see near-term, very near-term, significant investment with generative AI. On the flip side, from a function standpoint, what we're seeing is functions like sales and marketing, research and development, anything where you're writing code, and customer operations, again, are areas where there's going to be significant investments, again, all under the lens of efficiency and growth. So now, as you look at that, what we see is business cases now being put together. And by the way, no one has run away from the pack here around generative AI. Everyone's figuring this out together. what those business cases are going to look like, and how you're going to impact both growth and cost.
There seems to be a rush right now into AI, generative AI.
Yes.
Are people applying the traditional standards for capital investment? Back when I had to worry about capital investment, we had a simple rule of thumb. It had to pay for itself in 2 or 3 years, or it wasn't worth doing. We had better think twice about it. Are companies applying that kind of rigorous analysis, or are they saying we just have to get there?
Well, what we're seeing is it's very, very early days. So if we think about the technology has obviously exploded upon us. What companies are doing is they're getting management alignment. We're seeing a lot of clients actually getting management alignment, writing business cases now. Those business cases have the rigor and the outcomes orientation that we talked about. Certain sectors are further along than others, and then you will see significant capital investments come into space. We at PwC, for instance, we're making significant investments to upskill our professionals, 75,000 folks in the U.S., about how we're going to upskill and use generative AI to serve our clients better and make our own operations more efficient.
Besides technology and AI, one of the things that came out in the survey as a high-profile issue, and particularly a concern of business leaders, is cybersecurity.
Yes.
Tell me about cybersecurity, and particularly, it's one thing to be concerned about it, it's another thing to know what to do about it.
Yes. Well, our survey looked at different types of risk. And again, on a relative basis, cyber came out as the top risk. So 75% of participants said cyber was a significant risk for their respective businesses, okay? Along with labor shortages and a number of other factors that we looked at. No surprise, that's a very consistent theme when I'm in the boardroom, when I'm talking to clients, especially now with so much data, so much, again, information that's out there. Companies have to have very robust processes around cyber. So I wasn't surprised at all about that. Now, what's playing out is, do you have the right programs in place? Do you have the right proactive measurements in place? Is your enterprise risk management appropriately doing what it needs to do to protect you from cyber?
And finally, Neil, one of the things that struck me, at least about your survey, was the question of nearshoring or onshoring.
Yes.
That was not as big a priority. That was not listed as a top strategic priority. 2 years ago, that was all the rage. We had to worry about that. Are people more relaxed about that? Has the problem been fixed?
Well, I think when it comes to things like supply chain and the like, I think our clients and what we're seeing is that they're looking at their supply chains. In some ways, it's become business as usual, where they're looking at their supply chains, they're creating more dynamic scenario planning. So in a world where, you know, maybe things have been a little bit more deglobalized, when there's risk around things like climate, folks have diversified their supply chain, and again, that's become a little bit more business as usual.
Neil, thank you so much for being on Wall Street. We're really great to have you here. It's Neil Dar. He's PwC.
Become a little bit more business as usual.
Neil, thank you so much for being on Wall Street. We're really great to have you here. It's Neil Dar. He's PwC U.S. Vice Chair and Consulting Co-Leader. Tomorrow, we're going to be joined by Larry Summers, former U.S. Treasury Secretary, reacting to Fed Chair Powell's remarks out in Jackson Hole. And at 6 p.m. Eastern Time on Wall Street Week, we'll talk with Eric Cantor, Moelis & Company Vice Chairman, about the federal debt and what it means for the cost of capital. That's going to be at 6 p.m. Eastern Time tomorrow. Scarlett?
All right, looking forward to it. Thank you so much, David Weston. Still ahead on Bloomberg Markets, the close. We've got an hour to go before the end of trading, and you're looking at yields on treasuries move higher, so that sell-off in bonds continues, Shanali. And in fact, we're looking at the two-year yield now above 5%, 5.01%. Stocks also at session lows at the moment.
We've really come full circle this week. When you look at the two-year, we're now pretty much above levels where we were on Monday after a nice little retreat yesterday. But really, tomorrow, again, is a big day. I don't even know if today even matters.
Yeah, it does feel like after NVIDIA and before Jay Powell, people are just kind of waiting around, and volume has really dropped off. It picked up at the beginning of trade, as it usually does, but since then it's been petering out. So again, we continue to look at stocks at session lows. The VIX moving slightly higher at 16.7. Dollar is also firmer, at least against the euro there. Euro dollar down 0.5% at 108.10. From New York, this is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Very good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio on YouTube and Bloomberg Originals. It is Friday's Eve. Can't come soon enough. Oh, actually, it's your Friday, isn't it?
It's my Friday this week. Yeah, sorry. But it's okay.
It's okay.
Next week I'll have a real Friday, Carol.
All right.
Don't you worry.
Yes, you will. We're going to actually be doing some cool things next week, next Thursday and Friday.
Yeah, we'll be at the U.S. Open.
I cannot wait.
That is a fun one.
It is a fun one, and it's a good feel about just lots of stuff. Obviously tennis, but you also get a feel of what's going on with the kind of high-end consumer
yeah, I mean,
in the US.
I'd say it's definitely high-end. Like the cheapest tickets we could find to like a Tuesday night match were like $130. And we're here in the nosebleeds.
Not for the financial faint of heart.
No.
All right, so having said that, that's next week. This week, right now, today, blockbuster results from NVIDIA, check. Now we're on to Jackson Hole and working our way through the remarks of Fed officials as we await tomorrow's speech from Jay Powell. And, you know, stocks are down here. Yields, I feel like, have also backed off, but there's some concerns maybe, too, about some strong economic news. Again, so what does that mean for inflationary concerns and maybe a higher rate environment?
Yeah, we're going to have more on rates and also the lower equity moves that we're seeing today. That in just a moment. Carol, we got to talk NVIDIA hitting a record in the last loan sell rating on the stock. Where'd that go?
Yeah, exactly, right? Unbelievable. And then another tech name on a tear today, Splunk. Much of Wall Street raising their price targets on that name. We're going to talk to the company's CEO, Gary Steele. Lots to talk to him about. And there's an AI play as well.
Yeah, we're also going to talk about the long, strange journey to get to a Lyme vaccine again. This is a really interesting story.
We've been talking about this. It is an interesting story, and there's a lot of reasons why it hasn't happened up to this point, right?
We're going to have to wait a few years, too, even though it's in stage 3 trials right now.
Yeah, exactly. On that, is it time soon to get another COVID vaccine? Everybody mark your calendar because, yeah, maybe it is.
Just which arm do you get it in? That's the question.
That's a good point. I'm glad you brought that up. And then we have a guest whose bio notes she is diversity personified. She's a CEO, an entrepreneur. She's Black. She's a female. She's bisexual, an ex-preacher's wife, left-handed, and a former Division I athlete. We're going to talk with Risha Grant about why it's time to stop using DEI as a weapon.
And we're going to round things out this afternoon with a fun segment that we call What's Matt Miller Driving? And the answer is he's not driving us crazy. That's not what we're going to say.
Well, TBD.
Okay, TBD.
But we are going to talk about a kind of normal car that goes for nearly $170,000. That is definitely what he's been driving. Right now, we're driving to the close, less than an hour to go, and over to our TV colleagues, because Countdown to the Close starts now.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. Scarlett Fu and Shonali Basak here with you. We're joined now by Carol Masser and Tim Stenivek. And, of course, we welcome our Bloomberg audiences across television, radio, YouTube, and originals. We were joking around, Carol, about how it's such a slow day because you already have NVIDIA done.
Check.
That was a catalyst that's done, right. And you don't have Jay Powell yet. So what do you do in the meantime?
Meanwhile, we're like parsing over all of the Fed officials, right, that are speaking leading up to Jay Powell tomorrow. And maybe that's why there's a little nervousness in the markets. But you really say it right. I will say NVIDIA check, but it's definitely a focal point today, right? I mean, this company hitting a record high in today's trade, although it's backed off, it's more than 6% gain early in the session, still up about just shy of 2%. But, you know, we expected a blockbuster quarter. We broke it down yesterday. We got it. We got a massive buyback. But it hasn't necessarily given that overall AI kick that I think everybody was anticipating.
Well,
other names, maybe.
I wonder to what extent, you know, the hype was really baked in to a lot of these companies, or the hype was even baked into NVIDIA, even though it was such a beat. We've seen the stocks, Scarlett, really give back a lot of the gains from late yesterday and from earlier today as well. I don't know how much that has to do with the overall market versus it being an NVIDIA story, but expectations were so high for this company.
Yeah, I think you summed it all up. It's both. Expectations are really high. It was priced priced in, and there's a lot of nervousness out there. AMD, which is also beneficiary of demand for AI gear, certainly is going to be making chips, but they don't make it yet, and they're so far away from being able to take any market share from NVIDIA or even absorb some of that.
Okay, I came prepared with my tech nerd hat on. I talked to Bloomberg Intelligence.
Where is, I don't see it. Where is it?
Oh, it's on. Trust me.
Just imagine
it's definitely on. And a part of this is this move over to GPUs, graphic processing units, relative to CPUs, central processing units. And it's why you're seeing NVIDIA have a great gain here, but others like Intel not feel that same boost. And so when you're looking at the stocks, it's pretty remarkable. For anyone that thought that NVIDIA would lift all boats, you did in the early trading yesterday, after market, see more gains. You're seeing all of that wiped off across the stocks because you are seeing NVIDIA really benefit from that move relative to others, especially because of its own size.
Chanel, you're not a gamer?
I was a
you
gamer.
Were?
Oh,
were you
my
building your own computers with NVIDIA chips?
Don't count me short. I was a gaming reporter here at one point,
Love it.
Tim.
Okay.
She did it while she wore her tech hat. You know, the other story that caught our eye
Speaking of gaming.
Yes, exactly, is Michael Jordan and how much wealth he's accumulated. He is the richest NBA legend. He has a fortune of about $3.5 billion, and we're able to come up with this number because, of course, he recently sold his stake in the Charlotte Hornets.
Yeah, and the reason I love this story too is because you're seeing individuals mostly own these basketball teams. Over the last several years, you're seeing a massive surge in these sports franchises. One question that is looming large in the market, especially because a lot of these sports franchises are starting to institutionalize, bring in investor money through funds. Are they topped out? All depends on media rights. Very interesting to watch in the future.
Okay, but to understand his wealth, we got to go all the way back to the 1980s when he was in the early part of his career, and a little deal with a company called Nike, okay? So you go back to 1984, Carol. Jordan signed a 5-year contract with Nike for $2.5 million. First year Jordan came a little bit after that. Last year, the Jordan brand recorded $5.1 billion in revenue, about 11% of all of Nike's revenue. We don't know how much Jordan gets from that. Bloomberg estimates it's about 5%.
Listen, it was his rookie season. Nike, Jordan, not household names, but what was really key is that he took a royalty, right? And that changed the game when it came to really celebrity sport brands, if you will. Really changed the game, no pun intended. And he's made a lot of money since.
But it's gone beyond just your rich contract and endorsements. It's all about owning equity in companies, right? And that's where you can really make the money. People like LeBron James, they're all about getting equity in the companies that they can get in from the ground up.
And his mama did it. That's what I love, right? She was so adamant in terms of, go see the movie Air. If you have not, it's like an incredible movie and really spells
it's
it out
on
for you.
Amazon Prime right now, so.
Yeah, right?
Some of the best investors learn from their mothers.
Okay, yeah. Well, hey, yeah. All right,
That sounds like a series.
But don't go watch it now because we're going to be back in less than an hour's time. And we're going to wrap up the Thursday trade. Guys, we will be back to count you down to the close on this Thursday. Our cross-platform radio, TV, YouTube, and of course, Bloomberg Originals Beyond the Bell, 4 p.m. Wall Street time. We'll see you then. Well, we definitely want him alive, that's for sure. But our own Bloomberg cowboy, he is out there. Out west, we are talking about our Bloomberg News international economics and policy correspondent, Michael McKee, there at the Kansas City Fed's annual symposium in Jackson Hole, Wyoming. And Mike, so good to have you here. I do feel like there's a fair amount of, we got some U.S. economic news. You spoke with Jim Bullard, not part of the Fed anymore, but certainly a voice that we care about, listen to, and someone who is way ahead of the concerns about higher rates. First of all, I don't know, what's top of mind? What'd you have for dinner last night? I'm just curious, are you eating a lot of great beef out there?
Well, we are having some Western food. We're having elk and bison and things like that to celebrate the fact that we are here in the Rocky Mountains. But you're right, Jim Bullard was very interesting this morning. He was always traditionally our first guest out here because he's the only one willing to get up at 6 o'clock in the morning. And now that he's no longer on the Fed, I told him, you still can't escape us. You still have to get up that early and come on.
What did you make earlier of his comments about the long and variable lags and how they're not as long and not as variable as when Milton Friedman said that, a few decades ago?
Well, that's one of the big arguments that's separating people on the Fed at this point. Some look at it and say the markets move even ahead of the Fed saying anything because investors are anticipating what the Fed is going to do. And they look back and the market yields started to go up before the Fed even started raising interest rates. And so they say we get a faster transmission. And so we should see what we're seeing now should be the impact of the lags. There shouldn't be much more to come. And then there are others like Jim Bullard who says it hasn't changed all that much yet. And you still have some of these lags to go. They haven't hit. And so we have to be careful. If we raise rates too much too fast, then we have the recession risk.
Well, let's take a listen to what Bullard had to say during that interview. Check it out.
Reacceleration could put upward pressure on inflation, stem the disinflation that we're seeing, and instead delay plans for the Fed to change policy.
That was, of course, James Bullard. He resigned last month to become dean of the Mitchell E. Daniels Jr. School of Business at Purdue University. You did speak to him a little earlier
Mike
today.
did speak with him, right?
Yeah. So, Mike, what do you think? What do you think, though? You know, you say there's this difference between what separates some officials in the Fed versus other officials on the Fed. What do you think about how fast transmission is?
Well, there is an open seat on the Fed, so I can give my opinion, I guess.
I like it.
But I think that there is truth in the idea that the long and variable lags are shorter and perhaps less variable than they used to be. The question is, how much is still in the pipeline? Have we had most of the impacts? We're starting to see some numbers like those ISM numbers that came out yesterday that suggest all of a sudden we're seeing something of a slowdown. And if that's the case, then the lags are shorter. Now, the question is, at this point, how do you explain something like the Atlanta Fed GDP now, which came in today, 5.9% for the third quarter so far? Obviously just a snapshot in time, but it's not suggesting that there is a lot of weakness out there.
So, Mike, one of the stories that's certainly on the Bloomberg about all of this is the obsession over the R gauge before Jackson Hole and before we hear from Fed Chair Jay Powell. So basically what, the neutral rate here?
Yes, essentially think of it as the rate that neither stimulates or holds back the economy. It is neutral, as it were, towards growth. And there is a question about whether that had moved up. In the 2000s, before the pandemic, it had fallen to around 1% or so. The Fed had very low interest rates. Inflation was very low. You didn't need higher interest rates. But now, obviously, we have inflation up and we have interest rates higher. And so the question is, does that neutral rate stay that high? Or does it come back down? John Williams of the New York Fed's done work on it, and he says it's going to come back down. Others say, no, it's not likely to come back down. And that has an impact, obviously, on what the Fed's going to do with interest rates over the medium or longer term.
Mike, going back to your interview with James Bullard, his concerns about inflation basically rearing its ugly head again. I mean, this is the predicament, right? Tight spot that the Fed is in, that if they maybe pause too early, that will lead potentially to some enthusiasm and folks kind of going out and making moves, buying, doing activity that essentially leads to greater inflation.
Well, if the Atlanta Fed is anywhere near correct, then inflation is a greater danger because you've got growth 3 times what potential growth is thought to be. And that would mean there would be shortages of materials and people, workers, and that could push up inflation fairly quickly. If you think that that number is kind of out of bounds and we're going to slow down like a lot of people are predicting, then you don't have that issue, but you still have the possibility that inflation could rise because oil prices rise or something else happens. So Bullard is sort of on the takeout insurance side. Yeah. Might as well do that extra rate increase that the Fed said they were going to do in June and just protect yourself. He doesn't think that given the growth path that we've seen lately, that recession is a real danger at the moment.
That Atlanta Fed GDP now number, how reliable is it? How much does it move around?
It isn't particularly reliable right now because it's only incorporating July numbers. So July was fairly strong, we see in a lot of these different categories. And so it doesn't capture where we are until the week before maybe we get the GDP numbers. So at this point, it's just sort of like a presidential poll. It tells you what voters are thinking at this point in time, but by election day, it's going to be completely different. Same thing with the Atlanta Fed. It's just that the 5.9% growth rate is so striking, it's got people's attention.
But Mike, when we do get to the end of the quarter in the last week, it's pretty spot on, right?
Well, it's close. I mean, it's very hard to estimate all these things. But in the second quarter, they were bang on. 2.4% is what the Atlanta Fed said, and we got 2.4%. So it's a guide to where we are and where we're going, but it's not going to give you the exact number.
Hey, in the current issue of Bloomberg Business Week magazine, or actually I think it was last week's issue.
Are you talking about the Dear Jay letter?
Barry Ritholtz wrote a Dear Jay letter, and he takes exception with some economic data points. We did get some data, weekly jobless, durable goods. And then there, Mike, is Taylor Swift, Beyonce, and Barbenheimer. The fever giving a serious boost to the economy. Bloomberg Economics saying that could give about $8.5 billion to U.S. growth, contribute $8.5 billion to U.S. growth in the third quarter. When you look at data points, I don't know, what is it telling you? And which ones matter?
That the economy is stronger than the Fed thought, yeah. We see that, and clearly it has some momentum, and Americans are still spending. They're sort of spending at a 2019 rate now, as opposed to where we were coming out of the pandemic with that extra money that people got. But when you think about the Barbenheimer money, $8.5 billion, that's a lot of money for you, me, and Tim. But this is a $24 trillion economy. So that's sort of a rounding error. It isn't really going to make that much of a difference.
All right, what about your spending on hats, cowboy hats? Is that going to move the needle on the U.S. economy?
That could move the needle, and I'm trying to work up now an endorsement deal where I get royalties. It seems to have worked for other
Do you think
people.
you're Michael Jordan or something?
Yeah, it's not. Hey, just call him Mike, okay?
Just
call him Mike. Hey, before we let you go, Michael McKee, what's the vibe there right now?
It's kind of relaxed compared to previous years. I mean, we have the pandemic largely behind us. There's confusion about exactly what's happening in our economy and other economies around the world, but it's sort of getting back into that phase of this is normal. We don't exactly know what's going to happen to the economy. But one of the central bankers told me today it's a little bit of a difficult position for them now because before it was easy. We're raising rates. We know what we're going to do next. And then in the past, it's been we're going to bring rates down because we're in a recession or something. But right now, it's very uncertain. So they don't know what they're going to do next. And everybody wants them to tell them what they're going to do next. So they're kind of in a difficult position when they're doing interviews and they're out in a place like this.
Does Jay Powell wear a hat when he gives a speech, Mike?
I don't know.
Maybe a fleece vest.
I'll ask him.
Looking forward to it in your continued coverage. Our Michael McKee, International Economics and Policy Correspondent at Bloomberg News out there at the Jackson Hole Economic Policy Symposium. You're listening and watching Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We are holding very close to session lows. 38 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all in the red, right to the numbers, with the S&P now down 39 points. That is a drop right now of just about 0.9%. The Dow lower by 229 points, down by about 0.6%. While NASDAQ, the composite index, down 188 points, a decline there of 1.4%. 10-year yield at 4.22%, with a 2-year now yielding 5.00%. We've got gold, spot gold up 0.1%, up $2.50 the ounce to just about $19.17, while West Texas Intermediate crude up 0.2%, $79.04 a barrel. NVIDIA, after earnings, up now by 1.1%. Former Federal Reserve Bank of St. Louis President Jim Bullard says a pickup in economic activity this summer could delay plans for the Fed to wrap up interest rate increases. Bullard made the comment in an interview this morning with our Michael McKee at the Kansas City Fed's annual Economic Policy Symposium in Jackson Hole, Wyoming.
Those that have been predicting imminent recession are having a lot of trouble here. It doesn't seem to be happening, and this reacceleration could put upward pressure on inflation, stem the disinflation that we're seeing, and instead delay plans for the Fed to change policy.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. The wireless carrier T-Mobile is cutting its global workforce by just under 7%. T-Mobile shares, they're down 1.7%. Rival Verizon up 0.7%. AT&T up by less than 0.1%. And we're again recapping. Stocks are lower, with the S&P down 42 points, a decline right now of 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Appreciate that, Charlie. Well, we want to get back to one of our big stories of the day. It started last night after the close when NVIDIA reported their latest quarterly update. The stock did hit a record in today's trading. It's definitely backed off its highs of the session. And though I will say, like, Bloomberg has been writing about how it's kind of increasingly growing into its scorching valuation every time the chip maker reports earnings.
Well, that's because its forecasts have really dwarfed Wall Street projections by so much that estimates used to value the stock have risen faster than NVIDIA's shares. Its price relative, Carol, to projected profits, it's fallen below 39 times after it delivered its latest eye-popping projection last night. That's down from 63 times before its May earnings report.
One last thing, we just talked about it with our TV colleagues. The last research firm with the equivalent of a sell rating on NVIDIA threw in the towel. Morningstar upgrading the chip maker to hold, saying it is much more optimistic about the rise of AI workloads and how NVIDIA's wide moat should cement itself as an AI chip leader.
All right, Morningstar jumping on the train. With more on the company's fundamentals and role in the semi-space and the race for all things AI. With us, we got Bloomberg News U.S. semiconductor and networking reporter Ian King. Also with us, Bloomberg Intelligence senior semiconductor analyst Kunjan Sabani, both from our San Francisco bureaus. Ian, I want to start with you because you got some news post-earnings on the company. A big concern that a lot of observers have is of a chip shortage. Of course, NVIDIA relying on TSMC and Samsung for components. What did you hear from the CEO, Jensen Huang, when you asked about this?
Yeah, I mean, really, this was the big thing coming into earnings was, would they be able to get enough chips? There wasn't really that much concern about demand. And, you know, had a chat with Jensen afterwards, and he said, look, we've been really, really working very hard on this. This is, you know, kind of a major priority for us, and here's the progress, and we're going to continue to keep doing that. And, you know, they gave details about, you know, they see supply increasing for them every quarter well into next year, which is really what investors wanted to hear.
Interesting. All right. So, Kunjan, come on in on this. Ian definitely highlighting certainly the concern about NVIDIA. Your take on what you heard, what Ian just talked about, and just the overall report and outlook.
Like in the same lines, you know, going into the earnings, there were two key factors that we outlined in our preview that investors will be looking for. One is supply getting better, which they did announce and validated. And second was giving some kind of a momentum or fate to this sustainability of the AI demand, which they again highlighted. To put in context, data center segment was already expected to grow sequentially close to 90%. An ambitious goal, that's something you don't hear regularly. They ended up growing 140%. So I think this gives some ease that this demand rally does have legs.
So when the CEO, also the founder, Jensen Huang, says the shift to AI is only beginning, I mean, Ian, how do you think about kind of what else is to come here? And, you know, I was talking with some folks here in our newsroom, and they said, you know, what happens a year from now when those year-over-year comparisons become tougher for the company? Can it really continue with this momentum?
No, I think you've nailed it there with that question. This was another major concern is sustainability. He gave some commentary. He said, look, data centers don't get built overnight, right? These things take months, if not years. We know our customers' plans, so we've got that, you know, that window of what we know is exactly what is going to happen. But in sort of broader terms, he made the point in the conversation I had with him, which is like, look, it's great if ChatGPT helps a few knowledge workers to write a bit better code, helps a few consumers to, you know, write an essay or help them with an email or something like that. But if that's all it is, that's not fantastic. What he said was what gets him more excited, what he's working on, what he thinks needs to happen is it has to become entrenched in the economy. Large, heavy industries have to transition to using this technology to help with their operations, to help with productivity. He's working on that. He's working on making that easier for them. As that happens, this technology broadens its basis and becomes more pervasive and becomes, you know, clearly something that isn't as ephemeral as some people would like to believe it is.
Kunjan, I want you to hit on that a little bit. It makes me think of a conversation that I had years ago with a friend who worked at one of the big tech firms. She told me that technology was no longer this sector. It was like this layer that kind of permeates every little bit of our lives. You know, we're on our smartphones doing these things. We're at the doctor's office. The doctor's using technology. And it's this overarching term. Kunjan, what happens, does AI ever get to that level? And what does it look like in a day-to-day life beyond industry, beyond factory?
I mean, look, from our perspective, we think of this as when you had the internet come in, right? When you had the iPhone come in. Wow. Those technology inflection points had a long cycle, almost like a decade before it hit a plateau. So we think this is in the very early innings. This definitely has the ability to permeate into our everyday lives. You know, the next big step would be large language models or generative AI running on your smartphones. So there's definitely room for this to run here.
Well, and I do wonder, you know, Ian, we talked about this already with you yesterday, and just this concern that how do we make sure we continue to be smart and not get caught up in the euphoria? And that's what I think about constantly. Is there a chance that some of this optimism doesn't play out? Or does this feel like, yeah, this makes sense, especially in a world where there's so much data and we continue to get smarter? It's not just a dump of data, but we continue to fine tune it and make it work better and smarter for us.
I mean, I think that's a very poignant question. You know, we went through this with the dot-com bust, and that's obviously something that people are drawing parallels with. What I would give you as a response to that, and what I'm hearing is that, like, look, AI as a concept, which is basically statistical analysis, has been around for a long time. The algorithms that we're using now have been around for decades, right? What's changed is the data that we can now tap to use them, and the computing power that we now have that can actually make that happen. I mean, we just talked about smartphones, right? Imagine something that you're carrying in your pocket is capable of taking massive amounts of data that you're generating just by living and walking around and turning that into something useful and productive that helps you with your life. If that happens, and that's what we're moving towards, then that's creating economic value. And I think that's the key. If you look at all of these applications that are being proposed, whether it's drug discovery, whether it is, you know, factory planning, whether it's, you know, designing robots, whatever it is, if there is genuine economic value and efficiency and production to be created there, then it has legs. what we saw at the beginning of the internet was the promise of that, and then everybody was like, oh, where's the value, right? And it came, but it took a while.
Well, Kunjan, too, and in keeping with what Ian said, you know, we recently had a guest on that talked about quantum computing and the connection with AI, and this idea that, you know, you can solve and decode problems much faster than classical computers, and it's basically, you know, large-scale systems and layers. So is that something you also think about, Kunjan, this role of, you know, a whole advanced computing way and the role of AI in all of it?
I mean, look, just like Ian said, AI has been there for a long time, right? But we are now seeing this big acceleration because we finally have figured out to use this concept like generative AI on actually implementing in day-to-day use cases, at least at the enterprise level. So similarly, I think, look, this concept of quantum computing have been coined for many years. A lot of people have been working on it. But until it comes to the point where you can deploy it to the masses, I think that's when you'll see another rally over there.
Well, it's really cool stuff and certainly keeping us all engaged. Guys, thank you so much. Really appreciate the breakdown. Ian King, U.S. Semiconductor and Networking Reporter at Bloomberg News from our San Francisco Bureau. Also in our Bureau, Kunjan Sabani. He is Bloomberg Intelligence Senior Semiconductor Analyst, as we said, both there out on the West Coast. By the way, shares of NVIDIA still up about 1.4%, but way off their best levels of the session.
All right. From San Francisco to Washington, D.C., for a check on the latest world and national news for Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Former President Trump will surrender to authorities in the Georgia election case at 7:30 p.m. Wall Street time. That's what he's posted on Truth Social. His former chief of staff, Mark Meadows, has been processed at the Fulton County Jail this afternoon. The event is drawing detractors like Ryan Lee and supporters like Pat Call.
The shenanigans they pulled in 2020 were insane and illegal, and it's something to be celebrated that he's finally being held to account here in Fulton County.
We just wanted to be here to pray for him, to show support for him.
Fulton County District Attorney Fonnie Willis has requested the trial begin October 23rd, but Trump attorneys are pushing back on that date. Many Americans who are counting on Social Security when they retire may be counting on more than what's coming.
The latest survey from the Nationwide Retirement Institute finds baby boomers expect about 47% of their income to be replaced by Social Security. The reality, though, according to the Committee for a Responsible Federal Budget, is that Social Security will only cover about 37%. That's for retirees who earned what the Social Security Administration considers the average wage in recent years, about $60,000 a year. Those who earn more will see that percentage dwindle even further. In Washington, I'm Nathan Hager, Bloomberg Radio.
U.S. authorities now believe the death of Wagner founder Yevgeny Prigozhin in a plane crash yesterday was an assassination that was likely approved by Russian President Vladimir Putin. They believe there may have been a bomb on board. Retired Brigadier General Mark Kimmett tells Bloomberg Sound On few in Russia are talking about it.
I think everybody's keeping their head down and their mouths shut so that they're not the next victim of Putin's ire.
Global news 24 hours a day, powered by more than 2,700 journalists.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, Russell 2000, all in the red on the S&P. Worst level of the day right now. 20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a big reversal today. The Dow is currently down 288 points, was higher by 222. NASDAQ is lower by 217, while the S&Ps dropped 47. The U.S. 10-year yield at 4.23%. Gold is up 2. Oil is little changed. And Bitcoin, that's down by 2.1%. Among the main 11 S&P sectors, all were trading in the red, led by declines in tech and telecom. And leaders to the upside in the Dow, Travelers and Verizon, while Boeing fell 4.7% and led to the downside. After earnings, NVIDIA is now little change, pairing open gains of 7%. And in other news, the Boston Fed president said the U.S. will have restrictive rates for some time. Wrapping things up, some of the names pointing after the bell tonight include Intuit, Marvell Tech, Ulta Beauty, and Workday. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got under 18 minutes left in today's trading session, and we've got an interesting one. Charlie, of course, just breaking down the numbers. Equities near their lows of the session, despite those blowout numbers from NVIDIA. It is way off its high, and you've got the NASDAQ way off its high, as we heard, down about 1.6%. So it's a very risk-off trade today.
Opposite of what we saw from yesterday, Carol.
Yeah,
where, how did you describe it? Everything is awesome?
It was broad-based buying. You really saw it, and you really saw investors moving in. It's interesting, though. It does feel like a little bit of a wait-and-see mode. We got some strong economic news. We talked about that with Mike here in the U.S. Expectations for some strong economic growth. We see that from the Atlanta Fed. And so what does it mean ultimately from Fed members? Worries about inflation picking up again. So does Jay Powell have to be a little bit more hawkish than dovish tomorrow?
Well, let's see what's top of mind for our next guest. Nadia Lovell is a senior U.S. equity strategist at UBS Global Wealth Management. She joins us on Zoom once again from New York City. Nadia, how are you?
I'm well. Thanks for having me.
Yeah, it's good to have you back. What's top of mind for you on a day like today when we're seeing such a sell-off?
I think we are more focused on, of course, what's going to happen at Jackson Hole tomorrow. And then, of course, next week will be labor market data. I think what you're seeing in the market right now is that this pullback on risk-off sentiment. Remember, liquidity is kind of low this time of year in August. And so it's not surprising to see people take a little bit of risk off of the table ahead of the upcoming Labor Day holiday. So I think that's what you're seeing.
To be honest, I do feel like we're all so tired of figuring out what will the Fed do, what won't they do. It doesn't get us anywhere, right? Because ultimately the Fed's going to do what it's going to do when it meets next, Nadia, at its September meeting. So what do you think is constructive? What is the data that you look for, whether it's economic data, whether it's valuations, whether it's an earnings report, whether it's technicals? What is it that says to you something interesting and productive is happening to the upside or downside when it comes to the trade?
We are very much focused on the earnings outlook. I think you make a great point in terms of the macro having dominated a lot of stuff this year, but I think that you're now moving to a stage where the earnings outlook is going to matter even more. We know that valuation levels are quite elevated this year. Much of the market performance has been driven by that. I would say in terms of our view on the earnings outlook, we think it has improved a bit coming out of the second quarter. We do think that the earnings recession that we've been calling for since last year is now behind us, and the second quarter probably marks a trough in earnings. So we're looking for a recovery in the second half of the year for a full year of about roughly flat earnings. But we think a lot of this is already priced in at this stage, just given how elevated valuations are.
I want to go back to what you said about all eyes on Jackson Hole. What do you expect to hear from Jay Powell that could move markets?
I think we expect to hear a little bit of more hawkish tone from Jay Powell compared to where market expectations might be. We do think, though, that the last rate hike was the July meeting. We're looking for the terminal rate to settle in right where it is at 5.25% to 5.5%. But we can't rule out the possibility of another rate hike. We know that the macro data has been coming in stronger than expected, and so that could give the Fed some wiggle room to do one additional hike later this year. We know that that's already sort of their base case from the June SEP. But the Fed does recognize that there's long and variable lags to their monetary policy. And this cycle is so unique. It's very difficult to determine what those lags will be and how long they will be last. But I think the focus is more around how long does the Fed stay at these levels? How long does rates stay high? And we don't think that an additional 25 basis points is going to break the camel back. It's more how long that load stays on the camel's back.
Nadia, Tim knows I'm going to kill you for going back to Fed talk.
I'm surprised she didn't kill me while you were giving that answer.
Are you kidding me? So wait, what you say though, since
we're done with NVIDIA, Carol. All there is the Fed.
Since you went there, Tim. Nadia, so, do you feel confident enough in your thinking about monetary policy in the U.S. and what U.S. central bankers will do to trade on it, or no?
At this stage, no. We think that, like I said, we think that the Fed is done, and we do expect that rate cuts will happen in 2024. The market keeps pushing those out at this point. So we think that the sort of, in line with market expectations, and it's less more about like what the Fed does and actually how the economy does in response to the Fed, what the Fed has already done.
So are you worried about consumers? Because I think about student debt. I think about, all those balance sheets that were doing so well and, credit cards, whether it's...
Macy's. What did they say about delinquencies? Rising faster than expected.
Right, exactly. So that's the thing that, we know how important the consumer is in terms of our U.S. economy here. So how do you think about that?
We're getting a mixed picture of the consumer. We know that July retail sales really overshot to the upside. I would say even throughout the earnings season, we've been hearing some concerns around this consumer, even from the consumer product companies. Consumers are becoming more measured and targeted with their spending, and it's becoming difficult to pass along those price increases. And as you noted, the retail sale environment, retail earnings this past week, I would say some of these companies, we have to recognize that they do have some idiosyncratic issues, but there are clearly pockets of weakness when we are looking at the credit card delinquency data, and also delinquency rates have been picking up in auto loans, and of course, as you mentioned, resumption of student debt repayment in October is a potential headwind. But I would say, given the labor market is so strong, we're not overly concerned about the consumer. We do expect the consumer spending to slow, but we don't expect it to fall off of a cliff.
It's almost like the favorite word, Carol, of executives and press releases is AI this quarter and last quarter.
Right.
Second, the favorite word for retailers is shrinkage. That's the industry term. It's true. It's the industry term that refers...
kitchen sink. Just throw it all in.
Well, it's the industry term that refers to, the kitchen sink to everything, but it includes theft. And I'm wondering, Nadia, if that, how you read into that, is that a sign of what's happening in the economy, or do you think it's a way that these companies can blame poor sales or poor margins?
No, we do think that shrinkage is real. It's been an issue for quite some time, and it's become even more organized. It's not your everyday consumer that's walking in and just walking out with things onto their shoulders without paying for it. So we do think it is an issue, and maybe AI can help and technology can help solve some of these issues for the retailers. But outside of that, we do think that there is clearly softening in discretionary spending, and some of these retailers are being affected by that. Also, we've seen a pickup in online sales in July, dominated by Prime Day. So I think that there's been some loss of market share there as well.
All right, we're going to leave it on that note. Nadia, take care. I know it's only Thursday, but I know the weekend's just around the corner, so enjoy yours. Nadia Level, she is Senior U.S. Equity Strategist at UBS Global Wealth Management on Zoom in New York City. Hey, Tim, I'm looking at the trade.
What are you seeing?
11 major industry groups in the S&P 500 all are down. At the bottom of the pack is information technology. So those high flyers certainly taking it on the chin today.
Yeah, sell-off accelerating, too, as we get closer to the close. The S&P 500 down more than 1.2%. The Dow, or the NASDAQ down 1.8%.
Fed talk, buddy.
Sorry, I went there.
You went there. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on shares of Dollar Tree. That stock right now down 12.5%. Its outlook fell short of analyst estimates. The retailer is contending with challenges such as higher wages and a less profitable sales mix a year after introducing a higher price point. Shares of Boeing and its biggest supplier, Spirit Aerosystems Holdings, are lower. They're down after the playmaker disclosed improperly drilled holes in a component that helps maintain cabin pressure within the 737 MAX jet. And with more on the story, here's Bloomberg's Denise Pellegrini.
Well, Charlie, the latest issue with Boeing's best-selling model, it does threaten to derail delivery targets for the MAX as the company speeds the manufacturing pace of its cash cow airliner. An analyst at Citi says, while the financial impacts aren't yet completely clear, it does appear the fix is likely to take several weeks for completed aircraft, and that, according to the analyst, likely puts pressure on Boeing's delivery forecast for the entire year. And in case you're wondering exactly what's happening behind the scenes at Boeing, the FAA says this new issue is not a safety threat. It's another complication, rather, for Boeing as it speeds the manufacturing pace of the 737 family while dealing with supply chain strains and the aftermath of a strike at Spirit, which builds about 70% of the narrow-body jet's frame. Charlie.
And that's Denise Pellegrini reporting. Boeing, a member of the Dow, down 4.7%. Spirit Aerosystems down 12.9%. And those are some of the company stories that we're following for you at this hour. I'm Charlie Pelleton. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, in just about 4.5 minutes, we're going to head over to our TV colleagues and wrap up the Thursday trading day. What's the matter? Don't you like them?
I love them, yes.
It
seems like we were just hanging out with them.
It's been an interesting day. We thought, the NVIDIA euphoria, which initially spilled over to a lot of AI names, alas, no more. NVIDIA is still higher on the day, but well off its more than 6% gain that we saw earlier in the session.
So it's interesting. It's not when it comes to AI and the chip makers and NVIDIA, it's not a rising tide lifts all ships type of thing.
Nope.
Especially with a company like AMD that is working to become a better competitor to NVIDIA. AMD down 7% right now. It's the worst performer in the SOX, Carol.
Yeah.
All the SOX components are lower. Just because NVIDIA had a good quarter, gave a great projection, not necessarily good news for the others.
Not all chip companies are the same, and that is certainly something, and Ian King would point out that, when you look at the chip space, there's different types of players, and NVIDIA has definitely been out there front and center when it comes to the chips that are needed for next-level generative artificial intelligence. All right, we're going to talk a little bit more about that. I want to go back to a story we talked about with Mike. Taylor Swift, Beyonce, and Barbenheimer, fever, giving a serious boost to the U.S. economy. Mike put in perspective, yes, our Bloomberg Economics team saying that altogether, the tours, the blockbuster films, expected to add about $8.5 billion to U.S. growth in the third quarter. And keep in mind, the U.S. economy is pretty massive, so it's kind of a drop in the bucket.
Okay, so taken together, that would raise annualized real personal consumption expenditures by GDP by 0.7% and 0.5 percentage points, respectively.
That's moving the needle a little bit.
That does move the needle. That's according to economists Anna Wong and Eliza Winger here at Bloomberg. They wrote that in a note yesterday. The economists nearly doubled their forecast for growth in the July to September period, partly as a result of those spending gains.
Yeah, absolutely. And I think, this story gets into that basically inflation abating, definitely down from last year this time. Labor market still strong. We saw that again in the weekly jobless claims numbers. So consumers are still out there spending, whether it's on Tay-Tay or
U.S. Open?
Bay or the U.S. Open.
Yeah, but it's only Taylor Swift and Beyonce who can, get spending like that.
What are you saying?
I mean, maybe we take this on tour and we'll be able to get a little bit of that.
Is that a little Metallica? Is that what that is?
$8 billion.
No, I don't know what that is. All right, folks, listen up. We're going to head over to our TV colleagues. That's because Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Scarlett Fu and Sonali Basak here with you, counting you down to the closing bell. And here to help us take you beyond the bell with the global simulcast is Carol Masser and Tim Stenovic. Welcome, of course, to all of our audiences across Bloomberg Television, radio, and YouTube as we parse through the most crucial moments of the trading day. And at one point, Carol, it looked like NVIDIA might erase its gain.
Yeah, that's pretty interesting, right? It was up more than 6% in the trade, and that AI euphoria across the space has really run out of steam. I'm looking at something like the Global X Robotics and AI ETF. It's down about 1.5%. It was up earlier in the day. If you look at C3 AI, it is down about 11%. And then SoundHound AI, it is down about 7.6%. So any of the enthusiasm has definitely run out of steam.
I mean, look at the stocks. It's down more than 3% right now. It's got one company there in the stocks, Sonali, is higher, is in the green. I'll give you a guess. It's NVIDIA. Yes, there it is.
Just barely.
That's it. That's it. Everything else is lower.
To the point that everyone is making here, can NVIDIA really see so much of a gain here, a continuous gain, when we're seeing everything else lose out? The hope behind the AI rally here is that it would lift more tides in the market, but you're not seeing it turn the S&P or even the stocks in the way you want it. In fact, you're seeing just the opposite. Now, this could just be a one-day move, right? But let's see what this one day means for investors as they think about their AI bets moving forward.
Right, or it could be a resumption of the previous 3 weeks in which there was a lot of weakness for the big winners, notably the big tech names. And of course, as we head into a seasonally weak period, there's a lot of questions about whether this is just kind of a precursor of what's to come. There you have the closing bells, and it is red across the screen here, and we're pretty much at session lows for the major indexes. The S&P losing ground here by 1.4%. The Dow Industrials losing 1.1%. The NASDAQ, the big loser of the day in terms of percentage of decline, 1.9% loss, and the Russell 2000 of small cap companies losing about 1.25%.
All right, well, let's get a check on some of the, we're still getting some earnings crossing right now, getting a check of what Intuit is doing in the after hours right now. Having a little trouble pulling it up, but it is a reminder that earnings season is by no means over at this point, guys. We're still getting plenty of companies reporting, including Splunk yesterday and Intuit right now. The company's saying that it sees fourth quarter adjusted earnings per share of $1.65, beating estimates of $1.46. The company's seeing first quarter adjusted EPS of $1.94 to $2. So that's within the range of estimates. That was $1.97. In the after hours, it is not moving. Fourth quarter net revenue coming in at $2.7 billion. That did beat estimates of $2.65 billion. Moving a little lower, unchanged in the after hours, guys.
Yeah, stock is up on the year. It's up about 28%. So again, maybe in this environment, investors expecting a little bit more. Talking about the outlook, 2024 revenue of $15.89 billion to $16.11 billion. The estimate is $15.96 billion, so it does look like it's giving some upside in terms of that range. But again, Sonali, continuing to see that stock just down a hair, down about 0.8% in the after hours.
We're also getting some results from Workday here as well. We are seeing generally the beating estimates, revenue coming in at $1.79 billion, just above estimates. We're also seeing adjusted EPS also coming in above estimates, beating by 20 cents per share or so, 143 a share. The estimate was 126. Now, this was a company that was already up more than 30% on the year. So let's see how investors bite on the results. But a slight beat there across the board.
All right. In the meantime, let me go to my gainers. I'm a little nervous that maybe they didn't hold. So fingers crossed here, everybody, especially as
no hard feelings, Carol, if it didn't work, okay?
Do not judge.
All right, I see a lot of green. You're okay.
This is
I
live
see all
TV and
green.
live radio. What
You're
can you
okay.
do?
Here we go, everybody. Autodesk. This was actually, when we talk about, what was top in the NASDAQ 100 and the S&P 500, this is the #1 gainer in the NASDAQ 100, so definitely above NVIDIA. And if I look at the S&P 500, it's the #4 gainer, so it's up about 2% here at the close. Earnings last night, we broke them down. Software company reported second quarter results, beat expectations. The company did raise its full-year forecast for adjusted earnings and also raised the low end of its full-year forecast for billings, free cash flow, and revenue. So investors keeping that stock up with a 2% gain here for the Thursday trade. NVIDIA, let's go there. Way off its highs of the session, still up just about 0.1%. You know the numbers, blockbuster numbers. Everybody was excited, but nonetheless, that enthusiasm running out of steam, despite Morningstar, that lone sell rating on the stock, finally jumping on board and changing that rating, but nonetheless, really running out of steam. Keep in mind, NVIDIA is still, I think, the #1 gainer in the S&P 500 by a mile this year. And Splunk, I want to go. You want to look for a tech standout? Check
There you
that one
go.
out.
Yeah.
Up almost 13% in today's session. It's an infrastructure software company, reported second quarter revenue that beat estimates. It also raised its full year forecast beyond expectations. It hit a 52-week high in today's session. We're going to actually talk to the CEO in the next hour. Has an AI play. It's cybersecurity. So curious to see what he has to say about IT spending right now.
All right. Well, speaking of an AI play, let's get to decliners right now, because there were certainly some within this space, within chip makers. AMD finishing the day down by 7%. The stock's falling more than 3%. 29 of the 30 components in there lower. None more so, though, than AMD falling today. Not necessarily good news for the entire industry, even though NVIDIA had a great quarter. AMD, I should say, is way behind when it comes to developing chips with AI capabilities, the same way that NVIDIA is trying to do. Dollar Tree finishing the day down by close to 13%, 12.9%. Their third quarter earnings forecast fell short of analyst estimates. Handful of challenges that the company is facing: higher wages, a less profitable sales mix, and then, see if this sounds familiar when it comes to retailers that we heard from this week. They mentioned, quote, elevated shrink, which of course includes losses from theft. We've heard that from other companies, including Dick's, Macy's, and more. So add that to the list of companies concerned about theft. Petco, woof. That's the ticker, but also a woof day for the company, down more than 20%
You gotta
today.
work on your bark there, buddy.
You'd be the second person today to make that joke.
Really?
Yeah.
Oh, okay. I guess
He was
it
saving it
says
for today.
I'm in good company then, I guess.
You are.
It did hit a record low, I should note. The new guidance missed the average analyst estimate, the company cutting its adjusted earnings per share forecast for the full fiscal year. Ron Coughlin over at Petco, we've spoken to him quite a bit over the last few years. He's the company's CEO. He said discretionary spending is continuing to be pressured.
Yeah, for sure. And you're looking at investors discern between the winners and the losers for when we do spend, how particular we're becoming to what we spend on. Let's take a look at how yields ended the day. Up across the board as the sell-off continues. The 2-year yield now yielding more than 5%. The 10-year yield 4.25%, or just under 4.25%. You go out to the 30-year, 4.29%. At some point, Carol, you figure that investors are going to start switching into bonds from stocks, because those yields are pretty juicy.
Exactly. I mean, and with less risk, right? So why wouldn't you take something like a 4 or 4.5% or 5% yield? Hey, but let's go back to the equity market, because we do have some earnings, retail earnings continuing to cross the Bloomberg. And Nordstrom just out, second quarter net sales of $3.66 billion, a slight beat. $3.61 billion was what the street was expecting. Second quarter total revenue of $3.77 billion. That too is a slight beat. $3.68 billion, and you are seeing the stock up 7.5% in the after hours, which, if it stays at that level, would double the return for the year. As for the outlook, still sees fiscal year adjusted EPS of $1.80 to $2.20. The estimate is $2.01, and still sees fiscal year revenue -4% to -6%. But again, keep in mind that about 70% of the float of this one has been shorted. So if there's a little bit of a beat, you might have some short covering here.
Yeah, I'm just looking through the release to see if there's any message, any mention of shrink, because it's been such a prominent theme for a lot of the retailers. Obviously, Nordstrom, a different kind of retailer than Dick's Sporting Goods or Dollar Tree, but no mention of that. But there is a lot about supply chain optimization and inventory productivity. It all comes down to inventory, doesn't it? This idea that you pick out the right mix and you price it the right way, you move it at the right time, so that you're not left with a whole bunch of things that you need to mark down.
Hey, you wonder if that's a job for AI, guys, because that is a difficult thing to do.
Yeah, exactly. But anticipating consumer demands and what they're interested in, it's what's tough for retailers. I will say the beauty retailers for a long time have really been outperformers, but let's get to Ulta Beauty, because they're off about 9% year to date. Company coming out with a forecast and saying fiscal year EPS $25.10 to $25.60. It had seen $24.70 to $25.40. We are seeing the stock down about 0.6% in the after hours. Net sales, fiscal year net sales, $11.05 billion to $11.15 billion. Had seen $11 billion to $11.1 billion. So the number's really, really close. And Shonali, they're also talking about comp sales, fiscal year comp sales of 4.5% to 5.5%. They had seen 4 to 5%. So I feel like they're kind of close to all of these numbers that are out there.
They are close. They raised their outlook for the full year of 2023, but to the point you're making, not by a whole lot. And for the point there being made about how hard it is to understand where the consumer's headed from here. We know that there's some headwinds. What we don't know is just how hard those headwinds will hit the consumer.
Yeah.
And there seems to be some optimism still in the street. You didn't see it in the market today. You see a little bit of it in the numbers, but again, not enough for really Wall Street to clamp down on hard.
All right, we do have Marvel just crossing really quickly and pulling it up. They're down about 1.3%. So again, another semi company, if you will. Let's get it out. A semiconductor company. So we're seeing some movement, and we'll continue to break them down. Third quarter adjusted gross margin 60.3% to 61.3. Estimate was for 61.7, so maybe a little bit light. So we'll see how that trades. All right, guys, that's a wrap. Earnings continuing, but again, it's on to Jackson Hole and Jay Powell tomorrow morning, which we'll be talking about certainly in our cross platforms tomorrow. That does it for Beyond the Bell.
I'm in with the in crowd. I go where the in crowd goes. I'm in with the in crowd. And I know.
All right, the in crowd. The in crowd, as it gets to our Bloomberg team, man, they're all out in Jackson Hole, Wyoming. For the
Do you feel left
City.
out?
No, I don't.
My 4-year-old says that a lot.
We got our experts
He says,
there.
you know, I need an ice cream. I feel left out.
No, I'm okay. I feel like we have some really good people on the ground there. We talked with our Michael McKee earlier. I mean, he has been trekking there for years to get clues on the U.S. and global economy and outlook for overall monetary policy, but also talk about the theme, structural shifts in the global economy, which is the theme for Jackson Hole this year.
Okay, well, I do have a little bit of FOMO because I love being in the mountains. Who's in the mountains this year? Well, we got Michael McKee out there as well. In addition to that, we got the co-hosts of the Odd Lots podcast, Joe Weisenthal and Tracy Alloway. Tracy is a Bloomberg News executive editor. Joe is digital news executive editor here at Bloomberg. Both are live right now in Jackson Hole. I want to start with you, Tracy. Just give us an idea of the vibe out there right now. What's it like?
Sure. So it's pretty different to last year. I wasn't actually here last year, but you will remember there was a lot of talk from Jerome Powell about having to take some pain in order to bring down inflation. Fast forward 12 months, and we still have the unemployment rate at historic lows. Inflation's come down from something like 9% to 3%. So lots of talk about a soft landing. That said, there is some reason for central bankers here to be uncomfortable, which is namely that monetary policy doesn't seem to be working exactly as planned. When you see a big drop in inflation like that, you should, theoretically, according to the Phillips curve, see a corresponding rise in unemployment. We haven't seen that, and that has to be uncomfortable in some respects for central bankers who base their entire careers on that dynamic.
All right, so get real with us. As you guys walk around, you're talking to people. Like, what are you kind of feeling in terms of themes and trends and what's of interest at this point?
Incredible views, incredible mountain. That's what everyone I talk to is just like.
That's all we care about.
I thought you were going to say NVIDIA, but I'm glad you didn't.
Right. Amazingly, NVIDIA, I have not heard much NVIDIA chatter yet, but I think what Tracy was saying, like, is totally the vibe. And I think, like, even as recently as a few weeks ago, maybe there would have been a little bit more comfort or some, like, coherent story. But it's like, it's great that inflation is coming down. It's great that compared to a year ago, it's far lower. But it would be nice if there were, like, a little bit more comfort or confidence about, like, why what's going on, how you could, like, trace the rate hikes that we've seen over the last year or so to where we are today. And I think, like, it's going to be like a hard story to tell. It's not a clear story that's totally obvious. And I think that's got to make people a little uncomfortable.
I mean, do you think in a year we'll be able to tell that story, or is it always going to be kind of muddled?
Well, I think this is a place for big policy debates, make no mistake. And of course, people this year are talking a lot about R-star, the neutral rate. I remember back in 2016 when that first became a talking point for the Fed. And back then the talk was, oh, maybe R-star is structurally lower than we thought, so we don't have to hike rates. And this year, of course, it's the exact opposite. Maybe it's higher. Maybe we have to hike rates even more to bring down inflation. So you're always going to have these big debates. But that said, I do think it's kind of a weird moment for the Fed. Yes, they can take some credit, maybe, but that's that's going to be a really difficult needle to thread without being able to explain very clearly why inflation has come down.
Is there any feel, though, that the Fed is more at risk of overdoing it in terms of being a little bit more hawkish than dovish? Or is there more of a fear of the Fed backing off too soon, if you will, and being a little bit softer, and then those concerns about inflation rearing its ugly head again?
It's so funny because I think you could actually just tell like both stories totally easily. Like,
oh, interesting.
2 days. I mean, I especially after those PMIs that we got, and they're like, oh, well, maybe it's slowing. And I talked about this earlier. Maybe with some of the news from like Macy's, et cetera. Like, I think someone could tell a recessionary story. I think someone could tell a story that's like, oh, there is this like, risk of overdoing it, and then obviously. We had this morning, Larry Summers coming to talk about, like, remember the double spike in inflation. And if you can't tell the story of, like, what it is about the rate hikes that brought inflation down, how confident can you be that history won't repeat itself and we have another burst of inflation? So I think, like, it feels like a tremendous period of ambiguity. And to Tracy's point, like, I do think that, like, okay, the higher R star, like, what is this neutral rate? And that obviously, 5 years ago, 10 years ago, et cetera, we like fiscal policy was like kind of out of the game, right? That was like the big story of the 2010s, not particularly aggressive fiscal policy. Now people are like, okay, high U.S. budget deficits, aggressive domestic investment. How does that change things? Could this be the driver of a higher neutral interest rate than people might have anticipated? I think this is like where we're going to have the meet. And you asked the question, like in a year ago or in a year from now, will people debating this? I think they're going to be debating this 20 years from now. I think that like what we've seen over the last like 2 or 3 years is going to be one of these moments in economics that's kind of like the Great Depression or kind of like the 1970s, where people are going to be dining out on this and writing papers probably for like decades to come, trying to explain the dynamics that we've seen.
Well, what's interesting, too, and I think about, you guys have some great guests on your Odd Lots podcast, which, by the way, you can check it out at Bloomberg.com or wherever you get your podcasts. So you guys are out there. What would be